It is April 12th. We just had CPI data come out. I'm going to get set up here. We're going to be streaming today stocks, options, futures, and watching some TA, watching some runners. HKD might go crazy. BBBY. Yeah, sub up, like up, comment down. Happy Money sticks around. Follow us on Twitter at Happy Money YT. And on our Discord server, link for those are in the description. Discord server I'm going to pin to the chat. Thank you guys for joining me this morning. A little Yaz to wake us up. Yesterday's stream cut out. I'm using Restream, using it lately, and not sure if I'm gonna keep it. I'm annoying. That's just not as reliable, unfortunately. So we'll see how it goes and try again. But it was late enough that I just didn't keep, or no, I did keep streaming actually. Stopped and then I restarted. But anyways, then I did a whole video and forgot to hit record, I guess. So like I'm not doing this. So no video yesterday, but I did pick up shares of BY yesterday. I guess those that watch the videos aren't necessarily the ones on the stream. You guys probably already know that. Well, adding thumbnail as much as I do like that yacht. CPI somewhat bullish, basically expectations I think, and somewhat bullish. We still have data coming out though. FOMC. Hey, big hugs. Yeah, I know. I don't know why I sold yesterday. I don't know what I was thinking. It held up the levels I wanted to, and I just got scared. I was planning on doing a stop limit, but I don't know. End of the day, I just decided I wanted to cut stuff, so I cut it, and then I was like, all right, I'll just buy it after hours. And then I was too late. I think I logged in too late, and it already closed. And I tried to buy this morning, and I realized none of my brokerages, other than Webull, can I buy at 4 a.m., which is very interesting. So I think I'm gonna fund my Webull account some more. I've slowly just been leeching off of it until eventually I just took it all out, pretty much. But yeah, that is definitely something I want access to, because E-Trade, I think it's not till 7, and I think Fidelity, same thing, and TD I'm not sure when, but I don't think I could do it at 4 because it wasn't going through. So I think they're all 7, which is a huge advantage if you can do it at 4. If you want to buy into something. So HKD thankfully hasn't taken off yet. Still an opportunity for me to get in today. Very, very interesting actually what's going on with it. I'm not too sure. I've not ever seen it move like this, I don't think. This is a new grown-up HKD. I mean, I guess this day it rallied and then kind of was bullish in the pre-market and then just sold off. So we'll see if that happens. If we start to get a sustained rally though, it would be very unusual. You know, all of these moves have been just rip your face off moves. Nothing slow about them. Yeah, so I'm not sure. We keep setting stuff up and we get get a tweet out. I have margin, I can trade futures. Yay. Oh, that's right, actually I did go long on nat gas. So I'm gonna start picking up some nat gas again to go long. Okay. There we go. And now for you Discordian folk that don't hit the bell, that must be notified via an everyone tag. I can say that because you're not in here yet. Okay. And if you're not on our Discord yet, here's a link for that. In our Discord, there we go. There we go, about 7 minutes to open. And that. Hey, Isaac. Big hugs. What's up, guys? Okay. I'm gonna kind of be watching HKD pretty close today, because when this thing starts to go, you know, it goes crazy. What about the ABCD move? Pretty soon for that. Oops. I mean ABCD move. What time frame? Short time frame, or are you talking about a bearish one? I like the bottoming. I like the bottoming here. Big volume. Engulfing on the hourly. We got engulfing on the daily yesterday. Got a little inverted head and shoulders now. Got kind of a weird looking pennant there. So it's looking quite nice. Time zone? East Coast time zone. I have an order to open some cash good puts on SI. They do have earnings though coming up, and then there's all the bank earnings this week, and then I think some even next week, or maybe they're all this week. So it's a little sketchy. I closed my GME puts yesterday. I've been getting whipsawed by it though. I don't know when he opened them, but yeah, when we broke out of this yesterday morning, I closed my puts and actually bought calls. But again, I've been getting whipsawed, so I closed calls here and bought puts, and then we did this, and then I just closed my puts here and got calls. So if you can catch the whipsaw quick enough, you can get back on track. But maybe not do anything, because it might just, I don't know, it might just kind of keep consolidating. IV is low enough, and it broke out to the upside of that channel, so I'm bullish on it. I don't know if it's going to make a big move, though, to warrant needing exposure via naked long calls, basically. Hey, Kenny Man. Yeah, you don't have to like write it opening. Yeah, on a red candle maybe. Doesn't seem like the market's bearish with this data. We do have more stuff coming out, but so far it's definitely not scaring the market. So, with that, yeah, maybe not puts on GME. I don't know. I can't really answer that for you. watching HKD for sure. Yeah, this is kind of unusual. Yep, 9:30 is when the market opens. You can make unwise moves and still make profits. That's awesome. But you have to realize that you are lucky, and it sounds like you do. Thanks for your guys' likes. We got 5 of them. We got about 3 minutes to open. Patience. Listen to yourself. Be decisive. Be decisive. I needed that this morning. I needed to not hesitate. I hesitated. Numbers came out. I don't even look at the numbers. I just look at the chart, and it just had this first little green candle, and I almost triggered 5 of the micros to the longs. I hesitated and then just kind of watched it. This was actually a pretty slow move this morning. But yeah, if I didn't hesitate, just jumped on it right away. So anyways, patience, listen to yourself, be decisive. Kill losers quickly. False breakouts through resistance or support are common. Wait for it to confirm the direction before playing the breakout. Trade the trend. Trade the range. Zoom out before taking the trade. Don't hold through announcements. So the SI cash card put, I plan on just hopefully riding it up a little bit into earnings and then closing it before their earnings. $1 a.m. Pacific time. So you've got different markets opening and closing around the world. So that's maybe where you're seeing some action. Hold the puts, yeah. Yeah, I mean, you might get a nice red candle when you're open. And what are my notes for today? Long, GOEV, GTI, and Fubo. A lot of long. These haven't sold off at all though. One doesn't even trade pre-market. Fubo's up 3% pre-market. Ah, sustained rally. What do you know? First time ever. Okay, 1 minute to open. So on Webull I can buy 4 a.m. my time, yes. Oh, that's what you're seeing, I guess, at 1 a.m. That's when pre-market opens. But on E-Trade, TD Ameritrade, and Fidelity I can't buy until 7 a.m. Okay. Got some levels drawn here in the SPY already. I was up this morning for that. I was on the computer for that BBBY. Confluence up 8%. Hey trader. Cash Rate puts GME next week. Gonna hedge your long puts. Yeah, Ivy still sucks, but SPY's coming down a little bit here. BY opened up 1.5. Like to see some levels hold from yesterday or the day before. 29 cents, 30 cents would be a nice hold. Wasn't that exciting? Post market was pretty exciting, that rally. HKD up 7. Ala up 10. Getting an order ready by HKD. Selling off here a little bit now. Market's still kind of waking up a bit. GFAI? Oh my gosh, GFAI is ripping 15%. Wow, this thing has just stayed bullish. Wasn't exciting yesterday, but look at that thing go. Whew. That's me, Jeff Grants. Yeah, this is a more normal pump from Zip Trader, where basically all of them get in pre-market or post-market, and then it's just pretty much selling off from there. GFAI is about to get halted. Whew. Straight out of the gate. SURX IV, but can't wait forever. I'm gonna hate I can trade one bit. Yeah, that's the thing with HKD. You really need to be able to trade pre-market and after hours. I don't know actually of any other brokerages at this point. I thought other ones did, but yeah, only Webull that I have out of E-Trade, TD, and Fidelity am I able to pick up shares in at 4 a.m. You had someone sign in on the East Coast? Wait, what? Because of where you were? Doesn't make any sense. Morning, Mo. Yeah, the Ivy sucks on GME. Alright, HKD is coming down a bit. Might be one of those just come down days like we just looked at. BBY is down, basically flat. GME with the pump there this morning, 2%. I only have one call on GME. Maybe I'll sell it. I'm actually green on a GME call. Yeah, we broke out of that channel. Now we're looking for kind of some of these horizontal resistant breaks. We're basically hit right there, 23.30. Big one will be that 24. I have no read on GME anymore though. BY down 0.5%. SI 1680 rejected. Right at our line there. Interesting. So can I maybe FRC too for some exposure. Earnings are on the 24th. That's about when SI is. GFAI never got halted, huh? Volcon's up 6%. Low volume today. GFI holding up. Yeah, Neo's coming down. kind of making that head and shoulders. But still bullish MACD. Could just be consolidating here before some more ups. Ooh, looky who's still slowly grinding up. Just creeping. Real slow and healthy. EBTL 3.9. Above that 2210. Let's just have a little rip up to 2.8. Do that. And what's Wish doing with that first split? Oh man. On 14%. Jeez. MCOM can't catch a break either. Well, hopefully BBY gets a move to the upside before the split. Because this very well could be in play once we split. Big sell-off again. GME holding up 2%. Those green circles. HKD now negative. Okay. Well, I guess it's a good thing I was able to buy it. But I do want to fund this Weeble account with some gains because, yeah, it'd be nice just to have like $5 in here to be able to buy in your market if needed. Workhorse is up 5.5. A 2 will be good news. Like Fed news? Dukak Treasury, oh, FOMC. I have no idea. No idea. Market's up 0.5%. Let's have a gap there now. 412 is a line I got from back here that it hit. So definitely not breaking out at this point. My friends on the East Coast signed my account. That doesn't make any sense. Why you couldn't sell it on the West Coast? Shouldn't matter where you are. UG HKD. It's gonna do a double top looking thing here. SPY coming down a bit. I sold my GME calls. Call. Tiny profit. I'll get back in later today, maybe. Buy coming down. GFEI consolidating up there. Perhaps more covered calls on SI. Yes, I think so. Okay, I was looking at OEV. Dang, this thing's up 5%. GTII. It's still closed. Okay. Fubo. A little pullback on Fubo.
Look at those band-aids for you.
Very nice. FPR is down 3.9. Picking up a little bit though. Pretty big bounce off the bottom there. Buy coming down. Giving back half of the gains, over half the gains from this morning now. Oil's still rallying. Wow. HKD down 3 1/3. The yesterday's support. See if it holds any good level here around 8. But bat down 3. Well, there's yesterday's kind of low test. Sort of. It was also kind of the day before's VWAP. Basically that 30 cents seems like a pretty good level we want to hold. There we go, there's a double doji. See if that's showing a reversal level. Or BBBY. GFAI consolidating up there on the VWAP. Same with GME. Up 2% still. Morning tasty. Finger motion up 6. Pretty nice. I'm gonna use my IRA to do some theta farming until I need capital, I guess, for some shares or trading. As well be utilizing the capital for some income. Buy coming down more, almost giving back all the gains from CP Live. Kangaroo cocks. That's what I said, don't let happen. Don't let that happen, Rick. Whatever you do, don't let your gains go back to break even or a loss. That's where the scale out makes a lot of sense. You could have even just made it free, right? They have not announced their earnings yet, BBBY. HKD down 4.5 now. Closer to 8. SPY. Gap's almost filled on here. Not really, actually. From pre-market, though. Yeah, I guess we had that big dump at close. Yeah, stream cut off, and then we had that big dump on SPY at close. It's like, wow. Oh, big red candle on GME. $47 on a can of root beer? They've already pre-announced what their revenue and stuff is. Not to say we won't get volatility, but they've given us an insight on some of it. And that filing, that huge filing that came out from BBBY yesterday. Oh my gosh, dude, 500 something pages. I like looked at even the headlines of it and I couldn't even understand it. Seems like people were pretty bearish on it, but there was so much in there and the market kind of rallied on it, so I'm not sure if this was from that filing or just something else. There is a chance because you have a lot of time. There's a chance because you have a lot of time. Gave yourself time. Got a gap here, probably wants to fill first. 908. But it is kind of forming that head and shoulders now. Bed Bath bouncing there, little bounce. A double doji is showing signs of a reversal. It's 30, 28 or so. I'm looking at SI $1.50. Cash secured puts. It covers earnings, but hopeful to get out before then with a gain. Then on FRC, the premiums aren't as nice on FRC. There's not been any signs of a reversal yet, just flat down here at these levels. Morning Trinity. I'll look at BBI, yeah. Bear flag on SI. What time frame? I see this bull flag. I see this bull flag. Fucking like this time frame? Not really. No, I mean, RSI is increasing on the lows. good. MACD's bullish. We did have a green over the 9 here, but yeah. BBBY. Ah yes, Big Bear. Rip Rip Rally. Holding company. Looks good. Looks good. Yeah, it's in a nice uptrend. Not sure what time frame you're looking at. It's kind of rejecting that 50 moving average, so that's something to look out for, I guess. But if it continues to hold this 9 moving average like it's been holding since March 23rd, you know, all things bullish for it to break that level. GNS. GNS, yes. GME's down, almost red now. Buy's bouncing there. GNS is ripping, 7.5. I was waiting for a gap fill on GNS, come on. Didn't gap fill, didn't give an engulfing candle, but we'll see. It might be a little... I'm gonna wait on this one. Be a little bounce before the lows. Bouncing up to this resistance perhaps back here. High bouncing up there. BBBY down 2.5. Holding yesterday's levels though still. Good sign. Oil's just should probably cut loss on that. Only one mini, but it did fully break out of that range. I didn't want it to break. I'll give it some time. Still below this high. Could be a false break. Yeah, GNS 8.3. $1.25. What am I looking at? I was looking at levels way back there. Yeah, kind of right here. Not a whole lot of levels in this area. That's kind of also why I'm thinking it's going to keep coming down. It's just a stop in no man's land and reverse. Kind of strange. Let's see what's news. SMX security matters slide as it takes on illegal trading. What? GNS did kind of break that level. SMX is going after shorts also. The event was to mark the company's IPO. Wait, not even a month ago, SMX was poised to ring the opening bell. The event was to mark the company's IPO, which happened about a week before its bell ringing. Then SMX made an unexpected announcement. It was going after those who were trading illegally in SMX shares. A move that it asserts hurts its share price. It also noted it's considering offering a special dividend, which it asserted would help expose any market manipulation. Yeah, they're going after it. SMX may even go as far as to generate dual listings to fight back against illegal trading. Wow. Might be the next hype one. SMX might have to follow. GNS 10%. Suppose a scale in would make sense on GNS, but options still aren't very liquid on here. No. Have to just be shares. Yeah, I'm gonna wait on it still. But nice rally here. 11.3%. This line that I have drawn is from way back here. Might hit it on the daily, so that 1.3. If that's it. Morning, Ace. He's down 2.7. Holding levels from yesterday. Good thing. Yeah, SI cashier puts do look nice, absolutely. I have a pretty greedy order out there for one. Hoping it kind of keeps dropping, but I think it might not be. Might change that. Slightly less. You said they will charge for charging and put a cut-off date, meaning increase sales to get the promo. Neo gonna fly, GNS gonna fly. Got an order for more cash card puts, or cover calls in SI also. Got some SMX. Yeah, it's an interesting trade actually. I wanna keep an eye on it. Yeah, I mean this chart's crazy. Was this a SPAC? Yeah. But looks bullish. That's engulfing too. Nice. I am running out of capital. I still want to save quite a bit for BBBY, but for hops, some diversification would be smart. GFAI kept going. Oh my gosh, 48%. Ooh. Totally broke out. Broke out of this, broke out of that. What do you know? It had a reverse split. Ripped up into the reverse split. Huge sell-off after. Something like this might be the case with BBY. Now we're here with is there any kind of actual catalyst? I don't believe. I don't see any news on it. So, settlement days, whatever you want to call it, whatever it is, something goes on around reverse splits that brings volatility. GME puts for profit. That's good. I closed my calls for profit. There's a new high in GFAI. That's crazy. So, let's see, percent move we've got. Not bad, 500%. It's done it pretty much twice. Okay, I picked up some SMX shares also. Chart looks nice. Seems like it's at good level, and I like that they're still kind of under the radar on their naked short fighting, it seems. No idea what they do though, so very speculative. And it's a SPAC, which comes with its own set of problems. Or it was a SPAC. GNS staying above that 130 breakout level. GFAI went freaking crazy. Crazy. You could buy some GNS now. A scale in would make sense. I mean, right now it seems like it's probably at the high for a bit. Probably pull back to VWAP would at least be warranted. If you buy now, I think you just have to be okay with if it drops to 62 cents, which is actually half of where it is right now. So yeah, that'd be 53%. So there's still a gap down here. I'm not buying it today, but it's possible I miss it. But I can't answer that for you because I've got, I'm in a totally different situation than you are. None of us are in the same situation, so yeah. But if you've been waiting for it and you want exposure, I would at least scale in. I wouldn't put everything you want into GS and GNS in one order in one day. I would spread it out over like 5 orders, whether that's 5 days or 5 weeks, or yeah, I would just spread it out, slowly scale into it at these lower prices. Cosm. Oh, Cosm. Oh, Cosm. Up 5%. Not really divergence on the RSI. There's another reverse split. Ripper, rallier. This is higher and it's kind of flat, but that's still the increasing RSI. That's like a hidden divergence. Not very exaggerated, but this could be a nice level for Cosm as well. GNS 13.9. GFAI still 40%. GME is flat. BBBY hold a nice level. It is kind of doing a little intraday bear flag there, but yeah, really looking more for this level, and then that breaks this level maybe. BBBY's moving up here. TOS alert? Oh, sorry. Yeah, that was me. I made an order. What's I doing? Okay, I have an order still for some cash group puts on SI as well as covered calls. More shares of this thing too. It's a sketchy time to be buying them though, really. Before bank earnings, before its earnings. Possible I'll just close everything out before they have their earnings. If I moving again, oh my, look at that consolidation up there. This thing's gonna rip. Whew. If you're into scalping or day trading, this thing probably keep going. I mean, it's broken all these resistance levels. Wow, is this all-time highs? No. This thing's had 2 reverse splits. Look at that. I mean, yeah, this has some room to go. It could hold support above this 23 area. I mean, you're looking at big levels up here. 35. What is this one? Why hasn't anybody been following it? Like, we follow it some. 35 and then 40. The chart, it never like looked bad. It just looked like big candles, which is scary, but it's in a trend up and it's, looking, consolidating and rallying and consolidating. Man, dip buy on this one might be smart. It's on my watch list. You just find it on a really down day. DNS broke through that line we have there. So that's a good sign for upside. I mean, the next like real level on here is not until like 2, but yeah. It's a trap. Kale, patience, patience, patience. I don't even need to look at SMX. I'm just gonna chill on it. Got a position. It's like just chill now. The chart looks nice. I mean, like looks bullish, and then the news, the news of them like talking about even offering it, the second ticker, and yeah, all that stuff. I like it, and I like that it's not been. I've not even heard about it yet. What's our other one doing? Hellbiz. Oh, that's right. Oh, it's MCOM. See, I think the reverse split on some of these might even be one of their. I think that's maybe in the top 5 ways to fight the naked shorts. I think that was on what's his name's plan. I think it was a reverse split, maybe just a split in general. What, George Hamilton, is that his name? Is that 6% gain? Yeah, but what is it doing after a 6% gain? That's why I like it. It's holding support. So yeah, it could drop for sure. It's up 75% from the low. I don't know. I think the chart looks bullish still. This support level it's holding. The volume here, it's just in this last 5 minutes. And then the fundamental behind it of them trying to fight this crime going on. If you zoom out, it's pretty nice looking too. Engulfing, full flag. I wanted birds to do this, and the other SPACs that got the curse, like why didn't they do that? They had to wait for Zip Trader to pump them, and it just doesn't last. Don't care about birds anymore. Big move on GNS there. 18%. Shorts will short the stock, trying to stop the shorts. What? BBBY coming down. Oh, retaliate. It's not a battle, it's not a game. I just moved back up there. Mullen. What do I have to say about Mullen? Well, looks pretty nice. I like this bullish MACD. I like this higher low here that it made. There's not a divergence there or anything, so not a whole lot of bullish signs, but if you like it, at a nice price, probably. It's consolidating here. I mean, it's longer term is definitely in kind of a downtrend, but this could be bottoming for sure. I'd like to see a green candle over this moving averages, but can always happen. GFAI came down a little bit to VWAP. ENS up 20%. Wow. Actually gonna make like some of these levels up here today? Ooh, it's really just $2. Be big. Yeah, fundamentally, I don't think Mullen's gonna make it. I think they'll get BK. but there's some. I know Donro's bullish on them, and I think maybe they have good battery tech or something. So, could be wrong. I bet down 4.4. See what happens at this level. This low from yesterday. GNS is still going. 20%. There's a drop on SI. Am I getting filled on anything? How is that not filling? Getting back to that $1.50. SI. See if it holds. Morning, Gene. Get a little green candle there. Would like to see that level hold for sure. Got 15K share on Mullen. Down 3%. BBY looks just like SI right now. It's really strange. Both at that level. Oh, little flush through. SI holding it. Need to get filled. Now or never. Do it. BBBY. See if it wicks down here, if it actually closes the candle. Still not technically. Oh no, it is. It was a low on that one. 2090 62, 29 61. This is 110, 100,000, 100,000th. Is that right? 100,000, 10,000, 100,000 of a penny lower, of a dollar lower than yesterday. There it goes. There's a little lower. All right. Well, you want to play hardball? I'm game. On 5.8, we've got 29.30. Have a next move down. SI did bounce on that $1.50 pretty nicely. Tesla starting buying smaller companies? Maybe. They're flat today. Yeah, the options on GNS are pretty liquid, so you gotta be very careful. Neo died. BBBY, pretty big flush here, 7%. Okay, 28.80. We do not want to see new lows. Would not be good. Definitely looks like it's going to retest the low though. Yeah, GNS I'll show you. So that's the problem with illiquid options or anything, stocks, whatever. What's your strike and what's your expiration on GNS? Oh, GME's red. Look at that. Oh, never mind. That's GM. GME is also red. See if GME respects this level. This is gonna break out descending line here. Did yesterday. Getting close to it today. If it does, maybe it calls again for a quick flip. That gas coming down. Oh, is oil just rocketing? Oh, why are those contracts down so much? Jeez. That gas is dropping. I did go long on 4 contracts. Probably look to dip by some more on it. Some levels. Got kind of an inverted head and shoulders. On the daily we have bullish MACD, green over the 9. Given I'm trading the futures, and this isn't a future, but you also have this RSI divergence here. So talking myself into buying some more at a low. Buys moving down a little bit. UNS, big red candle. Back below, back to $1.30. GFAI consolidating nice up here. Bed Bath hit 29.11. Buying Mullen or Neo. About buying Tesla. BBLT. Vascular. Very flat with big gap. It's close to the low of yesterday. Yesterday was 28.80. So this is still fine. Still, you know, again, want to be seeing it flat is fine. Could just rip out and rip up for, you know, for some gap fills, but you know, flat is fine. That's good. It's consolidating. Yesterday, you know, it's still there, still all that volume, all that green volume, so still showing buying support at this level. All good things. Now, if you want to dip buy, you could here. Kind of want to. I think it's holding a level, respecting. I'm gonna pick up another 1,000. That was me, that wasn't you. I'm moving up there. GME, look at that. Bounced pretty much right on that trend line we have. HKD's moves away, it's over. Made a double top here. I think it's over. Yeah, you got a big engulfing candle there on the hourly. Suppose I could sell out of these. It's only 5 shares. I'll hold it, little place marker. Kind of ripping up here. Interesting. GNS actually holding above VWAP as well. Cosm, 6%. Osmo Kramer. MCOM down 7%. This is crazy. The bath wicking down here, which is a good sign of support. Holding this kind of level from yesterday. And a VWAP really from yesterday. Did pick up some more. Yesterday we got an engulfing candle too, so yeah, this is all I wanted to see for long entry. Retest down here is definitely understandable. But yeah, proper engulfing candle, good volume. God, we should see a rip. Last time we got engulfing candle was here. Little bounce, then it kind of rejected. So this would be my stop loss basically, which would be breaking these lows. But this time it wasn't. There wasn't that much more volume, like a little bit more volume this day than these days, but this was pretty significant. Highs coming down a little bit. GFAI breaking out again. Oh man, 25.94. It's up 54%. Where were we? Look at this 50 moving average. Perfect bounce on that. What day was this? The 6th. It was last Thursday. $26. Yeah, 35 is like the next spot I have on there, and that's not even a real strong one. It's really not until 40. So is it holding support above these wicks? Kind of, yeah, that's crazy. Ooh. You know, a double bottom. So it looks like it's gonna fill this gap. I still think it's going to that 908. Once it fills that gap, see what happens then. See if we find support. 908, 905. $9 range. GME respecting that trend line. GNS came below 130. SI hanging out the low. Does it still make it fill? I got filled. Alright. See, it's April 1.5. April 1.5 cash grid puts on SI. So looking to exit that before their earnings. This was somewhat expected, I guess. A retest down here. Got close to it yesterday. As long as if we start trading flat here, that's good. It's good ace. Not like you've averaged down here at all, so which still could. Pretty good bounce there on that level on GME. I just don't like the options on GME. Ah, XMX is moving up actually. Very interesting. Whoa, that's had a pretty big move. Maybe I should have gotten more. That's a big range. 20% today? Wow. break even. Okay. Okay, SMX, I see you. It's trades kind of like almost like GNS a little bit, just big moves. Or even birds when it was making big moves. Oh, speaking of GNS, what was your, who said they weren't getting good their calls weren't up? So yeah, look how liquid it is. There's some open interest, some volume. That's the monthlies. If you're on the weeklies, there's hardly any open interest. You've got a huge spread. There's nothing on the bid. So if you look at something like this, like for you to get filled, you probably had to put in a super crazy high price. There was one volume here for 20 cents. There's 5 volume up here for 34 cents. So for you to be able to get filled, you probably put in a high price that you can't sell now for more. 421 calls. What's the strike? So the monthlies. All right, well, so that's good. You did the monthlies at least. Yeah, big spread. There's not liquidity on there. The options on GNS are pretty new too. I mean, they just added them when it had that had that rally or whatever. $2 for the April monthlies. You've got basically the best ones, but yeah, they're 5 cents and 10 cents. I don't know when you bought them. If you didn't get them for 5 cents, then yeah, 10 cents is pretty much all you're gonna get on them. Yeah, but they could still move up, but you probably need them to get closer to in the money. EVTL still up 2.75. Kind of a critical spot here, actually. 10, yes, that's the thing. It helps to look, especially on illiquid ones, to look at just the option pricing itself and see what they've traded at. But something like that. Yeah, I mean, you still have time on them, but I would probably put an order out just to break even and hope you get it. They have earnings coming up. I mean, you could get GNS shares. That's liquid enough. Yeah, BY's holding good. Bouncing on that level from yesterday. Could pick up more shares. Be patient. Slow it down. I picked up a good amount yesterday. I holding above that $1.50. Highs coming down here pretty big. Oh, GNS bouncing again above that $1.30 level. GFAI up 60%. Another breakout? Oh.
The ego on you.
The ego on you. Thanks, John Parker. Thank you, Ace. Appreciate it, man.
The ego on you.
Holy spy dump there. Thanks, Ace. Ace just gifted you guys 2 memberships. Papa Ace, everyone. That spy flush. Thank you, sir. I didn't mean to gift Moon. I didn't mean to gift Moon. Did you gift Moon, Pirate? Wait, what do you mean? You got oh, you did get Moon. Ah, dang. Ah, dang it, Moon. Oh, big flush on that gas. Glad I got contracts. Holy smokes. Spy flushing down here too. So I guess hopefully find support here, and firm's kind of an inverted head and shoulders on that gas. I forgot where to dip. Buy this thing. BY, sorry. You're saying got filled and broke even. Nice, well done. 50 cents, 4 cents a contract. Yeah, let's look at the BBY contracts. Guess the monthlies are next week. Yeah, those things have just continued to get cheaper and cheaper. 3 cents, 4 cents. You can get it for 3 cents. You know, you could probably sell it for 4 or 5 cents sometime today or tomorrow. So, but probably gonna be hard to get it for 3 cents. Why in the world is that IV so high? What happened? The monthly IV is insane. It's 423%. Is that because of earnings? You go the next week out. Yeah, I'm looking at the next week out. 373%. Crazy. Spy flushing through there. Filling that gap with some velocity. GME holding up. GFAI. GNS holding up. The big flush on Spy there. We have if there were news. Oh, Barkin speaking, that's what it is. Barkin, CPI report today was pretty much as expected. I put particular focus on core inflation, still more to do there. I definitely see demand cooling. We're certainly past peak inflation, still a ways to go. We're certainly past peak inflation, yeah. That's because Barkin speaking, I think. Spy just filled that gap. HKD kind of actually holding the level from yesterday for now. Pushing us to 7. Woo. Or just right now out of here, just maybe. I mean 7. Yeah. Have they're like gas numbers today. Big flush on it. Crude oil inventories at 10:30. Oil's coming down with the market. Crude oil imports, gasoline inventories, heating oil stockpiles. Oh, nothing on gas. Crude oil inventories in the Strategic Petroleum Reserve fall to lowest last week since November 1983. It embarrassed me, HKD, I hate you. Yeah, now it's flushing below that level. Not a good sign. That was me. Oh, I just bought some more BBY. It's holding that level nice. I like it. Okay. I appreciate your patience. Jenny. Vulcan with some volume today. Yeah, BBY's retesting that level and looks like it's holding it, so that's good. Let's see, SPY moving up here a little bit. That gas is bouncing. I tried to get actually another contract, but ran a margin, so. Neo doesn't suck today. It's down 4.5 or so, 4.3. So almost filled this gap. 9.08. Big gap fill. And then, yeah, we'll see. I mean, it is building head and shoulders, though, so not a great sign. Maybe calls on that dip would have been good on GME. I don't know. Just I don't like the market maker on GME. They really just get you. Yeah, BY still hanging out there. BBBY consolidating at 60% up. That is neat. Same with GNS actually. Using that 130 as support, so that's super bullish. Man. It's tough not to want to scale in some today. With how high that VWAP is too, that's crazy. Awesome, 6.5. Thank you guys for your likes, I appreciate it. We're at 17. 10:50, got about 10 minutes to 11. CP data today, we've got FOMC at 2, should be fun. There's 17 of them. Appreciate it, guys. GME back to VWAP. BBBY consolidating down here. Got one more level it could hit at 2880. If it gets below that, just want to see a wick. I don't want it to have any substantial candles closing below that. My head hurts. I like that. Shopify is ripping. 5% move on shop is pretty big. Oh, never mind. Wait, AMC. Or shop. Why is AMC up? Yeah, 59 billion. C's up 5%. Dude, this chart is so difficult to read. Hard to make sense of it. Exactly. GME below VWAPs. Buy, moving down a bit. AMC's going to the movies, exactly. Going to the movies. BBBY. It's getting close to breaking that level. Excuse me. Kind of excited about this SMX play, actually. Get some more. What do they even do? Dublin. Private company's business white label technology company. Serving a variety of different industries: lumber, rubber, palm oil. Wait, this data is recorded digitally on our blockchain? On blockchain, and a Lincoln molecular chemical marker is embedded in the product itself and can be read with a reader. What are these guys doing? Its technology gives materials in all states of matter, solid, liquid, and gas, the ability to maintain a virtual memory of their origination, processing, and supply chain journey, including the ability to authenticate provenance, as well as to track recycling loop counts and the percentage of authenticated and or recycled materials contained. What? Weird. Oh, it's Miami based. Why does it say Dublin? Company's out of Dublin. Oh, BurgerFi? In March of 2020. Buy Flushing there. It just makes it a description. Fill it. Thank you.
Services, and that's not going away anytime soon. If you consider the
I'm going to read about this Lionheart
the
in just a minute.
expectations actually rose.
Very interesting
based
company,
upon
actually.
what we were looking at yesterday and today in terms of the hike that's expected now in May. It's over 70%. It looks like perhaps there's a pause in June, and I think what we've actually seen is sort of this pre-pause rally in the S&P 500 inching closer to the target that I mentioned a couple of weeks ago, about 4170. So I think right now this is a really tricky situation. I think seasonally, April is generally a good month as we rolled off of the Q1 numbers, and of course with institutions buying up shares near the end of the quarter to make it look like the returns on investment were higher than not. But at the same time, we have to think about the pause support that the markets.
Yeah, there's new low on BBY.
Reserve. But at the end of the day, we're inching towards neutrality in the interest rates. That's a good sign, but you have to consider the fact that interest rates.
Bargain
again,
says, I need
right
to see
around
inflation
where
down at
core
target rate
inflation is.
over successive
So
months.
unless core inflation starts to
Maybe that's
decline,
causes
we
SPY to
won't
move
see
down.
interest rates decline. And I think you have to keep that in mind for those who are ultra bullish right now in this market. So I think we're in a trading range. We've been in a trading range in the last 7 months, and now we're near the top of that trading range. And so we could see some near-term weakness after, again, perhaps we hit that 4170 area on the S&P.
Okay. 4170, not too far away from it. S&P's right now, 4132. Airline tomorrow with Delta, and then banks behind it. What are you excited for in earnings season, Scott?
I'm just excited to get earnings season going. I hope that, we actually see some positive. Yeah, exactly. Hopefully we'll get to see some positive earnings. We may not be in a recession, but unfortunately there may be some recession around earnings, et cetera. And, let's get those out. Let's find out what they are. Let's see how and what parts of the economy, what industries, what groups are performing. We think we know, but you can see, for example, your airlines. We need to get these things out so that we can start sifting through so investors can really kind of hit an alt-delete, almost a reset on some of our thinking as all of these things are coming together. So I'm really excited. It seems like earnings season's been a long time coming. I'm excited to get into earnings season to kind of see how things shake out. I think we could have some great stuff, and I think that there may be a few surprises both to the up and the downside as things start rolling through.
Wow, American down 9% now. Jeez, airlines are stinking up the joint this morning. Rough. Okay, appreciate the thoughts, guys. George Till, Scott Durfee. Thank you for joining Morning Trade Live. I will see you at 2 p.m. Who knows where the market's going to be at? We ripped earlier, we faded it down, and things are getting a little bit worse here as the big cap tech starts to break to the downside.
Yeah, new lows there on GME, or sorry, BBY. SI still holding above that level. GFAI came down, wicked down to VWAP. GNS still holding above 30. SMX back to neutral. Ooh, Jeff Brands. I wonder if this thing was going to start to go again. We were watching this morning with that big rally out. Now it's up 4.5%. I scared you? Ah! 29 cents on GME or BY. SPY. Low of the day. Bouncing right here on this line. The SPY bounce on this level from yesterday. 409.09 was the bottom. Oh, on GME. New low, $14. GME's holding above that trend line.
morning. We are 90 minutes into the trading day. Welcome to Trading 360. I'm Nicole Pedalides, live on the floor of the New York Stock Exchange. Taking a look at the markets, only the Dow was in the green after a lighter than expected CPI print. So we're watching inflation and what the Fed may or may not do. We'll have plenty of discussion there. Right now, the Dow is up 24 points at 33,709, and that is a fractional move in percentage terms. The S&P 500 is down 1 point at 4107, and the Nasdaq down 51 points at 12,912. The Russell down 1/3 of 1% at 1784. As we check in on the futures products right now, we're watching oil and gold higher. The bets have moved down that the Fed will raise rates in May after this CPI print. Here's how the futures are reacting. Right now, Bitcoin 30,235, down 85. The dollar 101.32, down 0.5%. Gold 20.23 a troy ounce, up 1/4 and oil up 1.5% at 82.75 the barrel, and that certainly is notable. For a look at some of the top moving stocks today, I'm joined by Jenny Horn, markets correspondent here on the TD Ameritrade Network, taking a look at the airlines, American Airlines in particular, after pre-announcing its quarterly results. Tell us all about it.
Right, Nicole, we're seeing a pretty negative reaction in American Airlines to what was actually better than expected preliminary first quarter results in terms of what the company
Yeah,
guided,
Damien, that's what these lines are.
Come below the street's
Yesterday's
forecast, and so I think that's part of the
and
reason we're
some
seeing
intraday levels.
this selling today. Although we are seeing some broader
next
selling
level down
in
is
several of the
28.80.
other major airlines
Like to see
like
hold down.
United as well as Delta, but they did issue these preliminary
Jenny.
forecasts, and per this regulatory filing, saying that in the first quarter, the company threw about 65 billion total available seat miles. That was 9.2% higher than the first quarter of 2022 and just above the midpoint of their prior guidance, which was up 8 to 10%. Their first quarter total revenue per available seat mile is now expected to be up approximately 25% versus last year, also at the midpoint of their prior guidance, which was calling for 24 to 27%. The company expects their first quarter CASM-ex to be approximately 1.5% lower year over year. This is compared to previous guidance of down to 3 to flat. So I would say that the figure is, better than at least what we were expecting, but all of these figures were pretty much at the midpoint of what they had been calling for. So they do expect to now report adjusted operating margin of approximately 3.5%, also at the midpoint of their prior guidance. So these figures were exactly what American had guided for, which is part of the reason I was initially surprised to see shares lower.
Whoa,
but
GNS
the airlines have been really taking a beating over the last month
Good
and a
volume there
half,
too.
as American at one point earlier this year was a bright spot.
About to be a new
now
high on
down,
it.
Only up, excuse me,
$1.39 is the high.
Down about 40% from their 52-week high, and down still now 23% over the last 12
Don't leave
months.
big hugs.
Yeah, thank you for that. Good luck there. And then what about Microsoft?
FAI bouncing on that.
Bullish note.
SPY flushing.
A bullish note on Microsoft, and Microsoft
SPY's
is faring
red now.
slightly better, I'll say, than the airlines, as it's still up about 18.5% for the year. Now, Wedbush's Dan Ives today did say he's raising his
big
price
flush on
target
GME
Microsoft
too.
to $315
Down through that level.
a share, up from
Back into the
$290.
range.
That implies about 11% upside from where we closed
Couldn't
yesterday.
hang with this
and
much
Ives
pressure
said
on the SPY.
Microsoft is using this macro environment to their advantage
recap.
in gaining
This is
cloud
the
market
way.
share while becoming the leader in the AI arms race with ChatGPT. He noted that while the macro is not, to quote, roses and champagne, Wedbush does believe Microsoft will emerge out of this period in a stronger position strategically.
Excuse me.
This further adds to the sum of parts valuation on Microsoft. So while Microsoft is not necessarily seeing the same outperformance as a name like NVIDIA,
Bed
because
Bath, little
NVIDIA
green
is seen
candle,
as
did
more
hit
of the
29
pure
cents.
play when addressing this graphics processing units of these AI components. Microsoft has definitely been a beneficiary of this
I still
AI
haven't seen
movement and is seen now as more of the leader, at least when stacking it up compared to, say, an Alphabet.
Concise
now,
consensus
both of these companies will
from
report their
the
third
filing on
quarter
yesterday
results or their
from
quarterly
BBBY.
updates in about 2 weeks. So Microsoft reports on
It's just been
April 25th.
random
So that will be a
speculation and
very, very big week for earnings. We
not
also hear
knowing.
from other major tech names like Amazon.
All right. Thank you for all of that, Jenny Horn. I really appreciate it. Thank you. Markets correspondent here on the TD Ameritrade Network. Let's get some insights, the news shaping the markets. For that, we welcome in Andrew Brenner.
Yep,
head of
29 is that level
International
from
Fixed
yesterday
Income
too, right here.
Securities at Nat Alliance Securities. Glad you are with us. I read through your note. And you had three scenarios.
You look at it too much.
I mean, this looks more like one or two. The three, it's not
your
too
position
high.
sizing
We
is
know
too
that.
big for you to
Right.
emotionally control
I
yourself.
felt like it was between 1 and 2. Tell me, what do you think?
It absolutely
you want it
is
to bounce
between 1 and 2.
above
the
this level, 'cause right now
0.1
it's an engulfing
increase,
candle in daily.
People are looking for 0.2.
So,
I looked at it. It was
that's not
actually the number was 0.053, so it was very close to being just a 0. And people looked at this as a better than expected number, but not a hugely better number.
You look for an exit when
and
it bounces back to VWAP.
2 years get, I don't know, 10, 12 basis points lower in yield. At 5 years, move about 7 or 8 basis points. But as I look at it, as I came in here, I can see it's not being sustained.
The experts
We're about back
honestly
to
don't even
flat.
know.
But I do think these are good numbers.
People
I
don't
think
know.
what this does, it still
Like
keeps
that
the Fed
crazy
May
complex
3rd interest
debt
rate rise
restructuring
in play.
with the warrants,
even
the
though we
preferred
still
shares,
do
and all of that
believe
was like
that will happen. But nonetheless, we'll wait and see what PPI
now these
is
filings
tomorrow
are just
and what retail sales is on
just
Friday. Economy is slowing. The Fed has done
SPY,
more than
big
enough.
flush
In fact,
there.
probably too much. And people that say, well, the core of 5.6 is still too high. Yes, it is. But
Wait
the
till
Fed
next
looks at the
month, any
PCE
chance for the
deflator.
$1
That's in the low
on
fours.
Neil?
So you know what? We're not that far away. And
I
we
moved
really
down
think the
that
trend
next level
is in
down a quarter
favor
percent.
of lower inflation.
And what's interesting, so it's unclear what the Fed will do in May, if anything.
Yeah, I was looking at
That being
XXII.
said, Fed funds
I cut out of it when it
futures
broke that
went from
level.
above 70% to now 60% likelihood.
So
of
this
a
kind of
Fed
trend
rate
line.
hike. Did
I cut
come
out there,
down. Does that
and I
surprise
don't
you?
see a bottom yet on
No,
it.
not at all. In fact, I would have thought it would have
Put some
gone to
levels down here.
50-50.
You've got the 55
Just a
cents.
slightly better number, and I think we could have even gone better than that. But no, the Fed is still being stubborn. I mean, you've had 4 speeches in the last 24 hours.
Yeah.
One was dovish. 2 were neutral, and it looks like Barkin, who was speaking just as I walked in, was a little bit hawkish. So I still think that it could go either way.
Yeah, SPY's flushing on Barkin.
Any way you look at it, I believe there'll be a rally in May because that will be viewed as the last Fed rate hike.
Yeah. Barkin
Rally
really
in May, not
acknowledged
selling
the
May
things
go
that
away,
are
huh?
going on, that things are going in the right direction. He talked about
Yeah,
the
it's not
credit
looking
crunch.
bullish
He
on
talked
XXII.
about other things that could affect inflation. But what he did not say was that they are not going to do a rate hike. So he really was sort of dodging.
Yeah, it might. I
questions
mean,
as
it's
to
not
whether
at a level
they
I'd
will
be
or won't. But
looking at buying it as
to
a
your
good short
point
still
and being hawkish, I mean, you
XXII.
noted that inflation is still too high. How about something like China having inflation numbers coming down for the second month in a row? I mean, it certainly
ENS
gives you
kinda
this
double
global
topping
feeling
here.
like things are going in the right direction.
Absolutely. The supply chain
Rico.
problems have all gone back to previous 2019 levels. That's not an issue. I believe that there's a laggard demand within
BBBY
wages. I believe housing is going in the right direction.
red
The
volume
problem
there.
is the Fed's looking at numbers
Another
that are very
reverse
slow
split
to
with
move.
some action
And
before
if
it.
you look at forward-looking numbers, I think it shows a much lower inflation. The one thing that really still bothers me is the
I'll probably
banking
close
issue.
my BBBY
Everyone is
before they
saying that
actually
it's
split.
over, but I mean,
Not
Nicole,
over.
look at 6-month bills. I mean, 502 this morning. I mean, are you going
That
to leave
doesn't
money
look
in
too
a
bad.
bank
Let's
at
see.
2%? You're going to go into that, especially given that you live
Yeah.
in New York, which has got one of the highest taxes.
Too bad I can't get any.
So I really think the
green candles up
banking
here, but
issue
yeah.
is going to continue.
pretty good, a lot of
Home
volume.
loan bank, the amount that they have outstanding has only gone from about 1.49 trillion to 1.47. Banks are losing deposits left and right. I think 562 billion is expected to be reported by the large banks.
Double doji
so I
down
really
there
see
below
this
that
continuing
level.
to be a big problem. And if you look at yesterday, one
Still
of the
holding
Fed
above the lows.
reports, it said that customers are having trouble getting loans for the worst since about 10
SI
or 11
broke for that
years.
$1.50.
So I don't think this is adding to
Bugger.
continued problems within the banks. The
Got a
banks
gap to
do
fill
not
down
know
here at
how quickly
$1.40.
they're going to lose deposits. They're going to be very conservative. That's going to slow down the economy more. The Fed is really the catalyst of this, because rates have gone too high. Too high, too fast.
Yeah, and there's the concern is that banks will hoard reserves. I mean, we're already seeing them build reserves. To your point about less lending, right? I mean, because if they're going to lose the money that's being deposited, because now they have to put aside
I was way
reserves,
too excited to go
they're
long
not
on
going
that
to be
gas this
lending as
morning.
easily, and
It
that's
was in
one
a
of the
clear,
concerns. Another thing
little short-term
was the
downtrend,
reverse
and I just
repo
went
facility
heavy
that
on
has been on the
contracts.
rise, and that's another area. And this whole picture, it's my understanding, could push the Fed to stop quantitative tightening sooner than expected, or at least, I don't know, sooner.
There's
That
been a
pull on
lot
the
written
SPY
about that,
maybe
and of
pulled down
course the
SI.
Fed did a lot of quantitative easing in the last 3 weeks
Yeah.
to bail out SVB and Signature and what have you,
Right.
and a lot of discount window borrowings. That has subsided a bit, but it still remains high. Will the Fed end quantitative tightening? There was a report that I read coming in this morning that said that they plan on continuing to tighten for another 2 years. So I think it's mixed as to what that does. But I think that in reality, rates are just too high. You know, you want to look at, right now you're at 4 3/4, 5%.
Who knew that the move would be bigger from
really be even
Harkin
to
than
where the PCE
CPY?
deflator is. So in the fact the Fed's going to continue thinking about continuing to raise rates, I just think is the wrong strategy at this time.
Right, wrong strategy. So you don't think they should raise rates? It's interesting because Austin Goolsbee was out, Chicago Fed president, and
the move
saying
down
we
is
should
maybe it's about
gather
equal what
data,
we did
be
up.
careful, I'm
Pre-market.
paraphrasing, and be careful about raising rates too aggressively. I mean, some would say they already did so, and how much work the headwinds are actually doing for them. You talked about a lot of the Fed speak that we're still getting, right?
Yes.
Buys
As far as
continue to
Goolsbee,
flush.
he's absolutely right. What he said was we need to pause now and think about what we should do going forward.
Yeah.
And I think he's right on that. I'm not calling for the Fed to ease tomorrow, but I do think at the end of the year they'll find it necessary to ease because the economy will be weaker, inflation will be lower. But Goolsbee's right, and even Harker said that it takes, he used the term 18 months for all the Fed hikes to get through the marketplace. I think things move much more quickly now. But still, I mean, you only started raising rates in March, and it's now 13 months, and the brunt of your raises were in May, June, July, and whatever. So it's going to take time. I think the Fed needs to slow down
Gina's got a
now.
breakout candle there.
Not do it in May, right?
That is correct.
Above that double top.
That is correct.
Just
What
wick
are
though.
they?
We'll see.
PPI and retail sales are the last 2 key numbers. We do get PCE deflator right before the Fed, maybe the day of. So I'd have to take a look at the calendar.
I don't know if that'll have an effect on wheat or nat gas.
Alliance Securities. Thank you for being here. Appreciate it. Love having you on the show, especially on big days like this one. Plenty more to come on Trading 360. Our 360 Spotlight will dive into travel trends in the airlines and cruise lines. See if demand still remains high.
Weak.
Disruptor, Shopify. George Sills will break down.
Showing health problems. Now GME is starting to build candles below that trend, so not looking good. It's just getting pulled around the SPY though. Forward end. First green candle on SPY. We'll see if it actually closes that. Been 20 minutes of red candles on these 5 minutes. BBBY showing some support, just a touch. Little bounce on SPY. Dude, MCOM down 950 today. Ugh. Parking up a disaster. Yeah, GNS holding above there now. It's good. Got $2 really is the next level on it. Very weak bouncer though. This new Wanro guy. Well, inverted head or RSI divergence on that gas on the 5 minute. The futures, maybe it's bottoming. Me trying to bounce back up to that trend line. The bath, little green candle. Oh boy. Who are you, Onro? Who are you? Who are you? Good sign of support there for Bed Bath. Hit 29 cents even. Is that this one? Yeah, same level exactly as right here. 5 bouncing 2. More shares of Bed Bath. Let us see. Actually crazy. I think I'm almost back to the same size I was before. Which I was not planning to have that big of a position, but just got so much cheaper that I don't need as much capital. But I've got a lot of ground to make up on it. So the more I average down, the more I add here, it does rally, the easier it'll be to get out. Break even or profitable. Of course, so he is a fellow Discordian. If AI, maybe a little head and shoulders here on the 5 minute, I don't know. Yeah, might be. Here's a little bear flag. It is all above VWAP though. Price action still looks pretty solid. But it might be a little down session coming for it. BNS on the other hand, breaking out and now finding that breakout level for support. However, there is an RSI divergence there on the 5 minute. Might be a little blow off the top on GNS here. Crypto out here to make you rich. Ben on BBBY versus split pop. I'm hopeful for a pop. Before it is kind of what I'm banking on. But we actually just voted. For some reason I was thinking the vote was May 9th or whatever. That's like the end of the voting period. Because I got my vote. I voted this morning. So yeah, I guess how does that work? Are they able to end the voting period before the 8th or the 9th? I wasn't even thinking it's a window. I was thinking for some reason that's the day you vote. But yeah, the votes have been sent out, so how many bots can say that? So if they get enough votes, a majority before the end of the voting period, are they able to go through with it and reverse split right then? Or do they have to wait until the 8th or whatever? Yeah, BY looks good here. Gosh, I want more, but I'm scared. Give me cheating around that level. SPY moving up. SI bouncing a little bit. 90% of the time, 30% of the time, every time. Is there a shark man?
The ETF, which actually is down year to date. It almost seems hard to believe because we feel like energy has run up so much in the last couple of years, really, but has had some volatility this year, no doubt. Your thoughts?
Yeah, I'm going to take another bearish shot, right? Surprise, surprise, a bearish shot out of me in terms of energy. Look, energy is right on the forefront of the inflation discussion. And when you're looking at a rising interest rate environment, the argument is fairly simple. It's designed to slow the economy. If it's designed to slow the economy, energy, okay, is not going to be a beneficiary, if you will, of
Five more uses a joint for 100%.
Slowdown, of course, in the economy. In leading up into this, you're right. In previous years, I mean, energy was smoking hot last year. We've seen a considerable pullback, even given the fact that OPEC its barrel cut, of course, last week. Surprise, big move up in oil above the $80 level. Nevertheless, I think it's actually the opportunity right then and there to short into the XLE, specifically.
I kind of agree.
June 16th expiration. I'm going to go a little further out in time, give myself, again, good head start on this one. I'm going to be
However, on nat gas, I'm not as bearish since it's basically at the lows.
Selling the 78 puts,
almost
so it's a $5 wide spread. It's done for right around $1.10.
I suppose it could always get lower.
Yeah, understood. Okay. So this bearish trade here, Ben, surprise, surprise, as Don says. Your thoughts?
Well, I'm a little bit suspect only because of the longer-term trend of the upside, but when we look at the bigger picture chart, I'll show you how there is opportunity in terms of what Don's looking for within the range that we've been trading in. But let's begin first and foremost how almost exact opposite in terms of what we were talking about with JP Morgan. You've got, in this instance, on the hourly candles, a trend environment to the downside that's being invalidated. We started off, if you take a look in the beginning, end of January, around 93.80 down to 74.36, and along the way down, I went ahead and drew some areas of consolidation that form, because again, this helps us determine trend, value, the migration thereof, or lack thereof. So at 88, we were sideways. We broke out, went sideways around 86. High conviction move lower. Sideways around 78. So again, as we're trading around 78, we're referencing 86, right? The bears are thinking that we'll get another breakout to the downside ultimately, and a new area of value will form at a lower level. But again, similar to JP Morgan, the exact opposite happened. We actually broke to the upside and formed a new area of value at this higher level, right at the 86 level, which is significant, again, invalidating the working assumption that we're moving lower. If we continue higher, this is a key area here right now. So that's where Don's kind of talking about crude failing around 80, 81, ultimately after OPEC's recent announcement. But let's move away from this chart, because I want to show you what I was talking about in terms of range-bound trade and the longer-term trend, as you can see, very well defined to the upside here. Look at this. We're going all the way back to the spring of 2020, when the XLE was down around 20, all the way up to 95. Very well-defined trend, bottom left to top right, and easily identifiable areas of consolidation that have formed to help us see, again, value moving at higher and higher levels. 36, 52, 81, you can see it. And now notice how we're a bit more overlapping, rotational. This is a really well-defined range that we've been forming around this 85, 83 to 86 area. You've got an upper extreme, 95, a lower extreme, 65 to keep an eye on. So this is what I'm talking about in terms of the longer-term trend to the upside, not necessarily conducive to John's bearish scenario, but within this range, there's a lot of opportunity to take both sides. There's just a chop, random type price activity, not a lot of conviction. But again, we're waiting for longer term. You're thinking we'll see a breakout to the upside here eventually, but there is some opportunity within this range, again, 65 to 95. Man.
Okay. So he's talking about the bullish trend and the opportunities that we've seen, Don. Your final thoughts here?
Yeah, Ben, you got to remove yourself from the chart. I mean, like, there's this huge disconnect right now between, Main Street and Wall Street. The bottom line is ultimately, what is the Fed trying to do? They're trying to slow everything down. I mean, it's one of the reasons, I just keep taking pot shots at these bearish trades, and effectively they work out as long as we give ourselves enough duration. And every rally, including the one that we're presently seeing, is eventually going to be faded. And I think energy is actually a wonderful place to do that. If you're going to have a global slowdown, well, then you're going to ultimately have energy come off in the midst of that.
Listen, Ben, are you allowed to remove yourself from the chart?
I am.
I don't know. He's doing the charts. I mean, that's what he's doing, Don, but he does have a brain. He's allowed to just put in his own thoughts, too. Go ahead, Ben.
I was going to say, every time I remove myself from the charts, I start trading the I wannas, the it looks like, the I thinks, and that's never worked for me. So I'm going to stick with the technicals.
Okay, let's leave it that one there for now, and then we turn our attention
I know, that is the battle. I battle that too.
ETF, right? The futures of Bitcoin doesn't actually hold Bitcoin in it, but what we have seen is Bitcoin run up above 30,000, back to these high levels that we saw last June. What are you thinking here?
Yeah, Ben's actually going to like this this next one. So in BITO, I'm actually going to take a bullish shot. And I'm going to take a bullish shot.
Breaking the lows. Dang, it would have been a nice short this morning. What the heck?
Wild short squeeze. So if you think about Bitcoin itself, right? Bitcoin itself, it's not a product that's easily, if you will, shortable. However, the Chicago Mercantile Exchange,
the I wannas, I think it looks like,
meaning that there is this immense short position. In BITO, there's an immense short position.
Holy
it's actually,
smokes.
in most firms, a hard to borrow underlying at this point, which is
I'd like
actually,
to see it bounce around this level on that gas.
The underlying up.
Looking at it here, no, I'm now seeing this resistance.
Cover.
It just
I think
totally
it's
got rejected by,
opportunistic.
but
I think it's a short squeeze right
bounce
now.
around here will give
We're
us
gonna
nice
hop on
inverted head and
board.
shoulders.
This again is a June 16th
go along with
expiration.
our
It's going to take some time
bullish
to play out.
MACD or green over the 9.
We're going to go out and we're going to buy the 18
and our
calls
RSI
again.
divergence
June
still.
16, buy the 18 calls, sell the 21 calls against. It's just a $3 wide spread. It's done for about an 89-cent debit. You know, basically riding the momentum. Ben, you're going to love that one. I'm actually on trend, if you will.
Yeah, well, let's see, because you're right. The momentum has been running hot.
Bitcoin.
Shorts are getting squeezed, and there have been a few catalysts for Bitcoin, too. Ben?
Buy, bouncing right back up here.
I also look at the longer-term trend, which we'll get into in a second here, and that's a little bit
it's funny because, I look back on trades, and that was one of my mistakes with BBBY. I didn't look at the chart enough. Got too hyped on the non-bankruptcy news and
trend up,
grabbed it when I knew it was bad. Had a huge RSI divergence.
Very narrow range, but a new area of value around this $18
got in somewhere
level.
in that green
Let's take a
candle all the way
look. First
down.
and foremost, you're going all the way back to the bottom left
Thankfully,
corner
I
around
cut
the $12
soon enough when I broke
level.
a
These
level,
areas
but
of consolidation again
didn't have
help
patience
us
reading the chart.
determine. It's kind of like a footprint along the path that the market's taking. I like to say 12,
the
13,
chart with
50,
fundamentals, but
15, 50,
if that's usually
17,
the case, then you're
25,
usually
and again,
very
I
late to
mentioned
trade.
18. So no rejection of that again counter trend move that we've been seeing on a more intraday or intermediate time frame relative to the bigger picture. Let me step into the bigger picture here so you can see exactly what I'm looking at. You can see the longer term trend. So the bullish narrative is somewhat counter trend, but as I identify some key areas here, I'm going to show you that we're right at a key level. So first and foremost, I can see what Don's talking about because we're going to just establish the areas that were formed at lower levels, right? We did this with the last couple stocks that were invalidating
RSI on the 5
trends.
minute
Notice
much?
here how we took out 13.
Oh,
that was a key area that the bears didn't want to see it above. So we're now starting to kind of bottom out of the bear lease and work our way back to other areas that were established on the way down. The thing I'm concerned about in terms of this bearish narrative for you, Don, is just what happens if this becomes kind of a longer area of consolidation that formed around the 15 level. That would sort of feed into this staircase pattern to the downside still playing out. But to Don's point, we're seeing migration of value off the lower extreme around 948. So value is moving higher at this point, taking out key levels. Definitely well-defined trend on the upside on the hourly time frame. This is going to be a big area to watch, though, and I think Don's right. If this is a short squeeze, we'll see a big pop above this level. Don could benefit from that, but if we roll over here right now, then that longer-term bears show that they're really still in charge. Definitely a key level to watch.
Bullish on GME, just wick below back into that range, and now it's back above it.
He wasn't as big on the momentum and everything as we thought he might be, right?
I know. I'm disappointed. It's because he felt a little pain and a little anguish from the previous trade on there. There's no question. The XLE, it's a little bit of a little hangover situation there.
Final thoughts, Don, on what we're seeing. I mean, we're still waiting on PPI tomorrow. We'll have Citi, JP Morgan, and Wells Fargo on Friday. Delta tomorrow. So we have some earnings and economic prints coming out. Any thoughts on where we stand on the S&P near term and maybe a little bit further out?
They're small, but the flat
Basically, we've had 7 days inside of the S&Ps
I did not know
in
that.
the exact same range. Markets are simply not moving. Look, they got a little bit tired. One thing
SI
that traders have to
back up
recognize
to that
right now,
$1.50.
we're still in a fairly extreme volatility situation. Now, I know the VIX dropped under 20. It doesn't make a difference right now. Markets, just like traders, got tired. They're going to rest. Expect some heavy volatility coming in right now as we actually explode. Yeah, as we explode out of this range, this is going to be some heavy vol coming up here in the next few days.
Yeah, just give me a second on tech. Any thoughts on tech stocks?
Tech stocks is what I'm looking for a cyclical rotation out of. So tech has been incredibly hot early on in the year. The sell side activity actually is going to be persistent in the S&Ps. It's going to be actually led to the downside by tech.
All right. Don Kaufman of TheoTrade, Ben Lichtenstein looking at the charts. Always great. Thank you both very, very much. Coming up, we're going to spotlight travel trends, and we'll dive into what to expect from the airlines and cruise lines as we head right into that hot travel season for the summer. Trading 360. We'll be right back.
Goldman Sachs says it no longer expects Fed to hike rates in June. Wow. Exports of crude oil saw the steepest drop on record in latest week. Senator Tuberville just disclosed over $500,000 of trading. He sits on the Senate Committee for Agriculture, Nutrition, and Forestry. He disclosed 3 separate CME corn futures trading for over $45K. He literally influences corn futures via legislation. Year-ahead business inflation expectations continue to fall, down to 2.8% in the latest Atlanta Fed survey. That's the lowest we've seen since July 2021. The government says Parliament's rejection of state aid package for UBS takeover of Credit Suisse won't derail deal. McDonald's CEO made $20 million. The salary? Women don't apply to $100,000 roles as often as men, but they're hired for them more. Ed Barkin says we're certainly past peak inflation. A lot of his comments don't seem very hawkish. Kind of back and forth. He says he sees demand cooling. We're past peak inflation though. Represent the disruption of potential of individual traders? Still looking at Neo, huh? Yep. Gap filled. Breaking through that support. Looking for 885 or so for the next support. Kind of just this level down here. And then probably by end of day you'll get some kind of bounce to VWAP, I would imagine. Yes, Neo is building a head and shoulders. You can take a position anytime you want for short on head and shoulders. I think the most conservative is after it breaks the shoulder, the neckline, which would be here. Shoulder, shoulder, head. Then here's kind of the neckline. SI didn't want to break back above $1.50. That's crazy. That was all in one day. That move from $3 to $7 was all in one day. I even thought about that. And that huge gap down based on their news. Basically, they should have done a normal share offering here. I mean, of course, long before here when they were 30, but I don't know. I don't know what's going on in the back end, so there's no way I can make a good guess on how to do it. But it just seems stupid to not offer shares in your high and then to do buybacks. You can't afford it. And when it's high. Oh, Kochi said some things we already know. Yeah. Hopefully they just give it all back. There's still more data that needs to come out. It's not like it was bullish news, it was at expectations, which are close to expectations. There's still bad news in there. DNS holding up. SMX up 2%. Might be about to go crazy. Probably get some more. Seems like the wise thing to do. Overreactions. Both ways? Yeah, maybe. The market's kind of waiting still for PPI and FOMC and get a clear direction.
Market share in Q1. They are being affected by the fact that they don't have interline agreements with other airlines. So passengers are starting to realize that if Southwest does have a major problem like they had in the holidays, there's no other way that they can get home. So people are starting to make other decisions. Southwest is losing a little bit of share.
If we look at the rest of the
major airlines, it does seem like United is doing a markedly better job than the rest of the group. In March, they saw their web traffic growth 10%, while the rest of the industry saw declines. So they are picking up some market share. They have been for several months now. So it does seem like they didn't have as much of a problem in the holidays. They do seem to be running a very good network right now, and that seems to be resonating maybe with the consumers.
And how do you think the consumers will behave? I mean, it's interesting how the demand may be slipping a little bit for airlines, not necessarily for the cruise lines. You know, it's sort of, I'm trying to gauge consumer behavior going forward. I mean, what say you?
Yeah, one of the things that stands out to me in the data that I just looked at before I came on here is that passengers seem to be spending a lot of time on international airline websites. So while the big majors in the U.S., United, Delta, and American, are not seeing as much traffic growth in March, British Airways, Singapore Air, Emirates, they're all seeing American consumers spend more time on their website. So international demand does remain strong, and it does seem that American passengers are interested in traveling around the world this year. Maybe not as much domestically.
Their airfare?
Yeah, that's a very interesting
always
concept.
look
We
at,
talk about investing abroad.
orbits, or
tell me
just
a little
Google
bit more about what
velocity.
they're looking for when it comes abroad. I mean, even when you get the Barron's each week, it comes with cruise
Never look at their own
pamphlets
websites.
to go around abroad.
Yeah, obviously the effects of COVID are that we were all stuck at home for years. International
What about
markets
Neo? Yeah,
opened
it's
up
still
to
melting
last.
down.
So there does
Down
seem to
5.5.
still be similar to
Got a little
cruises,
double
pent-up
doji
demand
there.
for
That's
international
nice.
travel.
Nice
So
reversal,
people are
maybe.
looking to get
Green
to
candle.
those
MACD's
destinations that
flipping
they
bullish.
couldn't go to,
Might be
out
starting to get
to maybe
your
United Arab
bottoming.
Emirates, out to Singapore, out to Japan, out
$9 is
to
a
Europe again.
psychological level.
So the American consumer does want to go, excuse me, but they're not going domestically.
All right, let's leave it there. I was also looking at your notes where you said United had gained, but you also said Delta gained market share at the expense of American and Southwest. All right, we'll continue this conversation in the future. Jim Corridor, SimilarWeb, thank you very much. Great to see you. Thanks, Jim. Coming up next, the disruptors, and we'll be taking a look at Shopify. Now, this stock got an upgrade to an outperform at JMP Securities. George Sillis has all the details. He'll break down that report.
One of these levels is 30-cent level to hold. We have a nice little inverted head and shoulders. Not to say you can't just double bottom here, but AGRX. Just reverse split. Fine, moving up here. GNS and GFAI holding up really well. GME pretty strong out of that range again. See these contracts GME if they've moved from that bottom. Probably a little bit. Here's maybe what I would be getting is a 23 strike for the 5th of May. So this is probably before earnings. I haven't really moved up yet. But yeah, this morning could have sold these for 140. They're at 102 now. So I think some up. Selling that morning volatility. And this is why I hate him. Put the order in, they keep just upping the bid. Given the stock is moving up right now, but Yo, GME gapping on the 5-minute. Jeez, man, seriously, that low volume. Back to super low volume, huh? SPY moving up a bit here. wish for a push? A post-split push? I jumped out of this when it announced that reverse split. I didn't even know that was coming. Done a little more research. Line moving up. GNS still holding up there. Same with GFAI. Oh, SMX started to go, huh? Holy smokes, 11.5% on SMX. Let's go. Look at that volume, 14%. Holy Gapperoni, this thing. Broke out, new high on SMX. I like this one. Might even get more on this breakout. Good volume there too. You just got filled for that? I literally just canceled that one. Trying to get GME calls. Oh, for next week. I'm looking for a couple weeks. Yeah, GME's starting to move now too. Yeah, SMX, let's see. Add to this thing. Okay, I just added some more on it. So next level is like 2.7, then 4.7, and then a gap fill all the way up to here, 620. We look at bib retracements. Yeah, that one level is kind of consistent with that gap. Yeah, it's kind of a big break here for it, really. We can do it. I don't like leaving the fib levels up. They get mess. GME moving up here. Yeah, didn't get my calls. Or maybe not much more now. Yeah, not a whole lot more. Because we're out of the morning volatility. I like that Jamie's holding above that level still. Excuse me, GFAI. Yeah, holding nice above VWAP. Same with GNS. SMX up 15% now. MU getting a bounce. Need this thing to come back down. Might even add to my puts on here. Alright, my GME call got filled. Figured with that red candle and SPY. This was nice about getting a lot of time on options. You can always add an average into it if you still like the select the play if it goes against you initially. If you don't have time, you just can't do that. Potential in SMX, I don't know. They're fighting naked shorts, which is a great catalyst for some squeezy stuff. Chart looks nice. It was a D-SPAC, which carries all sorts of manipulation, it seems. It's actually, oh yeah, we're gonna look at this company. It's crazy. Anyways, chart looks nice. Got a lot of volume here. Got a engulfing candle, I think. Yeah, engulfing candle. Big volume, kind of a bull flag. But yeah, now it's breaking out of that level. Got really nothing until that 2.7. We look at the volume. The MU put got filled. Yeah, look at the volume. Excuse me. Oh, there's volume down here. Almost volume down here, so it's really like a vacuum of volume up to that 2.7, and even from there it's just not as much. So a lot of purchases maybe down here. I guess we can look on that other chart too. On Webull, I don't know where that is on desktop. I know where it is on mobile. Showing like average cost of best or whatever. Average purchase price. I got a GME. Get the best timing, but price really didn't change much from here to here. It's maybe 10 cents. May 5, 23 call. Actually got two of them this time.
So you need to focus on the areas where the real growth is going to be coming.
Yeah. Michael, let's delve into
BBBY
this a little
still
bit
hanging
more.
out below there.
I went through your notes on T-Mobile, Comcast,
No, it
and,
doesn't look like it's gonna tank.
well.
Looks like that reversal is happening.
You know,
We were saying on that double doji would be a sign of one, and sure enough, looks like it is. MACD's flip bullish.
Tell me
Like
your
you're
themes
starting to make
when
your way
you
back
look
up
at
to
all these
VWAP.
names, and then break down the ones you like and why.
Yeah, when we look at the large cap telecom companies that we cover, you know, growth isn't going to be a standout for any of the firms
little
that
red
we
candle
follow.
there.
This is a very mature business.
Like to see it hold above
It's
this
been
breakout.
the industry has been very successful in terms of driving wireless penetration and broadband penetration at pretty good pricing. And so you've set up a situation where you have, you know, just like I say, a very mature business.
BBY get little green candle.
The big theme in the wireless industry among the three major players, AT&T, Verizon, and T-Mobile, is one of parity. These three companies are all fairly similarly sized today through a variety of
like
capital
SMX.
investments that have been made over the last handful of years. They all have
Like it.
similar
Definitely
spectrum
talk about it
positions,
on today's
similar
video.
network quality, at least in terms of how consumers experience that. And so we think that parity sets up the industry for an interesting
up a bit.
competitive dynamic going forward, where carriers really don't have a lot to gain from trying to be very aggressive and going after market share. You mentioned Dish Network, and that's the one kind of outlier. That's a company that could benefit from some of the private networking things that Jeff just discussed. That Dish is a new entrant into the wireless business. They have a lot of spectrum that hasn't hasn't been put to use, and they don't have a huge smartphone customer base that's just far larger than the revenue opportunity in the private wireless business. The big issue with Dish here is that they're facing a funding issue. The debt markets have become very expensive, have become unfavorable to Dish, where their borrowing costs are extremely high, and they're burning cash as they build out their wireless network infrastructure. So there's a big question regarding how Dish is going to fund this ambition to really generate that revenue growth off of a world where maybe private networking or other 5G use cases become a profitable place for them to grow. How they get from where they are today to that point where they can have a network capable of delivering those services is still a big open question. And so that's a potential area that we're paying a lot of attention to in terms of how that might upset the apple cart in terms of
it's like Nick has maybe found a floor generally right here on that.
Understood. Okay,
level
so with
from
the
before,
major players, they're very mature
$2.09.
names like Verizon, AT&T, and T-Mobile
Hoping.
too. Just quickly, Michael,
Bed
do you have
Bath
any
&
buy
Beyond,
ratings
this is
on any of the
nice.
names in this space very fast?
Very nice.
Yeah, we really like Verizon here on the wireless side. It's trading at a pretty substantial discount to our fair value estimate, about 30%. And then on the cable side, we really like Comcast as well. We love its balance sheet, strong competitive position in the cable industry.
Great. Jeff, final thoughts?
You know, the whole idea, and I agree with
Bed Bath
everything that was just said.
back
Growth
up
is
to
moving
VWAP,
away from
2973.
traditional telephony services, telecommunication services, but it's continuing to grow in new areas. So we just need to stay alert. We need to pull the camera back, take a long-term historical perspective on the changes that are going on in the industry. The industry is going to continue to grow.
Back to VWAP.
Wireless has been a growth engine for the past few decades.
Side just hanging out below.
It's now slowing because we seem to be everybody.
Oh, look at that. SMX consolidating up here. That's a good sign.
Device. But there are new technologies and opportunities that are coming on to the wireless networks, and that's going to drive more growth. Going forward, we hear all about all these new technologies, and it makes us excited and it makes us scared. We don't really know the direction that this industry is going to be heading in and if we're going to be safe. And there's all these different things that are going on.
Let's see if
But
I need
one thing is
more
for sure,
shares
the
of BBBY.
telecommunications industry will continue to grow going forward.
Michael Hodel of Morningstar, Jeff Kagan, wireless and telecom industry analyst. Thank you both very much. That's going to do it for us here on Trading 360. I'm Nicole Petalides. I will see you at 2 p.m. Eastern Time for the watch list. Join me then.
I do need
Fast
more,
Markets
dang it.
next.
Yeah, a little move up on BBBY, just signifying its support from yesterday, which is very good. It's really crazy how cheap 1,000 shares are. Single person with no children needs $84,000 after taxes to support a comfortable lifestyle in San Francisco. The past 55 years, every time the Fed has fought high inflation, CPI over 5%, with rate hikes, a recession soon followed. Will this time be different? I just bought shares. I didn't get filled on any. I did have an order for some options, but one of you jerks took all the liquidity out of that chain. No, it's weird. Literally, right after I canceled my order, you said you got filled. I think we're looking at the same contract for the same price too. I agree. We're already in a recession. China planning to impose no-fly zone north of Taiwan on April 16th through April 18th. There's a move up more on BBY and the SPY.
Three of those sitting around the flat line here. The S&P 500 barely in the green, up about 0.2%. Dow Jones Industrial Average up 82 points on the session, or 0.25%. NASDAQ just ticked in the red there. And the Russell 2000 small cap relatively flat in today's session. To help me break down this action in the markets here, let's bring in my co-host, and that's Kevin Hinks. Kevin,
I like this one. It did just break out with volume.
Stocks rose on that on the data point
that
came
out
of
CPI, 70%,
which isn't surprising,
sure.
right? But we saw a drawdown. But the thing that sticks out to me is this is when crude oil, this is a March report, it's lagging data.
It has 1,000% to go.
Crude oil was in the mid-60s to
I don't think it's getting to its highs necessarily, but
a good portion of March.
There's a good amount of room still to go even before we get the next support resistance, which is another 60% up.
Well, what I said when I was on with Oliver Rennick right after the number came out, slightly after, I said, the market likes this number a lot more than I do.
Wow, there's big range here on SPY today.
The lion's share of the decreases in inflation were energy. Yeah. Energy was down 3.5%. It's energy commodities down 4.6%. Energy services down 2.3%.
GFAI, look at that consolidation that high.
Energy was
up 55%, just solid
and 20
consolidation.
days ago, crude oil was trading $70. Now it's trading 82.
Yeah.
So something's got to give there. Now,
Max moving
if you go through the rest of it, a little bit of good news. New cars up 0.4%. Used cars and trucks down 0.9%. That's a little improvement. But then food unchanged.
Yeah.
With food at home down, but food away up. 0.6%. Shelter up 0.6%. Apparel up 0.3%. Transportation services up 1.4%. This number was much more mixed than that headline showed. And Tom, last thing I said to Oliver was, there's storm clouds on the horizon because this energy is up $12.
We're at 4-month highs. Crude oil, $83 a barrel at this point. So a lot of those decreases that we saw in energy, wait till April's report.
Are melting away.
Yeah, that's a concern. You did mention food prices down at home. Egg prices down over 10%.
Really?
Well, they couldn't go up forever.
Yeah.
What you want, a T-bone steak or a scrambled egg?
Super core CPI. That's a core services ex rent, a primary residence and owner's equivalent rent was 0.4%, down from 0.5%. So that was like, and the Fed said they're watching that, the super core, and I think that was a positive sign for investors out there. We are seeing a little bit of pullback there in CPI. But then earlier this morning also, we're talking travel today, but American Airlines came out with preliminary quarterly results here as far as TRASM numbers and EPS numbers. Let's bring in Caroline Wood, Senior Markets Correspondent. Caroline, this is the second quarter in a row American Airlines jumps the gun ahead of Delta in their earnings, right?
BBY almost a VWAP here.
That's right, Tom. And you were talking about those higher prices in CPI. Airfare is up 4% last month, so those egg prices might be coming down, but airfares continue to tick higher, which obviously benefits some of these airlines, although those higher energy prices recently have been weighing. And yes, American Airlines under pressure today, jumping the gun with that, the updated profit outlook, actually boosting its profit outlook ahead of earnings
SMX
next
looks like
week,
it's about to break out again.
It's disappointing because it fell short of expectations, and we're seeing shares down about 9% because of that. So let's go through it. Expects to post adjusted earnings per share for Q1 of between 1 cent and 5 cents. That's better than its previous outlook of basically break even. Compares with the loss of $2.32 a year ago, so a big improvement there. But Wall Street was expecting around 5 cents per share. So unless it comes in at the high end of that range, it would be in line. Otherwise, it will be a disappointment and clearly taking a toll on shares today. Meanwhile, total revenue per available seat mile is expected to climb 25.5% compared to the same quarter last year. That's in line with the 24 to 27% guidance. That's basically at the midpoint in terms of capacity. It flew 65 billion
when you get out. What's your
available
stop
seat miles
loss?
in
You
Q1,
cut losses if it goes down.
9.2% higher than Q1 of 2022, and just above the midpoint of its 8 to 10% guidance range. Also forecast operating margins basically in line with the midpoint. Those are expected to come in about 3.5%. The guidance was for 2.5 to 4.5%. So most metrics should come in line when American reports earnings next week. Profits, though, could disappoint, so investors clearly gearing up for that with shares off about 9% today. As you said, though, we'll hear from Delta tomorrow. That's really the airline kicking off airline earnings season tomorrow. Shares of Delta off about 2% right now, but we're seeing United off 5.5%, JetBlue off 2%, Alaska off 2%. So definitely some downbeat sentiment heading into these earnings, and this boosted profit outlook from American, but disappointing, certainly weighing on shares as well.
Caroline, there's an old saying, make hay while the sun is shining, right? How in the world does American Airlines not make money in the greatest travel environment ever? Is this just another used car market where they couldn't seem to make money in your dream economy? How is it possible that a company is in the travel business? When's the last time you've been on a plane that every seat wasn't full? How is it possible that they're not making money here, Caroline?
I'm at the point where I can't even afford to have one of those seats on some of these flights because they've gotten so expensive. But one would say EPS of 1 cent to 5 cents is actually making money, especially compared to its previous outlook of break even. But I understand what you're saying. I think that, obviously they were under pressure for so long, making up for some of that. And obviously, these higher energy prices also going to continue to weigh on shares as they have all month. I think that the big key thing is going to be what they have to say about demand heading into the busy summer travel months. TSA said over the Easter weekend that passenger volume is essentially at or above 2019 levels, pre-pandemic levels. So let's see what some of these airlines say. I will say that Bank of America did say that the big focus is not just going to be on demand heading into summer, but also specifically Q2 revenue guidance, warning that their airline data showed bookings slowed since mid-March. So it's basically spurring some caution on Q2 revenue and actually causing them to cut their estimates ahead of these results. That could be why we're seeing shares under pressure as well. They did specifically note that domestic
what did we just hear about? I have a feeling
is decreasing more than international, so that should stand to benefit some of the bigger carriers.
Doing good today.
It's definitely not clear skies, completely, given a lot of issues at hand, not just higher oil prices, but also the banking turmoil and the concerns about the strength of the consumer. So we'll have to see with Delta tomorrow, and then we'll be talking about American next week, but American isn't really leaving much to surprises, basically giving us most of the key metrics here, aside from that Q2 revenue guidance.
Yeah, I think the theme from consumers moving into the travel season is going to be road trip.
But here's the question, Tom. American's always been a poor performer in terms of earnings per share. They have probably the poorest balance sheet.
Yeah.
But do you correlate that over to Delta, which is historically a well-run airline?
Yeah, better margins across the board. Thanks to Caroline Woods for breaking that down on the American Airlines pre-announcement there, again, for the second quarter in a row. Lashing out at Delta ahead of their earnings. Let's bring in Nick Theodorakos. He is Financial Risk Management Director at TD Ameritrade. Nick, I wanted to get your take here on the inflation data. About half an hour ago, all four of the major indices were red. We're back green now for all four of those. So it's just maybe a little bit of calm after some encouraging data as far as inflation goes.
sort of been the story of the last couple of days, right? There's we saw some pretty decent,
Good Bath,
1+%
bounce
moves,
back up just below VWAP.
Everything's kind of just mellowed
GME
out. It feels
above
like
VWAP
a little,
with the
maybe it's because it's
SPY.
80 degrees here in Chicago, but it feels like we're a little bit in the summer trading doldrums already. It's pretty quiet.
Might be about to start rallying.
I was encouraged, on the number this morning to see it, received positively, short-term reaction by markets. But I agree with what you said, Kev. I don't think it's quite as it's not quite as rosy maybe as the headline looks. There is some breaking there. Barkin already said that we're not seeing that inflation really cool down yet, like we think it needs to.
I mean, cost basis.
So I think you're seeing
it
it
can
flat
go up.
enough.
You got to be able to
It wasn't a
stomach some downs, though.
number. Obviously, markets are telling us that, but I don't think it allows the Fed to continue to tell the story they want to tell. I'm more interested now that this is out in the FOMC minutes this morning, this afternoon.
That'll be big too.
Than I am in any of the other data. I know we get PPI tomorrow and all the jobless stuff, but I think the Fed minutes today are going to be really instrumental in telling us, with these numbers in line, what are they going to be doing? Right? How much higher do they think they need to go?
Back down to 150.
Given the fact they're getting what analysts are expecting. Right? The analysis that's out there, if we're in line, we're in line. And the Fed can say we don't think it's enough, but the bottom line is this number today is basically what we were hoping to get. It wasn't some massive spike. So what's the Fed going to tell us now? What's going to change? And I'm hoping to get some inference from that from the minutes this afternoon.
The Fed minutes should be interesting because it was right in the middle of the SVB crisis, right? And so it'd be interesting to see what the rhetoric was, because Jerome Powell said in his press conference that they discussed pausing.
Yeah, but they didn't expand on it. I think some of the questions during his last presser were about the banking turmoil there, and he kind of pushed it aside and he said, maybe it was just a one-off, maybe some irresponsibility as far as risk goes. But Kev, when you look at some of the commentary from Barkin, Fed's Barkin,
I heard it.
They try to press him on, are you going to stop hiking? And he's like, no. You go
Safe company? I don't know about the company.
Exactly. So he was pretty stern, going against what Goolsbee, the new guy on the Fed, said yesterday. He was a little bit more dovish. But Barkin's in the camp, I think,
I'll read about
that
it,
the market's in now, because expectations for a quarter basis point hike by the CME FedWatch tool still elevated.
Yeah, he said we have to see the numbers come down.
And
he mentioned this specifically. He goes, shelter up 0.6.
Yeah.
Times 12 is over 7%.
Yeah.
That's right. Those numbers have to not just stop going up, they need to come down. And so our job, he goes, we need to see it to 2, not on the path to 2, because the minute we stop, it'll stop.
And he said the trend has to be near 2%, not just like one number or 1 month. So that a trend makes them more comfortable there. But Nick, if you look at the prices of crude oil, we talked about that already, hitting 4-month highs today. Dollars down, which is a little bit supportive of equities at this point. But it just seems like the market's looking for some good news, and then you have these outside asset classes that are moving, a little bit maybe against the grain of what you would expect or want in an equity rally, and maybe oil's the reason today that we're not rallying.
Yeah, I think that's probably true, and it's a little bit of a game of whack-a-mole, right? The mallet's not wide enough to hit them all at once, and that's sort of what we're seeing here in terms of inflation, right? It's like, travel's really strong, and now oil's up. What's going to happen to gas prices? We're $4.50 a gallon here in Illinois. What's going to happen to gas prices with the summer mix? And it's going to be up above $5 probably again here, right? Especially with oil, ticking up again today.
It is in the city here already, Nick.
It is in the city. Us suburbanites are a little lower, but look at the difference. You get oil back up. You can see food prices coming down a little bit. So it's not. I think that's why you're seeing such cautious. I don't even want to say optimism, such cautiousness from the Fed, because pockets are easing, but other pockets are ramping back up, and this is just an awfully tough thing to get under control. Even if they get rents under control, for example, energy's up, food's down a little bit. So it's really easy to turn the story from, hey, this is positive headline to, well, there's really persistent pockets that we just can't get under control by raising rates. So
sticky.
I think to me, it just it reiterates the Fed's point that we will be higher for longer. They may not go up from here, but we have to sit higher for longer to cool it down.
Yeah.
That's how it feels.
Kev, and if you looked at some of Barkin's comments, he also did mention, said demand is cooling. So maybe that was part of the turnaround in equities this morning, was the fact that, hey, CPI is going the right direction, right? It's softening a little bit. They want to see that.
Yeah, I closed my puts yesterday and got calls.
That demand issue comes in, the
closed,
strength of the
closed
economy
those this morning, bought
moving
more calls
forward,
on the dip.
Is that going to be in jeopardy
So,
because inflation is still
I
high?
think it could go down there, but
he said demand is cooling.
Broke
but
out
it's
of the
not
range of the upside.
necessarily
I'm much more bullish on it.
Yet. The prices have to come down. Demand is just one part of inflation. The prices have to come down with the demand. He goes, that's what we're not seeing.
Demand
cut your gains.
Every company out there.
Realize those gains.
We're talking travel today, but
some of them scale out.
They're going to be incented to keep prices higher for longer if demand is cooling. Right? The people, you're not going to slash prices if demand's coming down. That's not your first move because you want to keep your profit margins up. Right. So that there's a lag effect there too, which is, we're not going to see those prices drop if apparel companies and all these things.
This isn't a right.
They're going to want to eke every dollar out of that while they can.
Right. And you haven't heard of promotions from
this was maybe the SPAC. I don't know what the description is. This isn't the same description as this website.
No Kmart Blue Light specials. I love that. That's a great reference. All right, guys, let's take a quick break
Unless
here.
If this website's just totally
we're
different.
We're going to continue the theme today, and that's travel. We're going to take a look at Booking.com, which has rallied about 27% so far this year and hit 52-week highs earlier this month. Fast Market's coming right back.
Yeah, maybe that's the wrong website. Yeah, that description's right. Digitizing physical objects on the blockchain to enable the circular and closed loop economy. Kind of crazy. From in the dark to informed intelligence. SMX is a key technological tool in enabling brands, companies to use a transparent, measurable, tangible technology that can more accurately identify the origins and material compositions of raw materials within the finished consumer product and its packaging, enabling it to re-enter the economy for recycling reuse. Like using the blockchain to tag commodities? Possesses a breakthrough technology that tracks, traces, and authenticates and verifies both physically and digitally every stage along the value chain, the raw materials to the manufacturing. Kind of an interesting company. SPY moving down there. Looks like GFAI is coming down to VWAP. GNS trying to break out again. Wow. Wow. Sold 1/3 around here a while back. Yeah, I remember. Yeah, I would wait. I mean, now it looks like it's on kind of even inverted head and shoulders being built here. I'd wait for these resistances. Kind of hit it today at like 23.30, then 23, 2071, kind of up here. Really, that 24 is the next major spot you could look to sell if it doesn't break it. If it breaks that, then yeah, we're upside for 27, 25, then 27. Unbelievable company. Oh, you'll sell at 75, huh? BBBY coming down a little bit. Nice bounce in that 29 cents though. Home values rose by 0.9% in March from the previous month. The largest number since June 2022. Really? I guess coming into summer too though. French President Macron says we are the status quo on Taiwan issue. Position hasn't changed. We have to avoid escalation in Indo-Pacific region. Fed's Daly says bank stresses have stabilized. After a pause over the last 3 months, the U.S. Strategic Petroleum Reserve is being tapped again. What? I thought they were buying it back. They're tapping it again? Down 1.6 million barrels over the last week to the lowest level since 1983. What the heck? This is supposed to be strictly for wartime use. They're in a war though. Domestic. Leaked US military documents indicate that the UK has deployed as many as 50 special forces to Ukraine. GF AI testing VWAP. UNES also a little bit. We're good at sabotage.
But right, Caroline said earlier, can't afford some of these flights anymore, right? And that's pervasive. But you're seeing it in hotels as well. So I think there is going to be a potential demand issue here if we hit a recession because prices are just so high. How they adapt to that, I think, is interesting. So it's kind of a tale of two cities, in my opinion, right? There's a lot of upside, technology, aggregation. Like there's a lot they can do still to bring costs down, but there is a concern about overall demand, and that certainly drives the business.
All right, I'll take the other side real quick. Let's say that, for most cases, the affluent haven't been affected as much by inflation. Mm-hmm. If we do get a slowdown and these prices come down, you think that'll keep affluent people from traveling? No. They'll do it more.
That's fair. That's fair.
Yeah, because the demand will still be there in that segment. And, that's a big thing as far as capacity. These airlines haven't increased capacity. That's why they can keep prices elevated at this point. And it's hard for them to get workers. Their pay.
Pilots.
Yeah, pilots. Pay is going up exponentially. But, Nick, you've got an example trade for us here. We're going to use Kevin's risk profile on this one, but Booking.com, they don't report earnings for a few weeks here. How do you want to look at this one?
Yes, the price is in flux here, guys. So the first thing I would mention, there's a really low float. There's not very many shares out there. So you look, it's a huge price stock. It's
37 million is incredibly low.
Priced like an index, right? Yeah, 37 million in float. So, it's got a huge price on it because of that, largely. That also yields a few other problems, right? You've got pretty wide bid-ask spreads. We were talking, Tom, at the break. It's kind of like when we were standing on the floor. You could drive a truck through those markets, right? So, the prices here are a little bit subject, and then it does lead to lower liquidity in the options as well. You just don't see as much activity out there. So, a lot of caveats on this one out of the gate, but I think the price on the risk profile we're showing is about 550.
But I think we're going to use Kevin's risk profile. Yeah, so it's trading over $6 right now. So go ahead and walk us through it.
When I looked at this earlier, it was over $7, right? So you can really work a price here,
which tells you something that there's a lot of play in the market.
Price discovery might be necessary.
Exactly. So Iron Condor strategy going out to the April 28th weeklies. A little bit of a skewed play, kind of two ways. I've widened out the call side, so it's a 20-point call spread. It's the 2680, 2700 call spread. Paired up with the 2450, 2460 put spread.
Bearish.
So, narrower on the put side, right, half the width. So $10 spread on the downside, $20 spread on the upside. Both of them are a little bit inside of the expected move based on the current vol. So it's about a $120 move on the 16-day trade. They're right around $100. Give or take, the stock chops around quite a bit. But that upside, the reason I widened that out, yes, it's bearish,
bouncing on that level, the breakout level.
But this is above their recent high, right? This is above, I think, their all-time high, right? So when you look at the yearly chart, 2677, I think, is the print there. So this gives you a lot more room. They would have to break through their recent highs a week prior to earnings for this trade to be at max loss. So that's why I took a little more risk to the upside and skewed it that way because, could it happen? Oh, yeah, of course it could happen. But, given some negative press out there and probably, a potential underperformance of
SI popped up above $1.50.
Thought it was a risk worth taking to the upside. So we priced it out at $5.50. It traded up to $7.50 today mid market. So risk profile is a little bit subjective, but you're taking in, let's call it
$6. $6
right
now. Yeah.
So you've got $10 minus the 6 on the downside, right? So you've got $4 in risk to the downside, and then you have the $20 wide spread to the upside. So you have $14.
BBTL's been on such a subdued
right. Yeah. So let's break this down. April 28th weekly.
I like that double
option
topping
series selling a 2680 2700 call vertical and pairing that with selling a 2460 2450 put vertical, collecting roughly $6. That's what you can make on this $600 per spread. As Nick mentioned, the risk to the downside below 2450 is going to be $400 per spread, $1,400 above the 2700 level, but your break evens, Kev, on this one about a 2686 to the upside and 2454 to the downside. You've got a nice wide range, less risk on the downside.
Yeah, this is a iron condor in
kind of has a north side divergence
sense
from this
of iron
high.
condor, but Nick has done the $20 wide and the $10 wide, and so
strikes
are wide to begin with.
Highs right around it.
There's no small moves here, so everything is big, but the risk is about the same. Nick took in enough money. Remember, we say about 30 cents per dollar. There it is. It's $20 and it's $6. So that holds, which means the quality of this trade is good. Does that mean you're going to be profitable? No, it depends on the move that you get, but less risk on the downside, a little more on the upside, collecting about $23 a day in theta, short about 2 deltas.
Yeah, and Nick, when you look at this, earnings are on May 4th, right?
So popping up
this
here.
Type of strategy, when you look at it where you don't want movement, right? You want it to consolidate between those break evens. That's kind of maybe one of the ways you can look at this trade is that, hey, I'm avoiding earnings, but I'm still taking that neutral stance.
Yeah, and we'll see what happens this earnings cycle. It's kicking off this week, but pretty interesting. There's been a lot of downgrades ahead of last earnings cycle, so there's a little more risk to the upside. To Kev's point, you look at it from a technical perspective on the charts, it would have to break through some resistance to get there. So if you're taking more risk, if you're skewing trades in general, you want to have a reason for that. Is it right or wrong? We have no idea, right? The market's going to do what the market does. Of course, it could rip higher, but lining up a few points while you're making, why you're taking a risk, I think is the important thing to know, and then understanding what that actual total dollar value risk is. Are you going to let this go to max loss, $20 on the upside, or are you going to manage that if it does rip higher?
Right.
But to your point, the vol is priced correctly, right? It's about 10 vol points lower in this week than it is the earnings week. So the price is the price. There's no arbitrage. We're not gaming anything, but it's lower for a reason. And you're expecting, if you put this on, that there's not going to be this sort of outsized move ahead of the earnings announcement.
Yeah, and you mentioned that recent 52-week high is 2677 to the upside, so that avoids that. Maybe there's some resistance there if you look at this on a technical basis. All right, good look at that short, unbalanced iron condor that they're in Booking.com. And thanks to Nick Theodorakos, Financial Risk Management Director at TD Ameritrade, for joining us. But coming up after the break, Kevin and I are going to be joined by Andy Swan from Likefolio for a discussion on Delta Airlines, which is up a modest 2% so far this year, ahead of their
Fed's Daly says we'll look in CPI inflation to see if core services ex-housing are coming down. There's a lot of uncertainty about how long it takes for rate hikes to impact the economy. There's a lot more in the pipeline of monetary policy tightening. Not really having the push that Barker did this morning. BBBY moving up here a little bit. Hold your shares, kept your options. Yeah, I saw that. See if Neo can break VWAP or if it just finds resistance there. SMX holding pretty well still. It does have... Oh, it's just an intraday gap. Well, it's pretty small. 20 million. 20 million float. Now I just need a mention from Zip Trader. Should add him in my next video talking about SMX. If he sees those. He did have that, the next video after I tagged him, did have that whole thing mentioning how he doesn't trade these small caps and had this whole disclaimer, which I've never seen him say. I've never even heard him ever talk about his positioning or if he even trades. Like, I don't think I've ever heard him say if he has a position or not. EFAI bouncing on VWAP. Relito. Right. Let's look at the borrow rate and stuff on SMX. And they just got a ton of shares available. Borrow fee's super high. Today they just picked up a bunch of shares for some reason. Borrow fee's been dropping from 462%. It's at 282. 150,000 available shares. 150k now. Yeah, it looks like it's a heavily shorted stock.
know if it's called gasoline, jet fuel thing. That all come into play.
Look
so
at
it's
GME.
a really complex
Are you still in this
situation
one?
to figure out. So at Lifefolio, we really like to boil it
The
down
one on
to
accident?
who do customers like flying with, and do we expect that to continue? And for now, the answer is
I love when
Delta
accidents work like
over the
this.
competition, and we do expect that
This
to
is like
continue.
my
Yeah, and
introduction
Andy,
into futures. Every now and then I'd make an
chart that
accident. It'd be
you
great.
guys
I'd go
sent
short
us,
instead of long, or
booking
long
a
instead of
cruise,
short.
We're talking
It's
RCL in the next segment.
It's good. I should just
but
inverse
it seems
myself.
like some of the
This
leisure
thing's
travelers
insane.
are pulling back, taking a trip or pulling
What a
back.
beautiful
American came out and
chart you
stated
accidentally
that
got
they
into.
saw some weakening demand moving forward. Is that a
Wow.
concern for the whole industry as inflation, those lagging effects of
Can't
inflation,
believe you're still
might be
in it,
taking
though.
hold?
This was an accident,
as,
right?
You know, airfare prices are just, continuing to move higher.
Yeah, it's a tough ticket to buy. I think anybody that I talk to, it's just a different animal
Oh,
than it
SMX
was
selling off here.
a year ago or even pre-pandemic.
Little flush
where
down
you
below
could
that
get
level.
places
Back to
for
VWAP.
$150, $250 round trip pretty frequently. Now it feels like a lot of those prices are $450 to $600 for a lot of people in a lot of places.
What do you want me to tell you about this?
That is
You gotta tell me if you've
absolutely
gotten
a
this on
factor,
accident
especially
first.
as the consumer overall is tightening their belt and watching their spend a lot more closely than they were a year ago. So it'll be interesting to see if the airlines can continue to maintain these high ticket prices. I think when Delta reports, they're probably going to have to admit that the pricing power they've had over the past year is probably going away.
Yeah, and one of the key things for Delta is that they own
No,
a
it's 'cause
refinery
earnings are
that
coming
they
up.
bought in
Goobers.
2012, so their margins are better. But you guys have an
Talk about
earnings score
stocks that are
going
having
into this
earnings
report tomorrow morning?
or had earnings.
Yeah, we're neutral on it, but I think from a macro perspective,
SMX
the
just went
risk
down a
is
little bit.
probably
Just
more to the
hit VWAP.
downside. I think
Good luck,
it's
Rick.
easier to justify
Probably shouldn't be
selling
trading.
all of these names than it is to justify
You need to learn to
buying
invest.
them. So officially neutral, but if I had to pick a direction, I think it
Buy
probably
something you
gets
know, you
a
like,
little
you
bit of a
use, you
pullback
believe
on this
in, think
report,
about a year in
and
10
especially
years.
the outlook.
Yeah, and it's already
don't
gotten a
look at it
nearly
again.
2% pullback today. All right, great stuff
Yeah,
and
more
great
money you
data
wanna
as usual,
put in?
Andy.
Go
Appreciate
buy
it.
some more.
That's Andy Swan, co-founder of Lifefolio,
Stop looking at me,
breaking down
Schwan.
the data for us.
Yeah, it
here
came
on
down and
Delta
hit literally
Airlines.
right at
Kev,
that level I was
I'll
saying,
turn to
$1.50.
he raised some concerns,
Wicked.
but business travel back to 80% of what 2019 levels. That's where they make a bunch of their margins. And that softness or weakness that Caroline talked about earlier in the show for
Gas moving up a little
isn't
bit.
in international, and that Delta's a big player
Yes,
there,
dude, that is
and that's a lot
dope.
of margins.
You also got in on accident, right?
Much like Jerome Powell delivers news to the markets in a friendly, positive way that they like. How about this stat? 96%. They did a poll. 96% of the respondents to the poll said they will travel as much
seems like going
or
crazy.
more in the first quarter
energy company?
than the fourth quarter, and that's led by financial services companies.
Oh, this is that
which
Genie?
is the higher margin.
I know Genie.
Tickets.
Right.
So when you think about that,
Wait, no, I don't know this
they're
one.
still only at 80%. Last quarter, they
Heck.
were only at 80%
This
of
is what you're
2019
invested in.
levels, so they can still grow that part of the business.
It is.
I
Intelligent
just
Energy
think
Solutions for a cleaner world. You've got
Americans
literally a
sucked
genie in
up
a
all the
bottle on there.
oxygen out of this sector.
You being a
I
graphics
think
design
last
guy,
quarter,
you must have loved
and
this
I don't think you
website.
should
I mean,
necessarily lump
the amount of
good
creativity.
airlines, the well-run airlines like
Just-
Delta, in with
how-
that.
how
And
clean
so
this- look
it's
at the
interesting.
logo. I mean,
You know,
it's like-
stock's already sold off
You
significantly
can't
this
even
morning.
put
It's
this
not
on
a
par
big
with anything
premium
else. It's
name
just
time.
so. I mean, look at
you
this.
can
This
just
is
buy
beautiful.
the stock if you wanted, but if you wanted to trade another way, I thought we'd turn this into kind of a lesson on how to look at it, and it's how to look at cash secured puts in a name like this. And so what I did, Tom, I went to this week's
Solar
right?
company. I don't know why they're
measured the
ripping, honestly.
expected move about $1.50, just a little more than that now, and I went to the 32.5 put, cash secured put.
Last
That's trading
news
about
article bottom was
32,
331.
33 cents, right? Now that's,
This all from an earnings?
1% or so of the underlying. If you look,
This is
it's
all an
right
earnings
at it, pretty
continuation.
close
This is
to
what I'm saying about
1%.
earnings continuations.
But what if you wanted to do more? What else could you do?
Had good earnings, capped up, and now it's
And
just rallying on the
just
earnings.
to
So
compare, if you went out to April 21st, the next week out,
I don't know index.
that same 32.5 put is trading
I love that you
51
bought
cents.
this, and
So you
this
get another
rips, and
17
GNS just
cents if you
dumps.
go out another week
That's the whole
on that, which is going to
monkey
come
picking
down because that
stocks
volatility is up as
philosophy.
well. So
It broke
there,
out of the
now you're
highest
making
it's
about
been. So it's at all-time
almost
highs after
1.5 more than 1.5,
1366.
almost 2% of the price of the stock on a cash secured put. And then my third choice, if you went out
Just
all
keep
the
moving
way to
stop loss.
April
Yeah,
28th,
that sounds good.
Tom, they don't have a 32.5 put there, so I went to the 32 put, and that's trading about the same price
broke out,
as the 32
didn't break out,
put
ripped, consolidated, ripped,
before, so a $0.50,
and then just kind of melted up, still ripping, little consolidation. Now it's in the ripping phase again. So
off its lows here a little bit.
See if it starts consolidating somewhere, or if it has a big flush down.
But think about this, Tom.
Momentum is all still there.
Volatility is probably going to come down.
And you're at all-time highs, so
that front month cash secured put,
awesome,
that front expiration, that's trading about 1%. All these other ones may come down after the event tomorrow, depending on which way the stock moves and implied volatility coming out. But I just wanted to give a look at selling the cash secured put in this week, next week, and 2.5 weeks out. And it's 33 cents, around 52 cents.
Yeah, I'm moving your stop loss up. It's smart. I guess you could do it like.
Interesting
how much
to look at
room you want. You could do it for like here.
And the trade-offs between price
14,
and time.
60.
And I think this is a good setup if you're comfortable buying the shares is the way that I always look at
it's just been basically
a call or
almost straight up. So,
but that's got the same risk profile. But a cash secured put where you have to have the capital
really
buy the shares if it's below that strike.
Even the consolidation's been like an upward trend consolidation.
That where you've got to buy the
if
shares.
I come down here to
each
BWAP,
one of these has about $3,100 to $3,200 in risk per spread. I think the going out in duration and reflective of how much credit that you can collect, what you're comfortable owning the shares at, is a good lesson in that one.
And by the way, if you look on the chart, one last thing, that $32 level, really sticky. Right around 31.90, 32 on Delta's price.
That's like when I didn't accidentally buy it, but I bought up.
Right around there,
someone in chat mentioned up,
level,
and I was like,
really,
oh, I've never seen this, and I checked it out.
Yeah,
and I was like, oh yeah, it looks really good. It's actually right here.
That's the key here.
Like, oh yeah, you've got an RSI divergence.
Are you taking in? What's your break even?
Based
on where you sell it is, you take that strike, you subtract the credit that you collect. Your break even's going
to be lower than that. You just said like up somewhere in a
strike
sentence, but he capitalized it for some reason. So I was kind of confused. I thought he was talking about a ticker. And so I checked it out. I'm like, oh, so it's gonna buy it. I bought it, and it had this nice little rally.
All the way down to zero on this stock. If for some reason Delta went to zero, but a good look at duration-based cash secured puts. Based on your outlook for the stock, if you're willing to buy the shares, I think that's key. All right, Kev, let's take a quick break. When we come back, we're going to continue the travel theme, Royal Caribbean Cruise Lines, which is rallied about 26% so far this year. We'll take a look at that.
It's only down hundreds of percents. Really? Hundreds. See some reverse split squeezy stuff back to $6. U.S. House panel subpoenas FTC for Twitter probe documents. Goldman no longer expected Fed rate hike in June. Daly, most likely there will be no recession. Judge rules that chat can't be served via Twitter DMs in FTX lawsuit. What? Chat can't be served? They were going to serve him via DMs on Twitter? What the heck? NPR to stop using Twitter after being labeled government funded. What in the world is this? Helvis. I mean, Helvis wasn't a luck play. We're watching that, talking about it. Oh yeah, that's this one that I'm in. COM. Same with GNS. We follow this one pretty close. Maybe SMX should be your next luck play. I don't know if you were on here earlier today when we were talking about it. This one looks nice. It's doing the same short seller fighting as GNS. They just call it illegal trading on the headlines. Security Matters granted European patent titled an object marking system and method for authentication, counterfeit protection, brand protection, traceability, chain of supply management. So they're actually an interesting one to go after this because they're all in the blockchain. That's like their business. Yeah, SMX forms legal prosecuting task force to investigate possible irregular past trading patterns, possible illegal market manipulation of its shares. That combined with this chart, and looks good to me. And the fact that I haven't heard about it. I think we're kind of early on it. Given it's, of course, had a big run up from this low, but come down still a ton from SPAC, de-SPACing. Yeah, that's good. I mean, you have to see where the funding for those media outlets comes from. See who controls the narrative. NBC just seems a little strange, but I don't know. Little SMX pop there on VWAP. GME holding above VWAP.
Dollar there, back down to that 101.20 level, was it? Yep, that's going to support crude today up to 83.34 last I looked. Currently holding right around 83.30. There's that dollar under pressure today, down by more than 0.5%.
Yeah, crude is definitely in that inflation story also, so we'll have to wait and see on that. Thanks to Ben Lichtenstein, host of the Future Show here on the network, breaking down markets for us. But now let's bring in George Tillis, senior markets correspondent here on the network. We're talking travel today, George, and we're talking RCL. Shares are down about 20% from year-ago levels, but had a good run this year so far, up about 26% or so. Demand's still out there. People want to go on cruises, right?
Yeah, definitely. I mean, in the entire industry, there's huge demand, and that's across the board. I'm going to talk about the three major cruise line carriers here in the United States that people use, like Norwegian, Carnival, and Royal Caribbean. But Royal Caribbean, as you mentioned, it is down about 20% over the last year, but it's significantly outperforming those two other respective peers. I think it's due to financial fitness. I mean, if you look at the gross bookings, they've actually increased significantly, and all three companies are expecting sales growth for 2023 full year to be over 100% compared to what they were in 2022. So there's obviously huge demand for travel. Cruise demand is very high. Bookings are high. And even Royal Caribbean is actually increasing capacity by about 14% compared to where they were in 2019, with three new major cruise lines or ships going to be actually sailing this particular year. But nonetheless, you have to consider, pricing power. That seems to be in line with higher demand, and you get higher prices and higher quantities sold in terms of bookings and tickets. you get a better revenue profile. And I think that's what's going on with the entire industry group. But I think the other thing you have to consider is look at American today. If you look at American compared to the other airlines, you're seeing significant underperformance. And I think that's been the case for companies like Carnival Cruises compared to Royal Caribbean, because you have to consider the balance sheet. Now, like I said, all three companies are going to be expecting higher revenues by over 100% year over year for 2023. That's a good thing. But not all cruise line companies are going to be created equal or are created equal, because effectively you have to consider those that have a lot of interest-bearing debt that they have to service, and Carnival still has that overhang, much like American does, and I think that's why it has been underperforming its respective peers like Delta and United.
Yeah, they're in similar companies, right, and similar sectors, George, but some firms, let's face it, some do it better than others, and that's why you choose some names over the others. You know, revenue is surging, but so are expenses. They said, Royal Caribbean said that cost of fuel was up 3.9% year over year. It's probably going a little higher with the markets the last 10 or 20 days, George. But
levels up
they're
here.
working on the
27,
expense side
47,
too. They're working on
Fill,
other.
6.2.
This seems to me,
they're just getting started on their
like a pretty
battle.
well-run company, because they
They're
continue
talking
to talk about
spinning
other
off,
things
even
they can do
maybe
to save money
offering a
and raise
dividend.
revenue. They're not just waiting for the market to get a little better. George, your thoughts?
That's right. I mean, if you were to compare the three that I mentioned, Royal Caribbean has the best financial fitness. Now, I'm not suggesting that company is a buy versus the other. What I'm saying is if you're looking across the board in this particular specific industry group, you have to look for the companies that have a better balance sheet position. I mean, I think that's the case here for Royal.
SMX says management believes that all holders of ordinary shares should hold their SMX shares in Type 1 cash account.
Supported by only $12 billion in equity.
I think I got out of Arrival.
2.5 times their equity. But if you look at a Royal Caribbean,
I wanted the
it's
capital
about
of something else too.
1.3 times equity, and so that's a better situation in terms of the debt. You have
company's
to think
actually
about refinancing debt when you're
the
looking at
shareholders
these companies.
what kind of account
all the
they should
companies
hold their shares in.
themselves, like I said, are growing sales.
I don't know what Type 1 is, but I know what cash
are going to grow equally in terms of mitigating expenses. And Royal Caribbean seems to be on board with cutting expenses while revenue grows, and they're expecting full-year profitability in 2023. And that is the case for Norwegian as well. But Carnival is not expecting anything until 2024. And you have to think about consumer discretionary spending.
Mr. John
This year
Tobacco?
seems to be intact because of bookings, which are done in the past, and of course, revenues that are generated in the current period. Well, what about 2024? You know, companies like Carnival may end up struggling because in 2024 there may be a little bit of a pullback. Pricing power may not be there, and that may impact a company like Carnival much more so on a negative basis because of the debt. So I think it's an important thing to keep in mind looking at the debt to equity of these businesses when choosing one versus the other.
Yeah, definitely.
Never heard of Mr. Tobacco.
Trends. Do we see any softening towards the end of the year?
This was
coming out of maybe some of their earnings reports over the next few weeks here. All right, thanks to George Tillis, senior markets correspondent here, breaking down RCL for us there.
They had a good,
in the cruise lines.
good news catalyst. I don't know if more news came out, but
here real quick and
yeah, I basically
RCL. Now,
just close it back out. Fully retrace the move.
Booking.com sold an Iron Condor for a neutral type strategy. Royal Caribbean reports earnings on the 4th of May tentatively.
Yes.
So I looked at flipping the script here a little bit to give us an example of, hey, what if you think the stock's going to move?
So the news first came out on 4/4 and actually didn't have a
3
reaction.
weeks or so. So I looked at buying
we
an Iron
caught this
Condor.
earlier.
And I went out to the May 5th weekly
4/7,
series, so you'll capture that earnings event. And I looked at buying a $3 wide Iron Condor in that cycle. You'll capture that earnings event. And the strikes I used were buying the 67.70 call vertical, and then also buying the 59 put, 56 put vertical. $3 wide on that put side also. You're paying a debit of roughly about $1.40 on that. That's going to be a risk, $140, where you want it to move outside those break evens, which are about $57.60 on the downside and $68.40 on the upside.
GME.
So in this strategy, you need a move, right?
This is the exact opposite of everything that Nick did. It's just the bizarre
kind of retesting that 29-cent area.
Why? Because you go to bed every night between now and May 5th
if AI
for a
moving
big
up here.
move in either direction. You don't care.
And it doesn't have to be at earnings either. It can be prior to that.
Yeah, this trade could be way off by the time earnings event even comes, because if it makes the move through 70
I know.
or
Same
below
with me,
56,
Gillard.
you could take this
I
off
got screwed
for
on Arrival.
a nice winner before
I literally
the earnings
picked.
event comes
There were
out.
3 that were running that day.
Yeah, this is one of those.
I liked Arrival the
paid
best,
theta,
right?
And the other 2 kept
lose
rallying, and
if
Arrival
it-
just
the
dumped.
risk is what you paid for it, and you lose if it stays in that range that you see there at the bottom, but you do well on a big move, and you don't care which direction, Tom.
Yeah, and we mentioned the risk is what you paid for this iron condor. Your potential reward outside of 60 or 70 on the upside and 56 on the downside is about $160 per spread, but you got 23 days in this. I think that's key too, because you can, if the market's open, liquidity is provided. As you mentioned, Kevin, you can close this early if it does move outside of those ranges. All right, good look at that buying an iron condor example trade. But that's going to do it for Kevin and I today here on Fast Market. Stick around though, right here on the TD Ameritrade Network. Next Gen Investing is coming up.
This max, is it possible? It's possible. By going up here, breaking through that resistance. GME, a little pop up there. BBBY still at the lows. BNS. Of VWAP. Let's start looking at GNE. GNE Energy. Just still on a moon mission. From its 100% run it started on March 13th, 1 month ago. Still like GoEV. Bought too much stuff though. Kind of interesting though, because it has a divergence here to the downside, bearish divergence. Oh, maybe we already got that. Maybe that's what this move was. But then here's a bullish divergence. Yeah, I wonder if I should cut EVTL. I might. I like the grind up. I'm just seeing kind of as a double top here. That's such a slow move up. By climbing back up, it is positive 0.3%. Yeah, I'm holding SMX. Holding it. I'll sell once we get to maybe one of those resistances, or sell some. Forgot EVTL has options. Not liquid enough. Smexy? Oh, you were actually talking about something? Oh, that's nothing. That's nothing, man. Try and mess with me. You're just saying SMX in a fashionable way. Does have daily potential. Better play. Oh, SMX for sure. There's nothing bullish about NEO. It has a head and shoulders. There's a head, there's a shoulder, and a shoulder. Today you're getting engulfing candle. I mean, day's not over. You've got, what, 3 hours left, I guess? So it's possible you don't get that engulfing candle, but yeah, this does not look good. It's rejecting the 50 moving average. It's bearish looking. And I was telling you this yesterday, like, you might be making head and shoulders. So, good idea to scale out. There's the move back to BWAP that I was saying you'd probably get today as well. But it could break to the upside of a head and shoulders, like, not guaranteed. It had an RSI divergence back here, which is bullish, and from that you did get this bullish move. In a longer downtrend though. And it really is kind of just rejecting that 50. SMX has had a downtrend. It's flattened and it showed a lot of buying pressure, signifying reversal. Volume mixed with engulfing candles, bullish MACD, price action, breaking resistances. Today it's battling for that high it made 2 days ago. So might not break it today. Could still see a pullback some level, but momentum's up.
A really strong brand, a really strong market position.
Jenny's wearing a light dress today,
and all the things that it's done from more of a defensive investment standpoint. You throw in that growth element of AI, so that'll be a good conversation.
Crash.
We haven't talked Peloton in quite some time either.
A big move up,
so I'm looking forward to that. But let's start with upvote, downvote, not endorsements, not recommendations. First one here on the list is American Airlines. So we'll talk Delta later on, but let's start with American here.
Big moves up, you're gonna have
kind
big
of a
moves
disappointing news headline.
It is a disappointing news headline. I mean, we're seeing shares down 9%. And
heavily
I would
shorted.
say there
That's
were
why it's
still
even
areas of
play to
bright
the upside.
spots to look forward to. They did release their preliminary results, and per this regulatory filing, American said that during the first quarter, they flew about 65 billion total available seat miles. That was 9% higher than last year, and above their midpoint of their prior guidance,
I'm assuming,
for 8 to 10% growth. Now, their new outlook for their adjusted earnings calls for 1 to 5 cents per share. This figure fell short of analyst estimates. However, they do see first quarter total available
news that came out probably
expected to be up approximately 25.5% from last year, and they do expect their first quarter CASM-ex to be approximately 1.5% lower
They're having a merger
than the
there?
first
I'm
quarter
not
of
sure.
2022, which is also in the mid-range of their previously given guidance.
Oh, just from de-SPACing?
All in all, these figures, I'd say collectively were better, or at least in
Did they do
line
all
with
that
what
before they
American had guided
de-SPACed?
for. It did come up short of what the street had been expecting.
Yeah,
which
that's
is where there's
crazy.
that disconnect. I would say when I initially saw the numbers, I was like, why are we seeing such a negative reaction? Because they're basically doing what they promised, but the airlines have seen some sentiment reversal here, Alex, over the last several weeks.
Weird, had all that volatility before
I don't
it
have a ton to
de-SPACed.
add to that because I think you kind of nailed it.
They went public through a SPAC, special
kind of
purpose
right in the middle
acquisition
of where
company.
They guided to.
It's cheaper, easier than an IPO.
We've read about
Basically,
really ramping
merge
up,
with another company, they take you public.
And aircraft's really full, and airports full. Hotels doing a little bit better.
It's not great. It used to be considered like a super cheesy way to go public, and
they were
just
actually able to
the company
deliver.
was
So it comes
sketch.
in a little bit below the consensus, at least on diluted earnings per share. But like you said, for the most part,
I think that's just
kind of
because
smack
they've
dab in
been
the middle.
shorted
But gonna say
really
down a vote
heavily.
for American. It will likely
2 years
take
ago,
a little bit of the
SPACs
sting
had
out
crazy
of what we
rips and
actually
rallies.
do here.
Anything that
from
was
this
SPAC
company,
coming out as a
for
SPAC
its
just
quarterly
went
release,
nuts.
which is slated for it looks
And
like
then
a couple weeks
after
from
that,
today.
they've just
So
been,
usually when you get the preliminary release,
I think in a
Jenny,
basket of shorted
there's not
stocks.
a huge gap in time
Maybe not a
from when we
basket, but
actually get the
potentially
official
they've all
earnings.
just
Not a lot of uncertainty
been
left to be
crushed.
had.
There's been like 2 out of maybe
keep that in
100 that
mind when
haven't
we do
just about been
ultimately
crushed.
get those earnings, but certainly a story for today.
Jamie,
Down 9%
he's so
is a
smart.
big
Buy
move.
moving
Next
up.
one though, Shopify.
Shopify up 4%, so a nice move higher actually in Shopify shares after JMP Securities did upgrade the
Jenna
stock
likes Shopify.
to outperform from market perform with a $65 price target. Now, this analyst noted that Shopify's gross merchandise volume estimates have upside, and there is room for greater expense discipline. The firm did say the size of Shopify's fulfillment network investments are less than they initially feared, while there is still upside to GMV projections, as they believe the company is now gaining overall traction with its larger enterprise businesses. They also think Shopify has the opportunity to execute on cost synergies with their Deliver and third-party traffic data now suggesting they're continuing to take overall share. So Shopify is up 34% this year. Mind you, still down 24% over the last 12 months, but up now almost 100% off their 52-week lows.
Yeah, I'm going to say up over this one. I think this is a fascinating company. It's a really integral part to companies going to the e-commerce world. It allows that
got out of
payment
EBTL, took a small
structure
gain on it.
those,
I don't know how I bought it so high.
But beyond that, what I think was really interesting about this particular analyst note, Jenny, was that they
it has all the momentum there, but it's kind of double topping.
Shopify.
Set of resistance already drawn, so
the fact that they're an investment
kind of building on our side divergence here, so I'm just going to wait a bit. I think it'll
But based off of what they've assessed so far,
maybe
less
get
than
back
they
into
feared.
it once
They're
it hits this
actually
50
not
moving average.
increasing their capex quite as much, and because of that, again, that's one of those more efficiency situations. So we're talking about a company that is focused on growth, it's focused on the future. We have a market right now that isn't that patient. And any signs of being a little bit more efficient, a little bit more cost sensitive has been perceived as a positive. I think that's what we got, at least from this assessment of Shopify's
next
position
holding above
here
VWAP
today.
really strong.
Next one though, MDB. We
Own
don't
it.
talk about this name all that often, but it is still an important one, and it's certainly making a notable move today.
It is, and it's another name that's fared quite decently on the year. MongoDB shares we see now up 71% from their 52-week low. We did get some analyst news today specifically on MongoDB, and shares are up actually 9% in reaction as Morgan Stanley upgraded shares to overweight from equal weight with a raised price target to $270 a share, up from $230, so implying about $40 of upside from where we're currently trading. And the firms did highlight their AlphaWise Cloud Optimization Survey, which indicates that 73% of respondents are actively engaged in cloud optimization initiatives. They said that MongoDB has market leadership in the $45 billion operational database market with multiple share gain opportunities along with a pivot to profitability. They do believe the company's fiscal 2024 expectations look appropriately now reset, and they said that headwinds from their cloud digestion should be largely complete heading into now their fiscal 2024. This company reports not for quite some time. They report June 7th, so we do have some duration until we get that next earnings catalyst, Alex.
Yeah, and this is one to potentially watch. I think this is a pretty strong macro call by Morgan Stanley. Really optimistic about cloud in particular, but they signaled out MDB and one other name that is called, let me see here, Confluent, which is a CFLT. Both of these names were the ones that they moved to overweight from equal weight, boosting the price targets on both. But they're basically saying companies are spending money faster than they anticipated transitioning to the cloud. So that efficiency that cloud can afford to some of these companies is worth it, even when we're seeing this cost cutting kind of work through basically the entire economy in efforts to shore up margins in a rising price environment. But one to watch for sure. Huge move here today, but like you said, no earnings for quite some time. I'm going to say downvote here because there's a little bit more timely of a story given we are on basically the eve, I know it's in the next couple days, of the financials kicking off this new earnings season. One of these headline names within that group is Goldman Sachs.
So Goldman actually doesn't report this week. They report next Tuesday before the market opens. So we do have some time before Goldman reports, but I'm sure we'll see some volatility as there are several big banks slated to report now over the next several days, Alex, like you just said. But UBS today upgrading Goldman's shares to buy from neutral with a raised price target to $385 a share from $350. And the analysts said that shares are attractively priced as the company's outlook is de-risked. They said that Goldman is well positioned to outperform amid these elevated levels of volatility, and they do believe that the bank has the opportunity now to really accelerate its growth of its wealth management platform and transactional banking business through attractively priced M&A. In addition, they said the stock is trading well below its valuation average over the last 2 years, and I would say, of course it is. Pretty much everything in the financial sector is, with Goldman shares down about 4% now on the year, but they actually see this as an attractive opportunity. So I like the optimism in the banking space, Alex, as it's been few and far between in the last couple of weeks.
Yeah, no doubt. And I think that the part that really sticks out on this one is they basically just say, hey, Goldman's different than Wells Fargo. Mm-hmm. It's different than JP Morgan. It's a lot different than the regional banks. It's far more investment bank focused. It isn't as retail banking, consumer deposit exposed. And for that, in a time where that's where the uncertainty is brewing, naturally Goldman's going to be, at least relative to its peers, a little bit better positioned from a risk standpoint, at least how UBS assesses it. So the upgrade from neutral to buy. But for me, the fact that this is a financial name pre-earnings, we'll get that earnings next Tuesday morning, makes it very timely. Going to say upvote.
Yeah, and I think worth diving into the financials as we are sort of in the financial earnings week kicking off this week and also into next week. But we'll move forward today with our two upvotes, those being Shopify as well as Goldman Sachs. We'll be looking at some example trades as well as some technical levels. Stick around. Next Gen Investing. We'll be right back.
Bounce in there. Another little double bottom. I might need to get some more shares. I don't like that, trader. Saying 25 cents? I think we're in, dude. We're in the low. The low is in. If we make a new low, then the low's not in. But it's showing signs that this is the low. That said, we could get one little spring test. A dip. Possible final little stop loss dip that wicks down and then shoots out of it. But it doesn't have to happen like that. Yeah, that's true. Our MACD's bullish now too. Come on. I don't like that engulfing candle to the downside. Okay, we need a little rally today before today. Por favor. Yeah, I'd like. What level is that actually? That's right at that level. 2930. So need to close above 2930. Or I might be closing these shares in after hours. Yep, and rip. 80 cents, yeah. 80 cents is where it closed out. It's a mix on the down. It's not, dude. It's consolidating above VWAP. The most bullish thing you could do. I think it was already yesterday. Very, very similar. Hard to understand, trader. But looking at the daily, we need to close above 2930 to not get an engulfing candle. So I'll close up at VWAP. Be nice. I don't want an engulfing candle to the downside. That would mess some stuff up. That's what the SPY just did. Made this engulfing candle to the downside, drop down, engulfing candle to the upside. Now it's up. So this was showing up, forget it's showing down. Given the volume yesterday was much greater than today, still a lot of good signs about yesterday compared to today, but yeah, don't want to see it regardless. Today doesn't look like yesterday to me. Yesterday we ripped, came to VWAP, and then dropped lower, bounced, inverted head and shoulders, back up to VWAP. Today we've just dropped, hit a bottom, little bounce to VWAP, retested that support. GFAI moving up again. Woo. With some volume, this thing's gonna go again. Can't even day trade this. If I get in fast enough. Yeah, I don't have margin to get that many shares. I like this for at least every test at 28.31, but I'll just trade it in my head. That's cheaper. Live pull today, 412, 409, 415. There it goes, GFAI. Getting a little poppy. Look at that bull flag on the hourly above VWAP. Dang, maybe I should just get fewer shares. Use up a day trade. Hardly seems worth it with such a small position, but whatever. I'll forget about it. Watch it. Mind trade it. Jedi Masters. Ooh, Jeff Brands too. This thing's up 7%. Big move up from the bottoms today. already at 29, then run very good, and on the end, drop again to 29. I mean, not yesterday. Yesterday didn't. It was much higher. I'm talking about this day, 2 days ago, maybe. What you're saying? The 10th. Similar, yeah. BBBY. Build a little cup and handle here, maybe?
643, so $3 wide put vertical, looking for a $1 credit on that $3 wide put vertical. That would leave $200 in risks for $100 in max profit. To get that break even, you simply take that $1 away from the 46 short strike. So anything above 46 in which these options expire worthless at expiration, at least that would be the anticipation. You keep that 100 above 46, not accounting for transaction fees, break even 45, and then below 43 is max loss. You just have that net of $200 after you factor in that dollar credit. So I think it's fairly straightforward. This is one that is looking for essentially Shopify just to hold on to these gains that it's built today, not give them back. But in the event that it does, it is risk defined, so we know that worst case scenario coming in, Jenny.
Yeah, and I think that's important, obviously, to consider that we do have that news catalyst in the near term. I guess we still are about a month out at this point. I can't believe May 17th is almost a month away. But our next name has earnings much sooner than that, and that is Goldman Sachs, which it does have earnings next Tuesday before the market opens. And Rick, I'm curious your thoughts here, because I think there are a lot of eyeballs right now on the financial sector as it's really on the eve of reporting earnings.
Yeah, definitely on that note there. But we have kind of a curious situation because we have something kind of similar to our last chart here. We have two conflicting patterns, one kind of symmetrical triangle type pattern in the broader scale, and another downward channel this time instead of an upward channel. So just starting with kind of what's been happening more recently with price action, we can see that we have a downward sloping trend line beginning off those yearly highs. We're down about 15% from that point, and you can see that across those recent lows, that's where the other part of our channel comes in, those two white dashed lines. We did have a significant break below the lower edge of that channel, but price stabilized near the upward trend line that we have going across those yearly lows. So that's our light yellow line there. And we did manage to make our way back into that downward channel here. We also pushed above our volume profile point of control and our yellow 21-day exponential moving average, which also has changed its slope from kind of sideways to downward to upward here. So kind of an interesting development there. Normally, I would say that a downside break from a downward channel, when we're already trending down, a downside break would not be good, even if we were able to recover from that point. But you know, based on these other things that I'm noticing here, maybe the situation isn't looking too bad. Looking at our RSI, our measure of momentum as well, we're pushing above that 50 midline here. So perhaps the momentum is kind of being regained by the bulls here. So some places to look for support and resistance now. Like
I don't know, trader.
This tension between these two patterns here. So where do we start looking next? To the downside, we've got our 21-day EMA, like I mentioned, which is coming in at 326.
Yeah, it's kind of breaking
Just
out a little bit.
That, we have our downward channel lower boundary and our volume profile point of control near about 320 or so. And remember, when a trend line gets broken like this, it becomes weaker. It's less of a source of support going forward in the future. So keep that in mind. You know, you could see another break below this trend line that recovers eventually here. To the upside, we've got our orange 63-day EMA near the 338 level, and that trend line, moving average is trending downward here. So the short term is starting to trend upward. The medium to longer term moving averages that we follow are still downward to sideways. So that yellow one, 21-day EMA turning upward could be an early sign of a trend change here, but you got to kind of wait and see. It's more prone to false signals because of its shorter time frame there.
Yeah, and I think the short-term time frame is important
We
here,
don't
Rick,
say
because
the
I do
H
feel like
word.
many analysts are coming in and saying you
I
need
don't
to
know about
be making
Fubo.
the distinction between
Kind of bullish
some
on
of
this
these
chart, but
large,
now we're getting
reputable
engulfing
banks
candle here on
and
the
some of
daily,
the fallout
maybe.
we've seen from other types of banks. So I do think when looking at the short term, it's important, but it's hard to ignore the bigger picture here. But we'll leave it there. Appreciate all the technicals as always, Rick Ducat, our chart master. And Alex, with that sentiment in mind, which I think is a really good point when looking at the financial sector as a whole right now, walk us through what you're thinking, then leaning into a more neutral strategy.
Why is there nothing
Yeah, so
on
first
these
off, we're going to
options?
hear from some of its big peers before we're going to hear from Goldman. So I'm going to lay out sort of maybe a potential way that this could go. It's not the only way, but just something that may make sense to some. Maybe you have the Wells Fargos, the JP Morgans, these more commercial, retail-facing banks come out and maybe they don't paint the most optimistic picture. I mean, we've just recently heard from Jamie Dimon and some of the things that he thought wasn't necessarily the most positive of messages.
GTII came all the way down there.
In recent quarters and really throughout history is
these
banks do tend to sort of move in tandem. So as we hear from one, you sort of see the whole sector adjust in price. And we hear from
literally
a
came
one,
right back
maybe
down
adjust
to the test
itself. But in
the
general, the
support line.
entire financial sector sort of moves together, at least at first. And so maybe the initial message painted by a JP Morgan or one of these other firms is a little bit more negative. Maybe you do see a Goldman move lower. But then as this analyst says, Goldman is a little bit different. Maybe they are able to come out and then lean into some of their strengths and paint a more optimistic picture. But in the end, maybe that's just a whole lot of nothing. Maybe the stock just kind of chops around and goes nowhere. If you're of that belief, it can happen the other way too. Go positive, negative, or it can just be nothing, nothing. If you believe that maybe ultimately volatility is overpriced right now in a name like Goldman Sachs going into earnings, I have a strategy that would benefit from that. And so I looked at selling an iron condor, just simply goes out to next week's April monthlies. This is effectively the weekly cycle that'll capture that earnings event in the shortest amount of time. And so April 21st is next Friday. That is the expiration we're looking at. And I simply looked at the 310, 345 as the short strikes and then just bought $2.50 wide wings. And so, of course, you can make these wider wings. You could choose different strikes depending on your level of conviction and risk tolerance. And you can kind of skew it too, depending on if you're more bullish or more bearish and move things around. But you can see here, if you're able to collect, let's say, 75 cents on a $2.50 wide spread, your max profit is 75 bucks. Your max loss is 175. And so in this particular strategy, Jenny, the break-even would be 309.25 to the downside and 345.75 to the upside. Anything in between that, particularly in between our short strikes, if these options were to all expire worthless, simply keep the credit. So just like the strategy we looked at the last time where the short put vertical, it performs like that, but it also has a short call vertical to worry about too. So there's risk in both directions, but the stock can only be in one place at a time. So looking for really just kind of a quiet earnings season, at least for Goldman.
And neutral, like we always say, is still a strategy, so I think that's important to keep in mind ahead of these earnings events. But also important to keep in mind for both of our example trades today that multiple legs can lead to higher transaction fees, short options can be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now, coming up next, it's time for FOMO. We are looking at all things Microsoft as Wedbush's Dan Ives sees further upside, 11% actually, to his price target. We'll dive more into that story coming up next.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example,
Mr. Coffee with his good insights. FAI. Yeah, little pop up there. Yeah, look at that. Retest and reject. I'm surprised on GTII's move down here, man. That would have been such a nice pickup. 137. Just a quick 20%. Oh, dude. Are there any fills down there? 137? Too long ago. 1235. I don't see any fills down there. 145, 141, 137, yeah. 1230. How did they get filled down there? Is that really 20%? Yeah, freaking 20% in like 10 minutes. Venus bouncing back above VWAP. HKD moved back up a bit. Kind of strange still. SMX moved off to the upside of VWAP. Up above 162 or at 162.
At this point in time.
Is this Mr. Coffee?
It's actually just kind of very interesting. We continue to see these price cuts coming from Tesla. And yes, it is allowing them to spark demand for their cars. And they actually just ranked #1 in China sales. That report came out last week, I believe. But they are also impacting their competitors as well, which is why they're trying this strategic move to try to price out some of their competitors, as well as trying to keep some of that demand for themselves. And hopefully they're able to grow that demand over time here.
Dude, I don't know how the put premium's always so high on AMC.
It's hard to not look at Tesla and tie in some of these headlines we're getting out of Twitter, because Elon Musk did give this interview with BBC and said that basically the company was falling apart until he got there, right? That was the gist of what I got, that he said they were being run like a nonprofit.
Yeah, yes, there's always a news headline when it comes to Twitter. So he did have an interview yesterday with the BBC. He does say that the company right now is in a position of roughly break even, but it has been a painful road for them to be able to do so. They had to obviously cut staff and also implement the subscription service Twitter Blue, where people are paying $8 a month for the verification, check mark and things of that nature. And it does sound like on 4/20 of this month, they will actually remove the legacy blue check marks for those that are not paying for Twitter Blue. But yes, there was it was a very interesting interview, just to say the least. Actually, towards the end, he kind of flipped it back on the BBC and started to potentially, criticize them for some of the garbage that they've had in the past. So it was a very interesting interview. But yes, he does say that they are roughly breaking even. Now, they are a private company, so we are not going to see the actual results of the progress that they have been able to make. But he does say that the majority of the advertisers, if not all of them, are back on the platform or intend to be back on the platform to spend on ads. He says that there's a couple of exceptions to that, but for the most part, he has been able to get back some of those advertisers that actually left for a little bit of a period of time because of the uncertainty with the company here.
The one thing he still hasn't done is get rid of the bots, which I thought was his whole intention, but it cracks me up. 4/20 seems like an ever important date to Elon Musk, which I respect that. But we'll leave it there. Kevin Green, Senior Markets Correspondent for the network. Appreciate all the thoughts on all things Elon Musk. Now it's time for FOMO. Let's bring Alex back in to talk all things Microsoft here. And we did get some analyst news, but I think Microsoft has been such an interesting story this year, as they're sort of seen as this leader now in the adoption to AI with all things ChatGPT.
And speaking of the bots, I mean, that's been Microsoft's big thing as of late, and obviously a different type of bot. But the AI chatbot, ChatGPT, really took the world by storm to kick off 2023. And of course, Microsoft's investment into OpenAI has been critical, I would say, in its recent outperformance. This has been a name that has had a red hot start to the year. It did weather a little bit of volatility throughout, the month of February into March, but leg up. I mean, this is a name that is basically back to where it was at the midpoints of last year. Not a lot of names are in that camp, as particularly some of these tech names have been under pressure tremendously as valuations just really were under pressure as rates went up last year. But Microsoft has been a key player in tech for the better part of multiple decades and has been a key mega cap company in terms of leadership, really kind of quietly in the background. I mean, FANG used to be the acronym. Never included Microsoft. I always felt misguided. I mean, Microsoft is just so important. It's so big. It is everywhere. It is so important to corporate America and globally that it's almost like it just was inevitable that this company was just going to slow but steady just continue to outperform.
Yeah, and someone explained to me once that the reason it wasn't part of the FANG acronym is because it wasn't like in the more growth space of tech, but they own Xbox and they have Activision Blizzard that the acquisition pending right now. I mean, I think that they have definitely made advancements, and it does seem like Wedbush's Dan Ives does seem to agree that there is further upside from here, as Wedbush did raise its price target on Microsoft shares to $315 from $290. This implies about 10% upside, maintaining their outperform rating. And Ives went on to say Microsoft is using this macro environment to their advantage and gaining cloud market share while becoming the clear leader in the AI arms race with ChatGPT. He did note that while the macro is not, to quote, roses and champagne, the firm does believe that Microsoft will emerge out of this period in a stronger position strategically. They also highlighted that right now this only further adds faith in their valuation in terms of looking at Microsoft shares. And Alex, you did mention how not many stocks have been able to ride what has been a very challenging storm the same way Microsoft has, and I completely agree, with shares now only down about 3% now off their 52-week highs. So when trading this name, and we do have earnings actually, I believe, in about 2 weeks, Tuesday, April 25th, and that's a very, very big week for tech earnings. We do have that near-term catalyst. Tell us what you're thinking for an example trade.
Yeah, mostly I would say that Microsoft's done its best to keep pace with Apple. Apple's sort of the benchmark, I would say, for these mega cap companies. It's been notably resilient, and it's been a name that it seems investors just kind of go to in trust, and I think Microsoft has sort of earned that as well. But from a trading standpoint, Jenny, I mean, this stock is pushing back towards 300, and for the investor that maybe thinks that 300 from a stock price standpoint is potentially in the cards again, I looked at a strategy that would actually target exactly that. Looking at buying a call calendar above the market at the 300 strike, going to the May June time frame.
BFI protecting that breakout. Jenny, is kind of double topping here also.
Away from the April monthly expiration, and so oftentimes when I look at call calendars, I'll do just the monthly expirations. It's easier to keep track of. Certainly, you can change that. Expiration. There is
strong around that
available in Microsoft if that is something that you prefer. But looking at the 300 strike, 275 debit would mean $275 in risk on a bullish strategy. But the beauty of the calendar spread in general is just how customizable it is. Once you've selected expirations, you simply then just have so many
down on
choices
GME
from a
there
strike price
the SPY
for a price target. I chose 300, big round number, price above where we're currently at. Stock's already had a pretty impressive run. So not entirely unlikely that it could kind of lose some momentum even if it does move higher, just because of its pretty red hot start. But this one I think is best explained by its risk profile in that visual. You can see the apex of the profitability graph is at the strike. So in this case, that would be 300. The risk is defined to the debit spent, and the closer you can be to pinning that strike at the expiration of the short option, that is typically the best case scenario. So you can see how that one expands if you do get that slow but steady move towards 300 over the next month.
And Microsoft is also making a nice move higher today, up about 1.5%. Also, we're seeing some strength now in Apple, Meta, and Alphabet, some weakness in Tesla and Amazon to round out what is ever the evolving FANG group of stocks. But that does it for our FOMO segment. Coming up next, though, we will look at Delta earnings, as they are the first airline set to report their quarterly
Tesla
update
looks like it's about to
tomorrow
dawn.
before the opening bell. We'll dive into those figures with Caroline Woods coming up next.
What's the parent company name's Alphabet? Alphabet. The holding company includes Google Services, Google Clouds, and other bets. The Google Services segment includes products such as Ads, Android, Chrome, hardware, Google Maps, Google Play, Search, and YouTube. Google Cloud segment includes infrastructure and platform services, collaboration tools. Google it. There you go. You don't own any? You know what, Google? Yeah, my email is just my name. That was my wife's. Whoa. I got Gmail pretty early on. Very early on, right in the beginning. There was like 5-letter words available when I was getting it. Should have gotten more. And it's grinding up more. Some X $1.60. I want to see one of these SPACs just hand it to them from all the price suppression. If it is a basket, I want this one to blow up all of them. SMAX is coming down, I better move it, change it so Rick doesn't see it. Oh hey, what's up, Rick? Sell. You should never buy again. Paper trade. Just make it a muscle memory of your account go negative and buying when you should and selling when you should. Don't use real money, it's just muscle memory. Excuse me. Paper trades a day. Yeah, just get consistent. Be consistent on paper. I still need to do that. I'm still paper trading sometimes. Or just use real money and blow up accounts. Whee! Where's move down on SPY?
I said, though, Delta, one of the best in terms of monthly percentage losses. It's only down about 2.7% this month compared to some of the airlines, which are faring worse, but still up about 3% so far this year. So in the green, but underperforming the broader market.
2 o'clock on any of these.
Yeah, Caroline, I'm going to be really interested to see what Delta has to say this time around, because as Jenny had mentioned, if we look back to exactly 1 quarter ago, this same situation happened where American came out and told you how their earnings were going to shape up, and Delta didn't disappoint on the numbers, but they disappointed on their outlook. And so to me, there's something going on here game theory wise where American's just not so sure what Delta's message is going to be, and they want to make it very clear where they stand before it. So last time it was foreshadowing of disappointment. We'll see if it is this time or not. Any final thoughts, though, on Delta before we say goodbye?
Well, I will say, I always like to look at the analyst breakdown. I talked about the Bank of America analyst warning about a slowdown in bookings. Jefferies is very optimistic about those Q1 results, saying that they will point to continued strength and demand into summer, but definitely more cautious looking a little bit further out in the second half of the year due to elevated costs, elevated CapEx. I was taking a look. Cowen said they expect Delta management to echo its comments from mid-March that demand for the second quarter and third quarter remains strong, and that it's able to offset some of those higher costs that we talked about through yields. They, in turn, are in the outperform camp. But I will say, when you take a look, I was looking at the biggest carriers, Delta versus American versus United. There's not a single hold or sell rating for Delta. Every analyst is in the buy camp, and the median price target implies about 44% upside from here. That being said, for United, the median price target implies about 50% upside, but not as many analysts in the buy camp. Almost 70%, though, are in the buy camp. American is definitely the one that analysts are most cautious about. 75% of analysts are in the hold camp for American. So analysts definitely bullish heading into these results on Delta, despite the fact that some are, worried about some of these slowdowns and booking numbers. But, it'll be definitely interesting to see. I think that's going to be the key thing. Guidance is always important when it comes to earnings season because earnings are backward looking. But this season, it seems like it's going to be extra important, whether it be from the banks or the airlines, to really give us a sense of how the consumer is faring and where we're going to go from here.
And Caroline, you mentioned guidance, which I think is so important. I was reading actually analysts on average have about 24% upside to even their third quarter targets now versus last year. So seeing some upside, at least when you compare over year basis. But we'll have to obviously see once we finally get those results tomorrow. And I'm so excited to finally have earnings to discuss once again. But we will leave it there. I appreciate the good breakdown on Delta ahead of their quarterly report from Caroline Woods. Now coming up next, it's time for Under 30. We are looking at Peloton, which shares down over 8.5% as we are seeing some slowdown in web traffic per Morgan Stanley. George Schultz will tell us more coming up next.
Dally says there's a lot of uncertainty about how long it takes for rate hikes to affect the economy. We read that already. White House's Brainerd says U.S. banking system is stable, sound, and well capitalized. Community banks should be exempted from assessments for losses to FDIC insurance fund after SVB failures. Baseline U.S. Moody's says the baseline U.S. macro forecasts remain unchanged, but the outlook is more uncertain. Brainerd, Congress has to find a way to raise federal debt ceiling. Warner Brothers Discovery unveils Max streaming service to debut in the U.S. on May 23rd. I want to close above this 29.30 on BBBY today. Access set to end support for Canada customers next month. BlackRock CEO Larry Fink says he doesn't see how inflation is going to get below 4% anytime soon. Bankrupt crypto exchange FTX has recovered $7.3 billion in assets. FTX will consider restarting crypto exchange in second quarter? What? It seems to need more banking regulation, BlackRock's Larry Fink says. Discord says it is cooperating with law enforcement regarding apparent breach of classified material. Who of you on Happy Money's Discord has classified material? HKD up, down 7.5. It's holding up really well though. This is shocking. It is shocking. Mister's just a bot. He was pumping HKD and Meggle yesterday. The CEO trying to get buyers. Yep.
Downgrade the stock. In terms of their price target now, they've got an equal weight rating at $4.50, which is a little bit more than half of where the price is right now. I mean, the stock itself in the last year is down about 55 to 60%, give or take. It's higher for the year. It actually had a really good month of January, but so did so many of the other growth-centric, non-profitable based businesses like Peloton. And unfortunately for Peloton, you know, it's been over 3 years since they became a publicly traded company. It was around $30 a share, ran up significantly. It was over $100 a share, and you can actually see it down below $12 a share now because of the fact that the company hasn't been profitable this entire time, and things seem to be getting worse, not better, from the standpoint of total sales growth, which in fact, if you look at last year for fiscal year 2022, was down over 20%. And even on a forward basis, they're expected to show decelerating trend in total sales by 11%, despite the fact that subscription growth in the last year was actually higher than it was in 2021. It looks like the product sales are still a challenge for the business. They have a huge inventory issue. They have to discount the product. And while at the same time, what I ended up doing is looking at the amount of money, or in this case, losing the money they're losing per employee. It's about $450,000 per employee. So they've got a lot of employees. I know they've cut back their workforce quite a bit in the last year, but still they've got to reduce expenses for there's to be some meaningful trend reversal for Peloton.
Yeah, George, in terms of the performance of the stock price, I think we can just throw out the COVID run-up. I mean, that's an unrealistic expectation for this stock to achieve again. There's something here, though. There's only a few brands in the world that are as popular amongst the users that this one is. I know it's more niche. Not everybody is going to be a cyclist or even a runner when it comes to their fitness. But this is more than just a treadmill or cycling bike making company. I know that they've leaned away from that actual making of those hardware products, but this is a connected platform. To me, this is almost as much of a software or social media company as any of the others that we talk about. And there's something here. It's just, can it survive on its own? Or is it going to be better housed one day under another brand? I'm not going to speculate on ultimately how that's going to play out. I think there's some clear brands that it would make sense under the umbrella, but we'll leave that speculation for another time. But to me, George, there can be a truth to the fact that this is a sweet company, a sweet brand that people love, but maybe it's not feasible on its own. Thoughts on that?
Well, yeah, so I mean that's the trick about investing in this company. Look, you have to separate product from services, and it really is a connected lifestyle brand service company, and it's very popular. And with that said, brands can be very meaningful for companies, especially ones that in this particular instance are not making money or actually losing money on their product. So, that's the thing about the business. It does have a viable business on a forward basis. It's just struggling with trying to economize on its product pricing while at the same time appeasing to the masses who utilize their subscription services. In other words, they're increasing their subscription services while their unit product declines are happening. That gives you an idea that the brand is popular. They also have apparel. That's also very popular. But right now, unfortunately for the business, the financial aspects of the business are really struggling. Now, looking at the stock price around $10, the estimates on a forward basis now are expected to lose $2.50. So right away, you can see that's going to carve out another $2.50 in the share price, all else equal. The other thing is they have to stop the downtrend in total sales, and that includes product sales, while subscription sales improve. And that can actually change the dynamic for the business. But at the very least right now, based on some of the web traffic reports that Morgan Stanley figured out, things are showing some bad improvement. In other words, disimprovement for subscription services at the very least this last quarter. So not a bad company. It's just got a bad financial position at the moment. And that's why I think their price target is actually reflective of what is probably going to be expected in the next year or so.
Yeah, and George, I think it's really important to separate the emotions that someone like I have been so loyal on Peloton, and I think it's really important to separate those emotions from, say, the balance sheet, which I do think is a more important picture at this point, especially given the overall weakness we've seen in Peloton. But we will leave it there. Appreciate the breakdown, George Till, Senior Markets Correspondent for the network. That also does it for Alex and myself for Next Gen Investing. Coming up next, we have the watch list with Nicole Petalides.
Two minutes to 2. Thinking GTII is illiquid enough. Maybe putting an order down here will get filled. Buy bouncing a bit on that level. GME still red, but above the breakout channel. Before the storm. MACD is getting close to touching the signal here on GME on the daily chart. If we get a bounce there or crossover. Oh yeah, that's right. We have FOMC. Totally forgot. 10-15 seconds. Here we go. Okay, then we're gonna listen to Zip or not Zip. Trading.
And post-meeting Fed Chow pair
says about the minutes.
On the words may and some.
It's out.
So let's see. You could go to the Fed website to get it. I'm gonna go through it here in a little bit. I'm gonna get any headlines. All right. Should be out.
Hop on it.
Wait for it. Several Fed officials stressed the need for policy flexibility. All Fed officials back 25. Several stressed need for officials. Many Fed officials lowered their view of rate peak on bank strains. Fed staff projected mild recession starting later in 2023. Oh, that one's kind of new. Hold up. That one's going to be interesting because that could fuck with the bond. That's a crazy statement, Loki. Fed staff projected mild recession starting in 2023. That might be a little bit newer there. Okay, so here are the minutes. I don't think, let me check the other. I'm going to check the other one right now, see if they said anything. All officials
coming down a little bit.
No, they said the same thing in February. So that's the same exact wording as February. Ignore that. It's not that bad. No. They've said this. It showed up in the same one last month. It just didn't get the same attention.
Oh, BBY dropped through the low.
The desk survey
made a new all-time low.
Dang
it.
That's it. They all projected. I'm going through it now.
Not a good sign.
May.
Like it to wick out of here.
Peak in May 23. Could be a survey of market measures.
The market's hardly had a reaction from that FOMC.
Some pricing moves in asset markets may have been amplified by impaired liquidity conditions. Despite that, the bonds and treasury equity markets are functioning properly. Fed staffs were projecting a mild recession. That's exactly what you see in the Fed policymakers' forecast, but not something they themselves have acknowledged.
Did you see that candle?
So many participants noted the likely effects of recent banking or economic activity had led them to lower their assessments of the federal funds rate target. So U.S. stock indexes are barely budging on this. UPS nationwide contract talks delayed by Teamsters.
BY twitching out. Tweaking out. Must get it under control.
Nothing will come. Checking. Although they paused. Oh, they mentioned pause twice, but like the last time. Oh, UPS is dropping on that?
There.
Oh, UPS is dropping on the union stuff. Whoa. What's that? Nationwide contracts delayed. You're already down 0.5%. UPS is dropping on that news.
Oh, I guess not much on that FOMC.
Kind of. I mean, I wasn't expecting it, but it's like the market wanted something today. But nah, I mean, you're not. I'm just trying to skim through. Same mention. You mentioned pause twice. Last Fed minutes, they only mentioned it once, but again, it was in relation to other countries. So the immediate takeaways are that policymakers scaled back expectations for interest rate hikes this year after banking turmoil. Officials stressed need to watch incoming data to see how deeply anticipated the credit crunch would be. March decision to raise 25 was unanimous among all 18 officials, but reflected a middle ground with one policymaker weighing a pause and another contemplating 50 basis points. Fed staff projected a mild recession starting later in 2023, followed by a recovery in the subsequent 2 years. Officials judged the worst bank turmoil was likely limited a small number of banks support risk management and that the banking system remains sound and resilient. Discussion noted risks to inflation in both directions with resilient labor demand pushing higher prices, but a credit crunch having potential to slow inflation down. Yeah, so pretty much the Fed would have raised more, but the banking system was there. That's your basics of all of it. Why is it moving so slow? 3 PPI tomorrow.
Don't like this bear flag.
Yeah, very small. I mean, tech's doing decent. UPS is getting clobbered still.
29.30. We need over that.
JPM is doing good. We're moving very slow. Again, volume's high. Like, it's going to be a higher volume day than 9. I guess it's 11. We did kind of slow down. It should be higher than the last 2 days. But like we said, it's like the market wanted to get that and was waiting for it, but it's still not. I mean, I don't think you could take anything out of it.
Okay.
So word counts, lots of discussion on banking sector. The word banking was mentioned 46 times from March 2nd versus 2 times before. Recession is mentioned 3 times versus 4 in the previous meeting. So they mentioned recession less. Market. I mean, I don't know. I mean, there's a very bearish takeaway in the sense that the Fed is pretty much saying, yeah, we would have raised rates 50 basis points more than everybody was expecting if the banks didn't get collapsed. And then that's it. And then it's the same thing Powell said. We don't know how it's going to impact them, and we're waiting to see the credit crunch, the path forward, terms on pausing. Even they didn't even say anything about the language. They didn't really. I need to actually skim for that.
All right. There you have it. Not really reaction at all from the market. BY is getting kind of squeezy down here with some volume, so, but it's still down here as it pumped out. Some bigger orders here on the time and sales. We did hit an all-time low though on it, 28.75.
Into being a little tempered. I don't think they're going to raise rates in their next meeting. I think that they're going to keep the threat of it there so that people don't rejoice necessarily.
But
I think
down.
that
It's still at that level.
This banking thing is real. I don't believe we're at a systemic or a contagion yet, but I think they keep raising it. There's some real threats there. Let's be honest, a lot of things are trending down. You're seeing a lot of inflationary things, and this stuff has to play its way through the market. So personally, I'm of the mentality that they're going to hang tight, but, you know,
that would be
crazier things have happened.
I think a lot of people had hoped that they would pause on the last round. Didn't necessarily see the merit for the last one, but that the Fed's credibility was at stake and they had to do that one, and that the market could digest that. But now there's still plenty of people who are saying, you know, end this rate hike cycle. I mean, don't pause here and then, you know, skip May and then raise in June. I mean, that just seems sort of, you know, wonky. That they should just pause here now and say that was the rate hike cycle and let it go into the system. It takes a long time. Even Jay Powell acknowledged that there's a lag effect.
Oh, there's a massive 100%, Nicole. That's what I'm trying to allude to. It's absolutely a major lag effect. I mean, you saw housing prices a month or two ago. First time they took a step back in a decade. This stuff lags. Interest rates are high. Mortgages are high. And for sure, I'm completely aligned with what you're saying. I think they're going to keep the rhetoric there, that it's in their tool belt, keep the threat going, but probably pause and let this thing play out for a quarter or two.
Yeah. I mean, they're basically saying they would have likely raised the outlook for Fed funds rates. However, due to what we're seeing in the world of banking and the turmoil, that they chose not to raise that. It looks like they were ready to do so, but that the bank turmoil is likely to result in this tighter credit situation. And what say you, before I get to equities and energy and all that, just we're waiting on some bank numbers. At the end of the week, we'll have earnings. But what will you be watching for? We know that we've had, you know, a lot of withdrawals. The deposits are dropping. They're starting to raise the reserves, and you know, we're watching the overnight repo rate. I mean, there's a lot of lending is tighter.
That's still hanging out here at the low.
Yeah, I think personally, I look at the more macro level when you get to things like this, such as lending and mortgage rates and interest rates on heck, my money market, my savings account's paying 4% right now. This stuff's going to flow through the economy. It's more of the effect than the cause of what's going to transpire and what the overarching trends, not just for banking, but for what it means for the economy in general. So that's really where I'm keeping my eyes on, less so than repo rates or some of what I would look at, and not that they're micro, but but not as systemic-y, not as wide-reaching things that are going to really affect the markets in general, the whole economy.
Right. I mean, they are saying that inflation is still seen as unacceptably high. I mean, they're acknowledging that. I guess they're sort of throwing it out there. Hey, we may still raise rates, right? I mean, that's Fed speak 101. Let's get to equities. I mean, you know, any final thoughts on this conversation, and then turn your attention over to the equity market?
Yeah, the last thing on this is we have to remember we had a really quick ramp up in inflation, and the Fed acted really strong. The last playbook we had, sort of the Volcker years, this was a decade. This was years and years of high inflation that they had to unravel. Not sort of a short-term blip here that came from COVID and all that fun stuff that played through all the quantitative easing and that beefed up our economy and slowed down supply chains. This, to me, is a whole different ball of wax, and you can't really compare it to previous high inflationary areas, and it's coming down relatively quickly, and maybe not as fast as they'd like to see, but it's a lagging effect, and we've cut it down from 9 to 5-6% in a short period of time.
Okay.
Yeah, so that's where I would.
So at this point now, as we talk about this for investors, Andrew.
No, I haven't heard that expression in a long time. Ball of wax.
What to get into? I mean, what is the process here?
GFAI is holding up strong.
We're long-term investors, so we're always invested.
SMX holding really well.
But when we look at areas to really invest in, first of all, in these sort of uncertain times, I mean, we're upon earnings season, so we'll see what comes out there. Things are still fairly attractive. They don't seem to be overvalued for a change, but we are all about quality, high quality right now. So when we talk about equities, we're pulling in from international quite a bit, pulling in from small caps. We're overweighting things like high dividend, high quality names. We think it's a quality play right now at the end of the day versus a high risk play, even some defensive sectors. So that's really where we're looking. We like energy still. We think that's undervalued, even though it's had a nice run up. So we have some specific plays and things like that. And we still are bullish on semiconductors and things for the long term. But on the more granular, shorter term, those are some of the big moves we're looking at.
What do you think about the fact that the dollar, and you talk about these large caps, is still on pace for the lowest close since February? You look at these multinational companies, a lot of people like to look to large cap, U.S. equities. Lower dollar, good news for these kind of companies, these multinationals?
Yeah, but it's interesting, right? Definitely see a correlation with the dollar and international space versus non. So yeah, it's an impactor. It's a driver. There's no question about it.
Mm-hmm. Yeah. And what about something like, I know we hit equities and fixed income is obviously always a way to go here, particularly, when we used to say, Tina, there is no alternative. Now there's an alternative. It's a lot of alternatives. But what about something like tech?
Tech, it's interesting. It's had a nice start to the year after getting really beat up last year. Still cautious. I was reading the other day, some people are looking at some of the big tech names almost not like tech names now.
GME,
the big boys, the Googles, the Amazons. It's almost consumer staples and household names that they albeit are tech, people are viewing them not as much so. I still think it's got some trials and tribulations ahead with where interest rates are and how they value their books. So I'd be cautious. Again, I'd go high quality if I'm in tech, candidly.
Yeah. I was reading one report this morning that was talking about a pullback for the market to the tune of about 10%, and the concerns about, the debt ceiling and getting through this sort of tricky time. And so the question is, do you think that people should maybe actually think about not getting in right now and taking a breather?
They say a 10% pullback, but they've been saying it for months.
No, I don't.
10% months ago was a lot different than 10% now.
Now you're getting into a dangerous game in our experience. The timing thing never works. I mean, was March 23rd, 2020 was the low of it during COVID. That certainly didn't feel like a great time to be investing. It was a week after I shut my office down for 2 years and we were wiping groceries. So no, we're not big proponents of sitting on the sidelines. It's more round and edges positioning, because things turn quickly and there's still a lot of good news out there. But be protective.
Yeah, understood. And just to let you know, the one I was reading was a Wells Fargo report, and they were saying, in our view, equity downside will be driven by worsening economic conditions. And so they do see a likelihood of a 10% correction across the S&P 500 within 3 to 6 months, while maintaining year-end target of 4,200. So that says volatility, but not the end of the world, right? Final quick thought, Andrew.
Yeah, I think that's fair. I don't know which way it's going to go tomorrow, but I would anticipate you see this risk on, risk off environment until inflation is under control. Interest rates are clearly defined. We know the net impact on the economy. So I think you'll have a hard time sustaining a real bull run or a bear run here, and you'll kind of have this sort of range-bound market for the next probably 6 months or so.
All right, Andrew Rosen, thanks for being with us, president of Diversified. Thank you. Later this hour, we'll take a look at Warner Brothers Discovery as the company unveiled plans for its new Max streaming platform. Then we'll get an update on luxury consumer shopping.
Okay, next data. Next economic data is PPI tomorrow. And that comes out at 8:30. Could be a big market mover again, as well as initial jobless claims, continuing jobless claims, all that at 8:30. And Friday retail sales. Waller speaks. Yeah, SMX up to $1.70. HCNE, Jaws, Hurricane A. What is this sketchy thing? What is this piece of crap? What is this? Like check company? Oh, it's a SPAC holding company? Yeah, it's a SPAC holding company. Nothing about it. Figure out who they're going to merge with. Facts are sketchy though. Weird that it's coming up above $10. Everything's going to zero. Oceans are boiling. The hurricane chart. 5 coming up here. Might break out new highs there. 411 range. XMX grow. Yeah, XMX moving up here. $7.07. It's up 17% with some volume. About to get a new high on there. 1730 was it. Break of that would be neat. 270 next on my count. Big level here though. Big level here. Really long? No, don't get into don't do that. Unless you know what a SPAC is. Even if you do, you wouldn't want to get into it. Projecting. It'll go. Just can't be looking at it. It'll go. My size is up 15%. Buy. Breaking out to the upside there. Yeah, anything blank check holding company, don't mess with it. Rejection is spelled R-E-J-E-C-T-I-O-N. You spelled rejection, which sounds naughty. I do want a blank check though. No, I don't make it. It'll make it. Just a little test of the seller to see what's up there.
Weeks. Shares of Bumble hit 52-week lows. UBS cutting the stock's price target to $20 from $25, keeping a neutral rating. The online dating company is expected to report earnings on May 3rd. Tough year so far for Bumble.
I'm rejecting that new high.
15%. All right, let's check out Bitcoin, which really moved to the highest levels since June over the last day or so, but right now pulling back a little bit, down 80 at 30,245. All right, let's welcome in our next guest. Brian Frank is with us, CIO of Frank Funds.
About to explode.
Well, we're watching tightening credit, and that is certainly on the minds of investors. What are your thoughts, big picture here?
Yeah, 100%. Tightening credit is the name of the game, and it affects everything from the macroeconomy all the way on down to the bottom-up companies that I'm looking at in the U.S. equity market. So if credit is tightening and we're a credit-based economy, you basically should count on lower growth here going forward. And I don't think many analysts or many investors are anticipating a significant slowdown in the second half when you look at where the S&P is trading, where these stocks are trading, and where the analyst numbers are. So it could be shocking to some people as credit tightens through the economy here and consumer spending slows down and earnings decline.
So at this point now, as we have some concerns here and a possible credit crunch, right, which puts pressure, there's names that seem to be somewhat recession resistant. I won't say recession proof, but some of the staples or things people like best. Tell me about that.
Yeah, certainly. There are spots you can go if you're not going to
this
index
could still
here,
be a spring
which I would
test.
definitely recommend because the indexes look very expensive.
Dude,
They
we have
give
an
you
RSI
exposure to
divergence there.
those much
What the
more
heck?
cyclical names and the banking stocks and all the kinds
How
of
did I not
problems
see
in the
that?
economy. So at the
Did I
Frank
see
Value
that?
Fund, we're trying to stock pick around that. So you can go into
Yeah, there's
defensive
an RSI
names,
divergence there.
and we like fast food. We like beverages, things that people don't cut back on in a recession. And you may be cutting back because you lost your job, or you may be cutting back because your investments are going down. So you kind of have to look as consumers will trade down, and also at what things they'll avoid. Some more high-end expenditures as well. So it's definitely a market to pick your spots. And the valuations are still favorable there too. So you can look at these defensive names, and they're trading at reasonable valuations given what they are relative to more cyclical companies, which inexplicably have higher valuations.
And in the world of food, you talked about fast food. Jack in the Box, is that the name you like the best?
I do like Jack in the Box. Yes, it's a holding in the Frank Value Fund. It pays nearly a 2% dividend.
To break this level.
It may not be known to East Coasters because it's predominantly a West Coast company, but they actually have higher sales per unit than Sonic and Burger King. So they're approaching Wendy's, which is the number 2 position in the market, and there's still a lot of expansion opportunities left. And the reason it got hit last year was a little bit of inflation. So they weren't able to keep up with the increase in costs, especially on the labor side. But we think that's abating now. And they also bought Del Taco, which is a 500-unit chain. And it's only about 50% franchised. But these large QSR companies, they can bring it to the franchise market and significantly up their profit margins. So Jack in the Box is doing just that with Del Taco. And we think it'll surprise to the upside in terms of earnings while giving you protection in a recession, because fast food is not something you cut back on in a recession.
Right. Okay. And then when it comes to something like Coca-Cola or beverages, things that you like, I'm curious, do you like Coca-Cola, or is it more the distributor or something, on the outskirts of these beverages?
Yeah, we've had in the fund, we've had kind of on the outskirts, I would say. So instead of looking at the parent company of Coca-Cola or even the distributors in the U.S., we've had a position in Coca-Cola FEMSA since 2021. May not be known to the average viewer, but it's actually the largest Coke distributor in the world. Predominantly in Brazil and Mexico is where they distribute. And it had a slower reopening from COVID than the US did, but it's done just great, and it seems to be picking up pace here. When we bought it, it was nearly a 5% dividend, so they're definitely shareholder friendly. As the appreciation has gone up, the dividend as a percentage has come down, but they increased the amount that they paid earlier this year. And again, it's one of those recession-proof ideas. So if you're under pressure, you're cutting back on that big trip or, the luxury purchase, but you're still going to be buying your beverages.
Yeah, and are you fine? You said it's picked up the pace. It certainly has. In 1 year, it's up 50%. Year to date, it's up 22%. And it just hit a 52-week high over this last week of 84.55. Still like it, though, right?
Yeah, even with those spectacular returns that you just mentioned, it's still actually undervalued relative to where it normally trades. There's another 20 to 30% upside before it really gets back into the middle of its normal range. This company suffered. The stock price definitely suffered, but it's a very strong company. And as you've seen in the performance, people are starting to realize that and invest. But yeah, we believe from a valuation perspective, there's still further upside.
Not look at it. That's how it'll work.
So when you said don't do index, you didn't say don't do index funds, but you seem to shy away from those because you think stock picking is the better way to go. You were concerned that the index funds really would expose you to cyclicals and banks. This is a sector by sector story on the more investable sectors. Is that what it is? What are some of the ones that you would stay away from?
Yeah, we don't like technology still. I know it's been the hottest thing over the last 10 years, and investors, it has a special place in their hearts, and it's a huge part of the index funds. The S&P 500 is over 25% technology, but the returns this year have been consolidating to those big 7 stocks, the Microsoft and Amazon and Metas of the world. And that's a dangerous area to play in because we think those are actually cyclical companies. They predominantly rely on advertising and business expenditures. And in a recession, both of those things will come down. So you're really paying for it in the indexes by putting a high valuation on those companies, expecting that those earnings are not cyclical when I would dare say that they definitely are cyclical. And we've seen, in periods like 2000 and 2010, you can have a negative return over a 10-year period with an index. And 2000 is a similar starting period to 2021. Very high valuation. Going into potential economic slowdown and a bunch of technology stocks leading the way. So I don't see why history would be different this time. I think it's actually going to rhyme. So that just makes it easier for a stock picker like me to potentially outperform over the next 10 years.
All right. Well, we'll have to keep an eye on the specific stocks. Brian Frank, thank you. Good to see you, CIO of Frank Funds.
Thank you very much.
For being on the show. Coming up, we'll check out the newest entrant into the streaming space. Warner Brothers Discovery unveils Max. All right, we're going to get the details.
GFAI at the high. SPY is just dumping on something. Not sure what. SMX red candle up there. Might be double topping. Nice GFAI pumping. But the chart looked like it was going to. And CMI has a super high IV on its options. They're expecting some kind of catalyst coming up. Or maybe it's already happened. Dude, that's a big flush on SPY. Heck.
Getting up now, bro. 2 big red candles out of nowhere. This is now getting big. It's either, and then bonds are even coming up too. This is either off of the ECB or this is off of Yellen, but I don't have Yellen live. I don't think she is speaking yet. I know she's going to today.
ECB said may possibly raise rates more at next meetings. I don't think it's from that.
Raul is, dude, that one's massive.
Maybe it is from Yellen. Volatility just picking up with all this data coming out. 3 B's, 1 Y. SMX with an engulfing on the 5-minute. Not great. Price action is still pretty good. Maybe a little cup and handle. I don't want it to be a double top or bull. But still above VWAP, still above that 161 line. Buy still coming down. Someone's doing something. CMI coming down. VWAP. Not sure what's going on with that. Ooh, okay. BBBY got a little candle to the upside. Let's go. Come on. Do it. A little inverse beta. Turn it on. Dude, look at that SPY. Giving back all the gains from the lows today in like 10-15 minutes. Wow. Oil dumping? Nope. Dollar's not rallying. This has got to be from someone saying something. GFAI at the high still. BBBY wants to move up. Wants it. Had a candle up to 29.13. We have an RSI divergence on the 5-minute. Fed said they embrace a recession. What does that even mean, embrace it? I'm not seeing that. Where do you see that? I just see the ECB may possibly raise rates more at next meetings. FAI about to make a new high, maybe. It's getting close. SMX still doing good up here. Up 161. Up 15%, 169. God, I didn't see that on Twitter. About a while ago? I don't see it. Fed staff projected mild recession starting later in 2023. That was back at 2 o'clock though.
Sunday ticket pricing. I mean, for Thursday night, I was watching football on Amazon. The sports story is a big one. Just sort of break it down for us. Are there clear leaders? I mean, we always think of ESPN, but where are the leaders?
Yeah, that's a good question. We know the subs from ESPN Plus. We don't know exactly how many subscribers YouTube TV is going to get for the NFL package, but just the pricing on it, it's $349 for the year. If you are a YouTube TV subscriber, if you're not, it's $449 for the year. They're currently offering a $100 discount off both packages until June. But that's not a cheap service. So depending on if you had the service previously with or without DirecTV, it's either more expensive or less depending on how you bundled it. But the key takeaway here is that for all the talk of streaming services, bundling or offering more choices when it comes to what consumers want, there's no additional choice here. There's no flexibility. It looks exactly like cable TV. You either take the entire package or you don't get it at all.
And some of those prices, I think you're absolutely right, really expensive. $449 for the season certainly sounds like a lot. I mean, if you got a ticket, 1 or 2 tickets to a game, I mean, you rub that out in a second.
I know, that's true.
If you watch a fight, right, on TV.
But I mean, we were seeing the market react to what the Fed was saying at that time.
What's your order of importance? I don't know what metric you use, but for popularity, I mean, Netflix has got to be in your top 3. Disney's got to be up there.
Very speculative.
What's the order? Give me the order, like in the top 10.
You're basically saying this is a reaction from the minutes.
Right? I mean, your audience is Wall Street, and they should care about what? Free cash
flow. I could see it maybe as a slower drop. This aggressive seems like something that just happened.
In the end, it probably evens out.
I'm trialing over 50 or 60 services at any given time to stay on top of it. But if we think about what's most popular out there from the number of subs, it is Netflix, it is Amazon Prime Video. We know that. It is HBO Max Discovery, which is now going to be called Max. It's definitely Hulu. It's ESPN Plus if you're talking sports. So there's going to be a lot of winners in the space. The real question is, as you asked earlier, is how many of them can actually retain their users, how many of them can grow their subscriber base, and how many of them can increase their average revenue per user per month to where they can become profitable as a business.
Not catching any relief here.
Yeah, so we'll learn a lot more. I'm sure we'll hear more about it on May 23rd as Max comes out and really unveils. What about Netflix and the whole password redo? We were going to get more on that. We didn't really get that, did we?
No, we didn't. This is an interesting one to watch next week. So when their earnings come out, because Netflix said that they were going to roll out password sharing in North America in Q1 of this year. It never came. They did roll it out in Canada and some other countries in Latin America. It was interesting to watch some of the backlash from consumers online. We don't truly know how that impacted their retention, but one wonders if they did not roll it out in North America due to some of the things they're learning from rolling it out in other countries. So I'm very interested to hear what they're going to say in their earnings call next week about what they're thinking about password sharing going forward in their largest market, which is North America.
Yeah, I mean, golf got a really great showing with the Masters this past weekend. People were watching that. So we know sports is still very, very hot. And how about the movie theaters? People are running back. I mean, we heard from Cinemark and AMC. People are back to the movie theaters with Mario Brothers and Air. So the competition will be tough. Dan, we'll have to talk again soon. Dan Rayburn, streaming media analyst. Thanks so much. Still ahead in the second half of our show, luxury retail trends in consumer spending. So, how is inflation hitting the highest income consumers? We'll have that and more. As we head to break, take a look at winners and losers in the S&P 500.
CPI was released this morning before it opened, 8:30. FOMC was at 2. Yeah, spot is just all red candles for the last 20 minutes on the 5. Ability to increase global natural gas supply will not come before 2026. Total Energy CEO Patrick. SMX still hanging out right there. Not wanting to break out yet. That engulfing candle is not great. GFAI, new high on it, 2880, up 73%. Wow. Just this move from VWAP to the high here, 20%. It looks small because it's made such a huge move, but this is a huge move right here. Right here, just 20%. SPY still coming down. GME come down as well, but still above that breakout trend line. Silvergate dropped below 1.5.
In the retail space, Abercrombie & Fitch a downgrade over at Argus. Tell us all about it.
Well, Nicole, Argus downgraded this stock to a hold from a buy, and the company, it really is struggling to keep its margins together, to grow margins in this high inflationary environment as investors, as consumers rather, continue to spend less because of the high inflationary environment, because of other demands on them. And then the company's been dealing with currency headwinds. Now, the cautious consumer is going to continue to weigh on sales growth for the most part. But Argus also cut its 2024 full-year earnings per share view on Abercrombie & Fitch to $1.50 per share from $1.75. But if margins tend to improve and the company resumes its dividend payments, Argus says that it would keep the stock, or return the stock rather, to the firm's buy list. A couple of other analysts weighed in. UBS recently cut its price target on this stock to $28 but maintained a neutral. And overall, according to analysts polled by Capital IQ, Abercrombie has an average rating of a hold, and the price targets range from all the way down at $17 to $35 a share.
All right.
All right,
So
so I
we'll
get
keep
the
an
green
eye on
candle
that
here.
one. And then there's
I think that's
American
gonna go up, I think
Airlines,
it's gonna go
and
down,
really that
but I can guarantee
guidance
it's gonna
is
go
what
right.
spooked folks.
Absolutely, the guidance
Advise what I wanted
made
to do.
these
HKD,
stock
yeah.
or these shares fall, and after that headline inflation print came in a little
HKD
bit
still kinda holding up,
softer,
though.
shares actually continued
Kind of,
to
yeah.
extend that
Down 9,
decline.
but
Now, the company
oddly
is
strong.
expecting the first quarter adjusted earnings per share to be between 1
Not as
cent
quick as a
and
sell-off
5
that we usually
cents,
see, like
and that was
HKD.
versus that prior guidance of actually a break even, and then the consensus there was for 7 cents a share. But the company sees the first quarter
Well, we have
total revenue per
BBBY
available
tomorrow,
seat
so
mile, that's a key
see what
metric
happens
of
with
this
that.
industry, to be up more than
BBY
25%
had that
versus
wick,
last
it
year.
wanted it.
And then American Airlines says that during the first quarter, the company flew about 65 billion total available
Gonna
seat
get it.
miles,
Think it'll
and that'll be
reflame.
9%
29:30
higher
before
than
close.
the first quarter
Dang,
of
we got 15 minutes
2022, and
to
just
CNS
above the
closing.
midpoint of its prior guidance that it had. First quarter total of revenue available per seat mile is expected to be up roughly 3 or roughly 25% as well. And we're looking at an adjusted operating margin of approximately 3.5% in the first quarter.
Right, understood. And we'll watch for Delta Airlines on Thursday. Earnings there to due out, so we'll have a busy week ahead with that. Renita Young, thank you.
Thank you.
Joining me right now, Roxana Islam is with us, Associate Director of
size
Research
up
at
15%.
Vetify. We're watching consumer discretionary stocks because we really want to try and understand the behavior of consumers. We are, of course, seeing volatility in the market overall. What are some of your takeaways thus far?
Yeah, I mean, so for several quarters, we saw that strong U.S. consumer, and we're just now sort of starting to see that soften. But I would say that consumer spending is still relatively resilient, especially in some of those consumer discretionary areas. And it's sort of surprising when you think about it, because we do have higher food prices, we have higher housing prices, but we're still seeing some increased spending in areas like cosmetics and personal care and luxury goods. So I think inflation is a part of it, certainly, but I think a lot of it also has to do, with how we consume items and how our behavior has been changed by internet and social media. So overall, I think now U.S. consumers have this strong willingness to spend, and we're finding different ways to do it throughout economic cycles.
Very short term though. So.
Right, understood. So at this point now, are we seeing that people are trading down, or is it just that the upper echelons are still shopping like crazy? I mean, where's the disconnect?
We might start yelling again.
Right. So I think there's a huge difference between the different types of consumers. So you have the more price sensitive, maybe lower income consumers who
from the lows
are probably cutting back on spending, and those consumers are probably spending more time researching discounts, deals online.
And gotten an ad gas
even if they don't buy those products, that is a benefit for a lot of these internet and e-commerce companies that generate ad revenue and revenue through web traffic. And they're also looking for more creative ways to spend besides cash, using things like credit card points or buy now, pay later, which has increased significantly over the past couple of years. And then when you look at the higher income consumer, obviously those consumers maintain spending throughout economic cycles, including on luxury goods. And we're sort of seeing that, results in the stocks. When you look at some of these luxury good segments, which are rather qualitative, but, they include those stocks like Louis Vuitton and Hermes and Mercedes-Benz. If you look at the S&P 500 global index for luxury goods, that's up 17% year to date. And so that's outperformed, a lot of the other consumer discretionary sectors.
I've been in and out of BBY multiple times.
LVMH, for instance, report earnings a couple of hours ago, and fashions and leather goods segment was up
feels like a
18% versus I think about 10% expectations. So that was a significant beat. You're also seeing a pretty healthy M&A environment, with a few big deals in the past few months. I mean, we had Estee Lauder and Tom Ford in November, and then more recently, just a few days ago, we had L'Oreal announce its acquisition of Aesop. And then, revenge travel is also very much still a thing, and that not only benefits those travel stocks, that also benefits this tourism in areas like Asia or Europe, which have been slower to reopen than parts of the U.S. And then I also want to mention some of the luxury cars, because, those have seen an increase in sales in 2022, particularly ones like, Aston Martin and Porsche. And what's really interesting is Aston Martin actually mentioned that TikTok usage has delivered 70% increase in video views. So that sort of demonstrates just how differently, the retail and advertising market has changed over the past couple of years. And then one more little segment I want to mention for consumers. I think this is sort of that middle income range that looks at these, what I call luxury light items. And I would put items like Starbucks and Lululemon and Nike in that category. And so these items are typically at lower price points, but they have strong brand identity. So I think they're more likely to survive throughout these economic cycles because people may be less likely to give them up unless absolutely necessary. And a lot of these products, they use social media and influencer culture to, as a cost-effective way of marketing, sort of like what I mentioned with Aston Martin. And they really use like influencers and local studios to create that brand awareness for their product.
Right, understood. You mentioned the luxury light. You have one ETF that you looked at, the millennial sort of based one, because names like Starbucks, Nike, Apple would fall into that. There's no real luxury ETF, but you had a few ETFs that you thought our viewers would benefit learning a little bit about them. MILN probably goes into that habits of the millennials, right? Or you tell me, which ones are you focusing on today?
Yeah, so I mean, broadly consumer discretionary ETFs have been performing pretty well this year. You have XLY, which is the Spider Select Consumer Discretionary ETF, and that's up year to date around 13% versus its consumer staples counterpart, which is up maybe 1.5% year to date. And then you also have some of these e-commerce retail ETFs like ISHP and BBBY, and those benefit from those e-commerce trends I mentioned earlier with the more price-sensitive consumers. And then on that luxury goods side, yes, like you mentioned, there's no luxury goods ETFs, especially in the U.S. And a lot of that probably has to do with the fact that a lot of these are foreign companies in Europe and Asia. But we do have MILN, which is the Global X Millennial Consumer ETF. It focuses on those millennial habits, and they're very much focused on social media and internet, and you have those luxury light holdings
pulled
like
an audible though
Starbucks,
with
Nike, and
SMX.
Apple. Then I also want to mention JRNY, which is the
New low there.
Alps Global Travel Beneficiaries ETF.
The other ones I wanted,
And that one's a little bit
Fubo.
interesting because it not only holds those stocks that
Fubo, I
benefit
think-
from
I'm not
revenge
sure, has that
travel, like those
engulfing now.
airlines and the resorts and the
GTI
hotels,
actually looked
but it
good.
also holds
Wish
a
I could've
lot
gotten
of
filled there.
luxury items like
20%
Louis
just
Vuitton and Estee Lauder, for instance.
Buy dumping.
Right. All
It
right.
loves the day.
You got us covered here. That was good stuff. Roxana, thank you so much, particularly on the retail sales on Friday. It shows us
BBY
where
new
people
lows.
are spending in there, some of
Yes.
their behaviors. Roxana Islam,
28.74.
thank
Whoa,
you.
getting a little
Associate
volatile
Director
here.
of Research at Vetify, and you got to see all of those ETFs. that go
50,000
with each
order
part of
there.
that. Still ahead, our panel is ready to discuss, turn our attention to energy. So we're looking at the energy sector. We're looking at gasoline prices for the summer driving season. We'll find out what the experts think next.
OEV kind of on a tear here, up 16%. GFAI hanging out at its highs of the day. BBBY, that's 3 B's, 1 Y. 29.30, reclaim it. Divergence here on the RSI. All that today from yesterday though, it still has me bullish, but gas moving up a little bit. SI below 150, down 5.5. SPY melting down here further. Minutes to power hour. Lies just made 2 round trips. Up, down, up, down. Green candle there. That level we drew. 408.68. Bed Bath, little green. GFAI kind of moving more up to the upside, 77% now, 29.77. $30.35 really. Now all SMX has to do is announce something with AI. Next hype catalyst.
Time.
Yeah, no, that's a great question. Thanks for having me. You know, our view is that the remainder of 2023 stands to be a pretty good environment for crude oil pricing and of course for gasoline as well. You know, if you consider the fact that the OPEC Plus recent announcement by OPEC Plus to curtail production will limit supplies, there's a good reason to believe that oil will trade on the upper end of the $80 to $100 barrel range throughout the end of the year. And if the early read on vehicle miles traveled, which is typically the metric we look at to assess driver demand for transportation fuel, so far this year we're getting off to a good start. If we could continue to see a trend year over year, an increase in the vehicle miles traveled, we would expect to see gasoline prices move from their current level at $3.60 a gallon. That's the AAA retail average on a national basis. I could easily see it track towards the $4.50 per gallon price range by the summertime, which would still be below where we were last year, but a significant uptick from where we are today.
Right, and while we might expect some volatility, some of the names that you like here, Ben, Exxon, EOG, and Cheniere. Quick thoughts on that?
Yeah, each of those companies has, obviously a benefit to or a participation in the upside to the commodity crude oil and refined products for Exxon. We think that EOG will benefit from firmer crude oil pricing throughout the end of the year. LNG, obviously, Cheniere Energy is the country's largest exporter of natural gas in LNG form. Throughout the world, the U.S. is playing an increasing role in supplying natural gas in liquefied form to Western Europe by constraints and the reduced volumes coming from Russia. Each of those companies has very strong balance sheets. They have a good track record of repaying debt over the last several years amidst the commodity strength we've seen. And we've seen a decent amount of share repurchasing from each of those companies as well. We would expect that to continue through the end of the year.
Yeah, okay. Thank you for that. Bob, we already got an EIA. We're waiting on some more IEA monthly outlooks, OPEC, and we'll get some more of that in the next few days. Which names do you like or are best positioned based on what you think we might hear?
Well, I think the Exxon announcement, or the rumor, or the fact that they're having talks with PXD, with Pioneer, puts Pioneer in a pretty good position to take advantage of the upside here. Pioneer is a 10% dividend, so it has that going in its favor also. So that's definitely going to be a name that's going to be under the microscope here, waiting for that headline to hit the tape that they have the green light and it's a go. So that's going to be bid. I would also suggest that Chevron's not going to sit around idly and wait for something to happen. They are probably thinking about picking up somebody also. So that leaves basically the independent producer at XLE on the table as far as I'm concerned. That announcement could come also. I would expect them to be interested in increasing their profile in the Permian Basin, just as Exxon is doing, and that could be a live trade also.
Thank you both, Ben and Bob. I appreciate it. Ben Cook, Robert Yager, thank you. Good to see you. And thanks for being with me, friends. We are seeing the Dow holding on to a slight gain of about 30 points. We got you covered here. Keep it right here. Market on Close with Oliver Rennick is next.
Are they diluting again? Was there more dilution coming in all those filings? Yep. I thought about getting out at the pump. Extended hours. Didn't have much of a pump though. It was all after hours yesterday. I had one pre-market I was gonna jump out, but it just sold off into pre-market. If we don't get a close over 29.30, probably selling after hours or pre-market on a rally. Get it. SMX looks like it's about to break out. Alright, it's 3 o'clock.
Morning gains back. So, morning pop on inflation. Lighter than expected, but still very high levels at CPI 5%. Market gives that up, comes down, then we rally into FOMC, and now we're fading back down. Bitcoin telling you that risk is a little bit off right now, lowered by 80 bips. Still sitting basically smack on 30, so it's not quite a breakthrough just yet of that key level. But it certainly is feeling pretty cozy there. Not a whole lot of volatility. Dollar's down 70 bips, and that's where the fade in stocks gets interesting. Remember, one of the most important things this year is the relationship between stocks and bonds, and then bonds and the dollar. Here's a quick cheat sheet. In 2022, yields and the dollar moved together. Stocks moved inverse to both of those. However, this year, things have changed a little bit. The dollar has drifted away from yields as we got new lows for the 10-year yield on the year without new lows in the dollar. And these bond rallies haven't been quite as bullish for stocks as they were in moments past. Now, generally, yes, as the yield has gone down, stocks have had a nice rally, of course. But there's been a lot of days like today where you can see the strength in bonds and weakness in stocks. So the 10-year futures right now are up 30 bips. Okay, we're still sitting near the highs of the year, obviously. That means the low for yield. So I know I'm kind of using yield and price here, but the point is up in price for bond today and this year, but no real extra oomph for stocks, even with treasuries firm on the day. So the relationships last year that were very bond dependent, yields up, stocks go down, it's starting to fragment a little bit here. And if that continues, which it is a little bit today, then I think it tells us this is a market that is not just processing inflation, but also very worried about a slowdown in the economy and the notion that a slowdown in inflation means a slowdown in the economy. The two do kind of go hand in hand. And so with the 10-year yield down today and bonds bid, prices higher, stocks fading, we're really seeing that maybe there are some limits to the degree to which bonds can create a stock rally. The knee-jerk response of investors the last couple years has been to trade stocks in the opposite direction of the 10-year treasury yield. But now we're seeing more evidence on days like today, important days like today, that it doesn't quite work like that. Now, granted, we had a bond auction today that was a little bit soft, and so yields went up and price came down, but we largely recovered it. And so with bonds still firm and the dollar down sizably, you would think if last year's relationships still applied, that stocks would be having a great day. They tried, but they failed, and they're not. There's some hangups here, namely the airlines and the travel space, which has been lackluster despite the recovery. Also the notion that when you see momentum stocks higher, the MTUM ETF today is up 30 bips, it's actually a bit of a different cohort of sectors now. There's a lot of healthcare in there. There's energy, health services, banks are actually the top sectors.
Probably going to retest the low there, 408.23 is the wick this morning.
Some of last year's winners in an
BBY
ETF
has not bounced out of this
long periods of time to determine momentum.
New low,
the reason I think that's important is because we saw inflation cooling off a bit, but still very elevated. And if inflation is going to stay elevated, then we're going to see energy prices remain buoyant. We're going to see investors perhaps find some interest in some of last year's sector winners like healthcare and like energy. And so today, while the overall stock market is red, the stuff that's actually working is a little bit more inflation related. All right, so it's a little
new low on
convoluted,
BBBY.
But at this point,
new all-time
we have
low.
inflation as a problem. It's 5%. That's not good. At least it's cooling off a little bit. But because that cool down is coming from a slowdown in the economy too, it's not just inflation we have to worry about, it's growth. And it's the economy we have to worry about. The market's trying to balance all of this right now, and it's getting very confusing. Because if the economy does slow down enough, there's a possibility that the Fed maybe will slow down their hikes, maybe even pause and cut. But there still is a huge, huge gap between what the bond market and what a lot of investors are saying and what the Fed is actually saying. And once again, we see that reiterated in the minutes from today, where there's really no eagerness to switch the direction they're going in with interest rate hikes. I mean, even if they do pause, that's not the same as cuts because the tightening is already in the system and interest rates are elevated. As long as they stay there, they will continue to drain liquidity from the economy instead of supporting it like during COVID and other periods of stimulus. So a lot of these charts that we've been watching for major regime changes are still in a period of flux. And I think that really shows that Bitcoin's stuck at 30. If that thing breaks through and the dollar makes the new year-to-date low, then you can be pretty sure that this is a major risk-on move. But we just can't quite seem to seal the deal on it yet. Dollar's down, but it's still holding the year-to-date lows. Bitcoin's flirting with 30 like it wants to move, but we just can't seem to find the right combination of economic growth and inflation.
I don't know what's going on behind the
scenes. They're just buying bonds, and they're not that interested in stocks right now. Let's bring in Kevin Hanks and Renita Young here with me this afternoon. What do you make of the action here, Kev? I mean, it's complicated, and it's hard to kind of keep all these ideas separate.
But
you have the inflation risk, which maybe is cooling like we see in the numbers, but it's still a problem. And then we've got the economic risk that's happening as the employment data start to soften. But it looks like the Fed isn't too bothered by that. So what's the most important thing driving the action right now?
It's 30. Oh, GME.
It's interesting, Oliver. Everyone is kind of trying, at least, to stay in their lane.
New low
Fed's
on
working on
BBBY.
inflation.
Wow.
Regional banks are working on getting healthy.
Lows.
The rest of the economy is trying to keep growing jobs. With,
yesterday, we'll see. Yesterday
jobs
could have just
moving
been
from
one of those
large cap
green
tech
candles
to
in the
leisure
midst
and
of a downtrend.
hospitality. There's a lot of moving pieces here, but what did we learn from the Fed minutes today? We didn't learn anything new. The Fed got a presentation on SVB and what that would mean to the economy. They think that'll slow the economy enough to cause a second half of the year recession. I think that's you're seeing that in the bond market. We'll see if that comes to fruition the second half of the year. I think right now the Fed is still at work on inflation. You and I talked early this morning
before it had to get over 30 for it to get
up
squeezy.
About 0.5 to 5/8% in the S&Ps.
I don't know.
And we said this number wasn't that great, so for the market to rally. So sure enough, the market failed right after the open this morning and to hold its gains. Now it's trying to figure out how they're doing on inflation. Doing pretty well, big move in the headline number, not so much for core. And as you know, Oliver, the Fed looks at core. And so they're staying on point. They're not wavering off anything. Austin Goolsbee is the exception to the rule. He came out a little dovish, but everyone else has been on topic. This is still a fight against inflation. And we'll see. May 2nd and 3rd will probably, I don't know for sure, but it seems like they want to go one more time and then stop, Oliver.
Yeah, what's with all this dovish talk from Goolsbee? I thought that Chicagoans were supposed to have thick skin.
Who's the new guy?
Who's the new
Probably
guy?
Not today.
Right? Okay, so, and I think that maybe a little pat on our backs from this morning's assessment is correct, Kevin. As you and I said, that when we looked at futures, it was like, all right, what number are they getting so excited about here? I thought the last 6 months was about inflation lightly softening. There was no big decline here. I don't know how all this stuff isn't priced in already. So, Renita, when we look at what's dragging, though, there actually is some specific stuff we can put some blame on, namely the airlines, with Americans' update on some fundamentals seemingly dragging the whole group.
Yes, because of that, Americans down. And it's interesting to note that it extended declines after that print came out a little bit further. Now it's down more than 9% on the day. We'll see. Right. You know, before this, earlier this morning, it was down just around 4%, maybe 5%. But American Airlines also saw a downgrade at Argus. And American Airlines, first off, it sees the first quarter earnings per share at between 1 cent and 5 cents versus that prior guidance of a break even. The consensus estimate was 7 cents. And American Airlines also sees the first quarter total revenue per available seat mile up more than 25% versus last year. And that during the first quarter, the company is expecting to have flown 65 billion total available seat miles. That's 9.2% higher than the first quarter of 2022 and just above the midpoint of the guidance, the prior guidance of between 8 and 10%. And so the company is also expecting to report an adjusted operating margin of approximately 3.5% in the first quarter. And the midpoint, that's at the midpoint of its previous guidance. But we do see another airline down today, Delta Airlines. Those earnings come out tomorrow. Shares are down. Analysts are expecting adjusted earnings per share of 31 cents on revenue of $12.77 billion. And that would be below last quarter's estimate of the earnings per share, yet above, well, far above the earnings per share of a year ago.
So that's what's to me a bit troubling is the progress made from a year ago is very clear. These airlines are just charging us out the nose, but it seems like it still is not enough to satisfy the market. And if the airlines, which are in a kind of true state of recovery, aren't impressing investors, then I'm not sure which stocks tied to the economy they're going to go for.
A's.
Because,
Thanks,
I mean,
man.
we're like in the midst of extreme travel revenge.
Yeah, revenge travel.
That Lurker got it.
But maybe they'll go to the retail stocks, you know. We've seen some bounce in there. We did. We talked Five Below, discount. Maybe they'll go to the grocery stores. Maybe they'll go to the big box stores. I don't know.
They've been doing okay.
One thing who knows if they'll go to the banks or not, right? That's the other thing that I'm going to talk about because Warren Buffett was talking about this on CNBC earlier today. And so he says that more bank failures are possible. They're likely. But the depositors will be safe. And he says because he's willing to even bet that no depositors will lose their money in the next year or so in this situation. Now, he did sell U.S. Bank Corp as well as Wells Fargo, Goldman Sachs, and J.P. Morgan. But he said that troubled bank stocks are not value stocks. He warns against that being touted as a value investment right now. And he says it's because shareholders are not going to be made whole if they lose their money. Because that's a risk that they're taking, right? Even if the government protects depositors, shareholders are not going to be saved. And he pretty much says that these stocks will not translate into a steal. They'll translate into a risk, as buying stocks always translates into a risk, right? But he says that this sentiment doesn't really reflect his critique on the management of any of these banks, but it's more so his cooling sentiment on the bank sector overall, right? But he did choose to keep Bank of America, and there's a reason why. Now, he said very coyly on the interview that, I like Brian Moynihan. I like him a lot, right? I just don't want to sell it. It's because this company made him a lot of money. You know, back when Bank of America was recovering from the global financial crisis in 2011, he made a $5 billion bet on the company that has since then paid him about 7 times over. So that might be a good idea to hold on to that investment.
What do you think of this notion, Kevin, that banks here might be a deal, but if you're not in the right specific ones, you might be digging through the discount
if we don't close above 230,
at Walmart picking up a movie that's no good, the $4.99 deal.
Yeah, you
even
see
though,
the
price action wise, it still could be a
migration of money out of some of these smaller banks into the big banks. I still feel, Oliver, that the large banks are safe and well capitalized. And
price action wise, it looks like it's flattening.
Michael Barr that said that, right? He was in charge. He's the vice chair of supervision. Yep. Michael Barr. He said large banks are, his quote, sound and resilient was his quote. So I think the large banks are okay. Remember, banks fail all the time. You know, the smaller regional banks. That's not anything new to the markets. That, you know, anywhere from 5 to more than that fail every year on average. But the large banks, and he mentioned, Renita's right, he mentioned Bank of America specifically. I think it was just, you know, he still owns, I believe the number is a billion
very
shares
weak in these lows,
of Bank of America. Not $1 billion, a billion
that next
shares
level I have here,
of Bank of America. So he's still got a large position. It might just be him kind of reducing his risk to one rather than many. But yeah, Warren Buffett was very transparent about he thinks there's risk in banks, except he did
really
say,
the next kind of major level.
like Renita just mentioned, he does like Bank of
we get there
America,
today,
including the management team.
Okay.
Very
Kevin, I
weak.
want to just start real quick
Very
on the
flushy.
airline sell-off too. To me, this is a little bit troubling because generally the stuff that's been powering the market's strength has been the tech that investors have been almost trading like a safety trade in a way. So if airlines aren't working, then what connected to the economy will? I mean, you look around, what's functioning, what's working, who has the pricing power? It's
I'm surprised to see they have like 20 million rewards members. That's insane.
Here's the thing about that we talked about today on Fast Market, Oliver. It was you can't judge the rest of the airline group like Delta off of American Airlines. Two different companies, one run extremely well by Ed Bastian and Delta, one kind of a sloppy balance sheet, not a great customer service record. It graded the lowest on like Folio's data. So the question that we brought up was, don't judge Delta based on a pre-announcement by American. They sold off the whole sector today. That might not be the case, Oliver. Some are better than others, as you know.
Okay. All right. Good stuff, guys. Thanks, Renita and Kevin, taking us through some of the moves in today's market. With
We're going to go all in at 10
focus
cents.
here, the airlines not working. The banks have actually been all right, regionals at least, but the market's getting progressively worse as we head into the closing bell. Danny Kirsch is with us, head of options at Piper Sandler. Danny, as someone who early put the regional bank short trade on our radar, I'm just kind of curious quickly before we talk about some of the big international themes that are on your mind. Do you think there's any, dip buying viability here in the financials?
I don't think so. I mean, the only trade that we've been seeing and that we've been doing there is a little bit of selling some KRE calls to finance XLF calls.
Ooh, look at that
just the thought process is that KRE is the small regional bank ETF. The implied volatility is super high. So in the event that KRE actually does rally, which, I just listened to the earlier segment, it sounds like Buffett's not even buying into this. Volatility would come down a lot. So if you buy a KRE call, my guess is if you buy like a 25 delta call, it's not going to perform like a 25 delta call. Meaning if we go up $1 in KRE, you should make 25 cents. My guess is you make 10 cents because implied volatility will drop. So we like using KRE upside to fund an XLF where the larger banks seem to be in a better position.
I don't know if it's what
they're not having that deposit flight that
you should probably sell
the regional banks are. And again, going back to Buffett, like he does own a lot of Bank of America. We at Piper think the larger banks should outperform, and a way to set up that trade is just selling some KRE calls to buy XLF calls. I think that's a much better way to play this if you want to get into the into like the long banking trade, which it just seems like it's probably not going to work in the near term.
Got it. Okay, so implied vols still not in your favor as a trader, which is kind of the options equivalent of it being a crowded trade, right? It's just expensive after everything that happened.
First shoulder.
Exactly. I think people are afraid to kind of get their, to buy like an FRC. They're afraid to go buy that stock.
Call it first
so
shoulder.
Instead of doing that, I'll buy some call options, and if it rallies, I'll make money. But what's happening is that even if these stocks rally a little bit, the implied volatility just comes down, and you don't make any money on your calls. Like these are.
I'm never trying to trade on a first shoulder.
Right. If you really are dying to own these stocks, you can buy stock and sell calls against it. I just think like
the BBBY is kind of
owning upside
now,
in these regional banks right now is a bad trade. And I think you'll lose money if they rally. You'll underperform your delta, and you're just better off. I would say selling calls against longs if you want to be involved, if anything.
Flush there.
Okay. And you're looking at international stocks, emerging markets, China-related companies. Why is that?
Yeah, so we're seeing this today. The dollar continues to weaken. I think that there's this dream and perhaps inflation is topping out, or perhaps rates in the U.S. are near their peak. So it was a way to, what we're starting to look at is where could there be upside? Where could there be surprises to the upside? Our expectation is the U.S. will continue to struggle, but with a weaker dollar and the China reopening trade sort of playing out,
engulfing candle yesterday.
You're seeing Brazil yesterday. The CPI came in lighter than expected, and in fact, CPI in Brazil is lower than the U.S., which is crazy on a year-over-year basis. So as a trade that's no longer as crowded, we like buying emerging market or even China upside, EM or FXI calls to play for upside there on a weaker dollar and perhaps global growth outperforming U.S. growth, or EM growth outperforming U.S. growth, and the dollar continuing to weaken. Which,
above that.
If I would have told you that Brazil inflation is lower than U.S., you would have said unbelievable. But it's kind of been that way for a little bit. And the other thing, to start the year, a very crowded trade, and what we often see is that banks pitch long emerging markets and long China in December and January because every single year they underperform. So you have this buy-in to start the year, let's buy our calls, let's buy stock, and then in January EM outperforms a little bit, and then everyone dumps their options. And that's what that chart is showing. It's just the EM and FXI call open interest. So it was super high to start the year, and then it stopped working and everyone got out. My view is that EM and China are just less crowded than they were. People have sort of given up. When people give up and they're less crowded, you don't have stock rallies, everyone sell their calls, my options won't work. In fact, now I think there's an opportunity where stock rallies, you might actually have a little bit of a chase where people realize, oh, maybe U.S. isn't that interesting. You see today, inflation came in a little light and we're giving back all the gains. Like, this market in the U.S. feels fully valued. It's certainly trading like that. Where we see a little bit more upside is in EM or China. And at the same time, implied volatility is super low. You can buy 3-month EM calls for I was looking at I think it's like the 45 strike calls for 30 cents and stocks around 41 or 40. Like, these are very cheap ways to play for upside in an area of the market that right now is a little bit underinvested.
Okay, so the open interest coming off after that early bid to start the year, trade gets a little bit less crowded, and that shows up in the implied vols as well. We got a chart looking at that, the 3-month IV
right on that level,
for EM
right on that
and
line.
FXI. They both generally kind of move together as one for the most part. It seems like that, but with the exception that maybe FXI kind of trades generally.
BBY is going to go negative.
Yeah, the volatility is a little bit higher in China because you have that. There's a little more risk, obviously. It's a little less diversified. It's just China. EM has China, but has exposure to Brazil, has a little bit of Singapore, Thailand, some Mexico. So EM's just a broader way to play it, and the volatility is much lower because it's more diverse. And the option, so that's this chart of 3-month implied vol. Blue is EM, FXI is black, so it's a little higher. EM calls are just incredibly cheap. If you're looking for upside on something that could surprise, I think it's EM. I mean, FXI is fine too, because that's where you get like these massive moves where there's a certain policy shift, or Blinken goes to China, or there's any sort of good news gets China to rip. But EM, as you can see, it's like you're buying implied volatility at multi-year lows. Okay. And with that backdrop, it's like I wouldn't necessarily buy EM stock, but I'd buy calls. Like, that seems to be a good place to sort of hang out and play for a surprise to the upside.
Yeah, seems like a pretty compelling case from the options, technicals, and maybe a little fundamental backing for it too. Last visual I want to pull up just kind of shows that of all the economies, it seems like China's still fairly stimulative. Even though maybe that could be waning a bit here.
Yeah, I mean, and then there's also still the reopen trade is sort of playing out, but China is not suffering from the same type of inflation the U.S. is, or at least the numbers they're reporting are not as are pointing to less inflation. Perhaps some of that's due to stockpiling oil while they were doing their lockdowns. But at the same time, China is trying to stimulate, and they're trying to get the consumer to spend, and that's how these stocks could outperform. The consumer is sitting on a ton of savings because of during COVID, and at the same time, the government is pushing to spend while cutting some of the tail a little bit on the real estate side. They're letting things default to some extent, but not letting a massive wave. So, I just think this is an area where you're seeing fiscal stimulus, you're seeing some monetary stimulus, and you're not really getting that anywhere else because all these other developed countries are dealing with massive inflation, and it's just sort of a problem. So China could be like a surprise, a stealth sort of play where they're stimulating when everyone else is sort of retrenching. And if any of the geopolitical news brightens up a little bit, there's just so much torque in owning China and owning emerging markets. And, you know, this is what we're seeing here is the opposite of what we're seeing in the U.S. U.S. is trying to pull back fiscal stimulus. We're tightening on the monetary side. That's how this trade can work. And that's actually how you see the yuan sort of strengthen, again, the dollar weaken.
All right. Interesting stuff. A little outside the beaten path here, looking at the EEM and FXI options. Appreciate it. Danielle has given us some good ideas to mull over. Head of options at Piper Sandler. All right, when we come back, we're going to have a conversation about the macro implications from today as stocks start to fade and whether or not good old safe dividend-paying companies might just win out again this year after all. So far, it's been all about tech. It's been all about the growth themes. But is that running out of steam?
I'll make friends along the way. I don't know why Nat Gas been barcoding. That's like an hour. Weird. Holy crap, GFAI kept going 32. It's up 94%. It's definitely hitting that 35. Wow. This move, just if you just bought at the VWAP test, you have 36 on that. Crazy. Get GME though. Still bouncing out of that channel. Using it as support. It's very strong, very bullish. Buy new low of the day, flushing through there. BBBY consolidating down here now. Wow. Oh, making a comeback today. Might be a nice entry. Good volume. Hammer candle, inside bar. Maybe. Buy flushing down here. Jimmy's following it a little bit, but doesn't have to. What's up, Mark? I mean, it's just showing relative strength, so any little buying on SPY, and you're seeing it exaggerate on GME, and he's selling on SPY, just seeing a lot less of it. Double bottom GME? Yeah, from earlier today. Yep, and still respecting this trend line. Meta and Nvidia puts, that's probably true. But we still have PPI tomorrow. I won't jump the gun on stuff. Market just as easily flip bullish as we saw today twice. The gap up, then the rally midday. But I do like it. You have a very subtle divergence there on the RSI. MACD's bearish. I like the Tesla short too. Big engulfing candle today. Bearish MACD. Right under that 9. Meta, you're a little bit earlier on. You have an RSI divergence, but the price action is still so bullish. Be more comfortable with NVIDIA. Probably more comfortable with BBBY puts.
Significantly when we get to that second half. Very good point. Now, when it comes to the strategies that have been working in this kind of shifting inflation environment where things have cooled down, everybody's piled into tech. They've piled into growth stuff now for the better part of basically 6 months since the October low, but really the last quarter has been pretty intense.
30
this kind
minutes
of
for bed
pivot
bath.
away from the inflation assets of last year.
29.30.
Energy, some of the healthcare trades, safety stuff, dividend payers. Does that mean maybe as we move towards some of those more difficult comparables, people will go, actually, you know what, I do kind of want to own some of that stuff from last year?
Yeah, I agree. I think what we saw early on this year was effectively a junk rally. You saw things that were more volatile, that were lower quality, do really well. Part of that is a bounce off of what happened last year where
GFAI at 100%.
Low volatility, high quality did really well. But as, both in an environment where growth tends to underperform, or we end up in an economic slowdown or a recessionary environment, we expect low volatility, value, quality from a factor perspective, all those to do well, as well as depending on the unknowns that we see from an inflation environment, from a monetary policy environment.
Well, shareholders aren't
that's
the ones
all going to
diluting.
drive what we see in the second half.
Let's talk about
diluting
strategy
the company, it's
QLV.
not
Right now, it's pretty close to the 52-week highs, so investors haven't
We're not choosing
bailed too hard
bouncing.
on a strategy that is kind of targeting that theme that was outperforming last year, right? Walk me through what goes into this. How do you know what's going to be on the low vol
SI with a
factor?
big rip. Looky,
do you have to have a generally kind of interest rate sensitive macro view to define low vol in this environment?
No, I think that's a great point. From our standpoint, the key thing that we pair low volatility with is financial health or quality. We find that the poorest quality companies tend to be the most volatile, but it also helps you in upward surprising environments, that it gives you a little bit more of that upside capture by having high quality names. I think the other thing that you want to be aware of is to be as sector neutral as possible. So obviously when you think of low volatility, a lot of strategies focus on utilities, consumer staples. We're able to do a low volatility approach, focus on quality, and be sector neutral. Our largest sector exposure is in technology. We do have that healthcare exposure and financial exposure as well. But really that has allowed us to be very fluid this year, as well as do well last year when low volatility did very well.
The expectations right now for investors, what should they be when they go for a fund that is targeting low vol, but also still equity asset class? Is it a story of outperformance, or can you actually make money? Is it about losing less, or is it about making money?
And I think the losing less portion is a key portion of total return over the full cycle.
Okay.
So overall, what we see with low volatility is what I would call asymmetric returns. So you still participate in that upside, but you're getting that protection on the downside as well. So it gives you that good performance in all environments, and you're still participating. I think that's the alternative when you talk about it from an investor standpoint. When you're moving from equities to fixed income, you're taking that capital appreciation potential off the table. And so being in low volatility allows you to participate in equity markets. So to put that in context of a 60-40 portfolio, over the last 20 years, the volatility of a 60-40 portfolio has been about 10% on a standard deviation basis. Recently, we've seen that creep up to 15%, so a 50% increase in that volatility. Now, normally you'd say, okay, well, let me remove equity exposure from there and load up on fixed income. With low volatility, you could reduce that standard deviation in a way that, from a risk budget standpoint, you're still able to maintain your equity exposure, but doing it in a way that still reduces your risk from that standpoint.
I like that point. I also like a point that I just want to bring up from your analysis that points out the outflows from ESG-type related funds might suggest 41%. The market kind of getting a little bit more mature in a way, reflecting the rise of true kind of quality. How do you balance that with another one of your strategies, which is more about income, RAVI? Just real fast, what's the trade-off between low vol and actually earning an income and a dividend? I would guess plays a role here.
Yeah, and I think the attractiveness of the ultra-short space where Ravi sits is that you're seeing actually flows come from two areas. One, you're seeing people who had to stretch for income for so long that had to play in the dividend space or the high yield space to earn income into their portfolio to have that passive income to live on. They're now able to do that with fixed income again.
I don't know what else
you're talking about. A rate of 5.5% or on an ultra short portfolio is very attractive, compared to where your savings rate is. So the other side is people are moving money out of savings, as we're seeing in the bank sector. So if your savings deposit rate is, 5 basis points, 10 basis points, 0.1%. 4.5%, 5.5% in an ultra short fund is very attractive for stepping up just a little bit more in a risk standpoint. So that's where you're seeing, we've seen flows since the Fed started raising rates of $58 billion into the ultra short space, a third of that coming in the last 2 months.
Wow, okay. Yields plunging here, so that certainly gives an even greater appeal to getting 4+. Chris, great convo. Really appreciate it.
Pleasure. Thanks for having me.
Thank you, Chris Humer, Senior Investment Strategist at FlexShares Exchange Traded Funds at Northern Trust Asset Management. All right, with a couple ETF ideas to try and avoid the carnage if it comes back to markets. It's not carnage today, but we are under some pressure there. QLV and RAVI. Let's talk SPX when we return, as we are now red across the board. Got some options trades targeting the consumer and shopping. Be right back.
SI green, 1.23%. Look at you. Wow. Yeah, let's say it's going to a quarter. Certainly does. I mean, if we get a bounce up here, we don't get engulfing, that's good, but there's way too much time and candles. Too much going on down here. Even if we do get that bounce. Jeez. Worse is the spring test. Very well could be. I mean, yesterday you can't take that away. We still have yesterday. Love all those signals that are bullish. You know what, bounce at 26. It'll get front run. That's true.
Story of Shopify's price action today. A big pop early on after some positive notes out, but it faded, Tom. What's the trade you saw here?
Yeah, everything faded in the overall market.
True.
That's why this thing's pulled back after that upgrade out of JMP Securities today. $65 price target, but a lot of call buyers in there. Calling up volumes about 5 times normal daily average volume that we've seen in there over the last 5 trading sessions. One of the trades that stuck out to me in here was in April 14th. So really short-term positioning here. Only 2 days till expiration. Bought over 15,000 of the 48 strike calls.
I think
average
really
debit of only 40 cents, so they're not paying a lot of option premium because there's not much time until expiration
really mitigated
on
rallies.
So that break even of 48.40 to the upside
times, but I think
over
it's done
the
much
next
more
2
harm than
days.
good.
That's only about 6% above the current share price in Shopify. So a lot of call buyers here in this name. Stock's up about 26% so far this year, and somebody's
stocks that
thinking
feel like they're
that
manipulated,
before the end of the week comes around, we're going to see some more gains for the stock.
All right.
Actually, even GMS
so they're hanging on to the note out this morning
this thing
that
didn't have
put
options.
it back to the buy with a $65
didn't
price
have options
target.
to like the high.
I mean, they're only looking for this thing to get back to 48, so
like
it's a bullish trade, but
somewhere
the
along here
analyst was
got
a lot more
options,
bullish
and it's
than
pretty much just been downhill.
Definitely, and typically when you see an upgrade on a stock like this, you'll start to see some flows in there, especially in the near-term options that expire. I think some of the volumes here on expirations that expire within a day to maybe 3 days are picking up the pace of volumes across the board in the option market.
All right, bullish Shopify. You've got something kind of bullish maybe in Target.
Yeah.
Getting walloped today, down 3.5%. Any reason why?
SMX down a little bit.
But there was some key commentary
okay, it's
out there.
Come down
Demand
now.
is
Got a red
starting to wane
red into the 9 moving average.
Go, right? And that
Probably
was
moved back
key
to
takeaway
VWAP.
from CPI. And then when the Fed governors came out and was stated that, hey, we still have to get to that 2% inflation risk. But he's seeing signs of slowdown in the purchasing power. Also, some credit card analytics today saw a decrease for the first time since 2021 as far as spending goes. So maybe that's a concern and why you're seeing some of the retailers down today.
Whoa, look at that flush.
I think a trader just taking this neutral to bullish stance in here as far as unusual option activity because they were selling some downside puts all the way out in the June cycle.
That's illiquid.
So about 65 days till expiration. They just sold about 10,000 of the June
I didn't even
140
look at the
strike
spread.
puts for a credit
That's
of 170.
disgusting.
So the break even for this trader where they start getting hurt
that
is
literally was
below
from my
that
sell. I sold at
138.30 level over the next 2 months. That's 16% below the current share price.
That's me
so
right
it's
there.
not an aggressive bullish type of strategy. But just playing the fact that, hey, the stock's pulling back today. It's only up about 10, 11% so far this year, but I don't think it's going to go down
I should have looked at that spread.
And the trader thinks he's just going to keep that option premium that he sold, but he's got to wait 2 months for it.
This thing is so liquid.
So a little patient trader here. Okay.
Ruining the stock. I literally did that
whole. Not going to get crushed.
I didn't notice the spread. Oh my gosh, it's huge. It's just defaults.
WBD, baby. We got a new season coming out.
Just defaults to the low, I guess.
5 years, a new show.
A new show.
That is sketchy,
Dunkin'
man.
Egg, baby.
Holy crap,
Great
should have scaled out.
Story from J.R.R. Martin.
Yeah, Game of Thrones. Then what is it? Hedge Knight.
Yeah,
that's going to be the next one. But they still have the Dragon one that they're still working on the second season of, right?
Down 6%.
Yeah, it's getting crushed.
How is that possible? The show's going to be awesome.
Well, it's not only that. They didn't just announce that. They announced the new streaming program, HBO Max and Discovery Plus, combining in a streaming service called Max. Right? They've got 3 levels of value for this, 3 pricing options, MadX Lite, MadX Free. So there's different ways that you can stream this. It starts on March 23rd, the new streaming service. One of the things that I noticed in here, they don't have the Warner Brothers content within the streaming.
Are you looking for some Looney Tunes?
You mean moving up? I've never seen one of my cells.
They would just combine them all.
The stock. That's crazy.
But they're not. But the stock is selling off over, what, 5% today? It keeps on moving.
Be careful announcing my cells, I guess.
4% earlier, but
you guys
it's still up
me.
about 50% so far this year. It did hit 14-year lows in December under $9 a share, so remember that. So we've had a nice run since
it's a huge
lows.
spread.
Yeah, but kind of stopped short of the August high.
Yeah, they've got earnings coming up also. Wow. So this trader's, I think, taking that stance that, hey, during earnings, which happens a couple days before this expires, trader was in there buying the April 28th weekly 14.5 strike puts.
Dang, that
over 5,000 of those. Average debit of only 72 cents. So that break even of 13.78 to the downside. It's only a couple percent below the current share price in there. Put volume's about 3 times normal daily average volume that we've seen over the last week.
Maybe after hours.
But yeah, positioning for some more downside and going to capture that earnings event, which may be a catalyst to the downside.
Trader's a hater, man.
Red into the 9, Paris MACD, and then that big fleshy candle for myself.
To be excited about here. They got the best. They got the best shows.
They spend a lot of money on those shows. They spend a lot of the money, and everything is for earnings is about
everybody spends all the money on all the shows. At least HBOs are good.
Yeah.
Thanks, Tom. We got to run. Appreciate it for the trades.
Did you guys see that?
Some more stock moves that you might have missed here in today's session. Jenny Horns has got an update for us on the Cirrus Logic and Apple Supply.
That's like how GTI traded earlier. This buy order down here.
For the tech giant, host of Next Gen Investing, has got the developing story.
Yeah, we're seeing shares now break today below their 50-day average. With this name, I'm actually fairly impressed considering it is down 12%. Oliver, the fact that we're still up about 20% on the year, and now today pacing for its largest percentage decline in nearly 2 years.
I mean, we don't know if they're selling it. You know, they're finally took one for a while.
An Apple analyst saying that the iPhone 15 is unlikely to have solid, solid demand, and given some of the integrated circuits that this company does provide for Apple, they would be directly impacted. Now, Cirrus is an Apple supplier and generally is the provider of these integrated circuits for audio and voice signal processing applications. For Apple specifically, though, they do provide a controller chip for Apple's buttons. The analyst is with TF International Securities and is typically a prominent Apple leaker, but based on his latest survey, he predicted the iPhone 15 Pro and iPhone 15 Pro Max will abandon the closely watched solid-state button tool and then revert to its more traditional physical button design, which is actually really fascinating as an Apple user, which I know you are not, but that is fascinating because that button was typically one of the most faulty aspects of the iPhone. They always broke. So that would be absolutely fascinating if that does come true come this fall when Apple does unveil its iPhone 15. Now, the analyst said Apple decided to not make this change due to some unresolved technical issues ahead of the mass production of their new phones, but Apple does represent about 88% of Cirrus's overall sales, at least per the third quarter of 2022 in an SEC filing. So you can understand why this would then be driving shares down almost 12.5% into the close here. Cirrus did not yet respond for a comment, but Apple has a standing policy of not discussing these aspects with its suppliers with some of its unannounced products. So we won't probably get any more information on this.
Moving up here.
Fascinating given the relationship this has with
Green
Apple.
Candle, I don't know.
Of its revenue, it's basically Apple.
May 4th, get ready. Apple earnings, so definitely need to be on the calendar now. Pretty big drop off in this stock. Appreciate it, Jenny. Thanks for the walkthrough today. That might be causing some of the downside here in broad tech, frankly. One thing's working, though, in this session. It's energy. Crude oil is up 2%. Bob Iacchino's founder and chief strategist at Path Trading Partners, known to dabble in some WTI here from time to time. Bob, just the man I want to talk to. Should we be getting a little concerned here about how strong crude is on inflation days where stocks fade?
Yeah, you missed Jenny.
Also, you're worried about crude. You're obviously not long crude, but neither am I, for the record. But from that perspective, yes, because when you looked at the CPI breakdown, we saw shelter starting to ease a little bit, still the biggest contributor to the inflation growth that we did see, which was less than the prior month and less on a year-over-year basis. So that's all good news. But you looked at the biggest detractor from inflation, that was energy. Right, it was the weakest component, and that was the March figures, where the recent low in crude oil came. So now we've seen crude oil rally quite a bit, back up above $83 a barrel at this point. And you start to look at, for example, Gas Buddy or AAA, whichever one you want to look at, and you're seeing that we never really got that big dip.
I guess I should do more
not on a one-to-one basis, and that never really happens to the downside because of the actual technical problems you see when gas stations and larger gas companies buy their gas in bulk for a period of time. They're still working through some of the higher priced gas. So whenever we see some of those dips and then rallies right back in crude oil, the consumer never really gets that gas drop at the pump.
There's a big
and now we're seeing it start to rise again. We're seeing a little bit of a national average bump up. And crude oil is at a very critical technical place. It's a very critical supply and demand level. As we exit the winter, you're having some good weather there, kind of weather I experience all year long now. But you see that happening, and you see the summer driving season coming on. You're seeing traveling not really abate as of yet. There could be a short-term demand spike, and that's why I bring up the technical levels in crude, because we're getting up to that 200-day moving average, which matches right now, and this is one of those situations that I talk about where it's not as important as what happens as it is where it happens on a price action perspective. The 200 is starting to come in and match up with the top of the old channel that dates back to December.
BBBY,
so we get a breakout above both of those things and then a retest, and that retest holds.
Or 10%.
That's the rally you want to keep an eye on.
SSR.
And thanks for rubbing it in, Florida resident Bob Iacchino. All right, so point is, we kind of already know ahead of the next inflation print, at least where one component is going. It's going up. And with the warm weather coming around, gas and prices, if we follow the RBOB chart, is already kind of showing that breakout. So it seems like the energy trade here is starting to look pretty good. But you're not bullish crude. You don't got a trade on, Bob.
Well, I need to
if you want to get into that
the
stock,
two things for
there's
people
a lot
who
of
watched
slippage
the
on
show for a
SMX.
while. There's bullish and bearish Bob, and then there's Bob had a trade trigger, and I didn't have a trade trigger. So bringing up that breakout above the channel, the breakout above the 200, a pullback and a retest, that'd be a long signal for me. 30. And I don't have that yet. I know I'm being very vague on that, but I don't have it yet. I am long Bitcoin, but I'm not long crude oil. I am long gold. I don't have an equity market position at all. So that's kind of where we're at. I feel like I'm underinvested, but I've done this long enough not to put on a trade just because I want trades on.
Got it. All right, I'm still learning that part. Like the
I saw you at the
like
casino.
the action.
I understand.
All right. Appreciate it, Bob Icino. Hey, Bob, go and check out my Bitcoin article from this morning. Let's talk about it next time. You the man. Appreciate it, Mr. Icino, founder and strategist at Path Trading Partners. Thank you, Bob. All right, let's get our Schwab panel in here after a short break. 10 minutes to the bell. Stocks kind of struggling here.
Hey, Scale. Thanks, man. Thanks for the support. MX back to $1.07. Yeah, I got robbed on market maker there. I mean, it's my own fault, I guess, but crazy. Okay, there's my order right there at 1500. It's 165. And I think that just triggered a bunch of like stop limits or something. You've got all these sells at 165, a couple of buys. Oh yeah, on Sava. Remember trading Sava a little bit. Yeah, BBBY is not for the faint of heart. Jeez, a new all-time low. 28 cents, down almost 11%. Buy, kind of double bottoming here.
The ego on you.
Sniper Scale. Thanks, Ace. Appreciate it. You got Brian. Brian's been here a long time too. And Josh. Thanks, Papa Ace. I don't know how you could snipe Scale. See, these guys have it. That's what I'm saying. Remember we were saying last month? We'll know this month if I tried to scale. We'll know this month if it works. So it's automatically giving them out because these people have accepted gifts on this channel. So that's why it's giving them out so quick. Yeah, another one. Oh, dude, you did 5 Ace? Thank you, man. Oh my gosh. Buzzman. Aaron's been here a while. MT's been here a while. Of course, GDM has. I don't know, Corey. Thank you, Ace. Appreciate it. Everyone come thank Papa Ace, all you lurkers. That's what I'm saying, though. I think because they've accepted gifts on this channel now to automatically give it to them. He's got you a while back. Yeah. Unstoppable. Every day.
The ego on you.
Thank you, sir. On a 11% down day on BBBY. Ace's endurance is unwavering. Unwavering.
The ego on you.
Really? That's right.
The ego on you.
Here he was driving through the country of Texas. The countryside of Texas.
The ego on you.
Dude, did you get more? What's going on? It's still just blowing them all up? Holy crap. More than Ace of Donut. I don't know. That's pushing it. 27.59. Buy more. I haven't sold. I mean, I've sold bought. What I bought yesterday and today I haven't sold though. I did sell SMX though. But I did create that little buying pressure spree to start because my order was way down here. The huge spread, and then just triggered a bunch of, I think, buy orders. So now we're getting. You can thank me for that dip and that rip. That dip to VWAP. I might get back in it though after hours or tomorrow or see where it goes. It's got a little RSI divergence here. This thing is super liquid though. It's kind of crazy. I've never seen a stock react that way when I've sold it. I mean a small amount of shares especially. New low there on SPY. Got 5 minutes to close. BBY literally hasn't had no bounce. So maybe this is bullish.
So given
because
where
it's
we're at right now,
doing something
with
different. It's never done this.
5% or so. I think that doesn't scream that it's a attractive option, but it also doesn't scream that it's not an attractive option. So if you're very concerned about inflation running hot for an elevated period of time, then I still think tips can be a appropriate option there.
Okay, like that. Now, there's a community of investors, traders that want to oftentimes take our inflation conversation and they want to tie it in to policy about the debt ceiling and America's debt problems, Mike. And we indeed have a ceiling coming up, but does it matter when we just blow through that ceiling every time?
Well, I think it matters, and I think the markets are getting a little antsy about this one. We've got really no progress that has happened. The president met with Speaker McCarthy back on February 1st. They have not had a face-to-face meeting since, and we have this sort of, the two positions of the two parties are really hard line. The Democrats saying, we're not going to raise the debt ceiling unless it's a clean debt ceiling increase that has no strings attached. Republicans saying we won't vote for a debt ceiling increase unless it has spending cuts to it. And the two parties are just in completely different spots. So I think the thing to watch for coming up here is later this month, after tax season, Janet Yellen, the Treasury Secretary, has said she should be able to have a better idea of putting that so-called default deadline, a more specific date on that. And I think that's what the markets are watching for, and then watching to see, does Congress sort of really kickstart the conversation at that point? Then does it get more serious at that point? Because no one wants to go down the path of getting right to the edge and potentially triggering a lot of market volatility like we saw in 2011, which is the last time we had a real debt ceiling fight.
And how much is that conversation wrapped up into the assessment of the financial system and the regional bank fallout? Are there ties the policymakers are going to try and bring together
2
here?
minutes?
Or
oh my
is
goodness.
the spending maybe that's going to
BBBY is
happen
going to make an engulfing candle to the downside today.
Something separate? Is there going to be more spending?
With
Where are we
new
at
all-time lows.
Yeah, I think they're kind of separate, but there's no question that Congress is very focused on this bank situation and really looking at, I'm watching three different sort of avenues here. Number one, it's clear that the regulators are going to move forward to
I might sell after hours.
Regulations.
Nice, Rick. Well done, man.
Those mid-sized banks.
Might sell after hours on this.
250 billion in assets. Right in the sweet spot where Silicon Valley Bank and Signature Bank were. Clearly, we're going to have to look at tightening capital standards and liquidity standards, and that's number one. Number two, really interesting conversation going on Capitol Hill around deposit insurance.
Some news
and whether we should raise that $250,000 per depositor limit. There's some serious conversation about doing that. There's also conversation about maybe having a different regime for individuals as opposed to businesses. So that's number two. And number three, not surprising, Congress really eager to move quickly to punish bank executives who either through incompetence or malpractice create a situation
looks like it wants to bounce from here, but hasn't done it yet.
Bank. So I think when Congress comes back next
Only
week, this is going to be a
like
front
30
burner
seconds
issue
to go. We're streaming to close.
Okay, and the crypto stuff is kind of the wild card. What might we be hearing from Gary Gensler? Is he going to crack the whip?
Well, Gary
yeah,
Gensler
volume has been crazy on BBY. GME flushed back into that trading range.
It's going to be a rough day for him, I think. Republicans are
can't
really
believe Beth
ready
Bethlehem didn't get a bounce here.
to take him to
I'm
task.
almost more hyped on that than
cryptos,
not.
They're very concerned that he's stifling
When's the last time we
there.
closed at the low of the day?
Like the big climate risk disclosure proposal, equity market structure reforms. I think a lot of Republicans and some
even here,
Democrats
like
feel
closed
he's
low,
bitten
but it
off
wasn't the
more
low of the
than
day.
he can chew, and that he's potentially sort of
is
finding solutions
that
are in search of
wakey
problems.
wakey.
So it's going to be interesting to see how he goes.
BBY has not announced their earnings.
Up on Capitol Hill.
Any earnings that you have?
Fun chat, guys. Love to mix in a little policy here to freshen it up. But of course, my heart is with bonds as always.
They have not
thanks,
announced.
guys.
So when they announce, that'll be the date. Until then, it's fake.
Townsend, setting up the calendar
not going to do a recap video today. Too late. I'll give you guys a little recap though. GFAI, absolute crazy moon mission. You saw 100% up at one point. The chart looks good all the way till I don't know, I didn't trade it. Could be an RSI divergence building there, but that's to be expected with that kind of activity. We did trade SMX today. It's fighting illegal naked shorts on its stock. I did close it. Might get back in at some point. I'd like to see a little pullback on it. Whoa. GME flushed into close there. So this thing ripped out at open, which is kind of interesting, up through that resistance again. So very bullish. I sold my calls in the first like 30 minutes. Bought more. Oh, and now it's back up. Look at that. Beautiful market mechanics. Bought more like here kind of after this bounce on that support test, and I'm still holding those, so down on those a little bit. Yeah, 18%. Averaged into my MU puts, which I was down on, and now I'm almost back to break even. This thing's triple topped. Now just maybe have another little double top here. Let's see, what else do we do? I sold my EVTL. It looks good. It kind of looks like it's maybe double topping here. This level hasn't really broken it. Thinking it might kind of pull back for a bit. So gonna give this one a rest. And on the futures, I did go long on nat gas. I'm pretty down on those contracts, unfortunately. I do still like it though. Has an RSI divergence here. Got a bullish MACD, green over the 9. Basically got everything I want to see. Today was just kind of a pullback correction from this 2-day rally that just had. But that correction bounced on the support level, which is basically setting up an inverted head and shoulders here. Shoulder, shoulder, head. So good to see that. Well, freaking BBBY, yeah, I mean, new all-time lows today. So not good, not what you want to see. Whether this is a spring test and kind of a dip before the rip, I'm not sure yet. It could be, given that yesterday we had a very bullish day with all that volume and that engulfing candle. Today is engulfing back to the bearish side. Volume's a lot less, so that's good for the bulls. But it did break the low. Did things I didn't want to do. So I'll probably sell out on a bounce. Price action wise, it does still look like it's kind of flattening out over these last 3 days. So I don't want to read too much into engulfing candle to the downside, or even the upside necessarily, but more just looking that it's coming down, and now it's basically the median in the middle is kind of right here flattening down, flattening out. So gonna be patient, but I tempted to get out of it, get back out. GNS had a big move up today. Didn't trade that one. I think it still has a gap to fill down here that probably wait on. It did give up a lot of its gains today, actually. Let's see what else we do. Thanks so much, Ace, for your gifted memberships. You guys can thank Papa Ace. Probably gifted you a membership today, if you were even existing. Thank you guys for your likes. If you haven't subscribed, do it. Hit the notification bell. Thanks, Jonathan. Thanks, Big Hugs. Thanks, Trinity. Thanks, Jonathan. Thanks, Kitty Daddy. Thanks, Trader Name. Thanks again, Ace. Rick Morty, glad you can make money, man. Scale in and out. Paper trade. If you're losing money, just stop before you lose more in paper trade. Yeah, I don't know. I'm probably forgetting some stuff. Thanks, Tao Life. See you guys on Discord. That's pinned in the chat. That's our Discord server, and our Twitter is at HappyMoneyYT. See what happens after hours. I may or may not sell BBY. Might wait till tomorrow. Your market, it's up 1.2%, but yeah, that was crazy. 200 lost, back 300 to go. There you go. Thanks, guys. We'll see you on Discord. Okay, peace out.